Mandela FX, ICT initiated, 2024 free mentorship, smart money concept, trading Bible. Season greetings to you all. How are we doing? Okay, this is Mandela FX, ICT initiated, 2024 free mentorship. Today we are going to discuss about smart money concepts, trading Bible. So, like I told you people, that I'm bringing a power. There's a power I'm bringing to you people, right? So today, like I said, this is the last lecture for this free mentorship, right? I said I'm not going to do more than 10 videos. The 10 videos will be enough for me to deliver the informations that I want to deliver. The information that I'm passing to you, they are in these 10 videos on this YouTube channel. So today you can see what I have right here. These are not free contents, right? So what do we have today? The core content, the things that we're going to discuss under smart money concepts. This is a trading Bible, like I said. And there are so many things you will get to know by the end of this lecture, and all the questions you people have been asking me all this while, all of them are cleared today. Being you a being you a new trader in the game, you are just coming in for the very first time, and being you somebody that has been trading for a while but you're not profitable, and you are here part of this mentorship listening to this, the things that I'm going to discuss in this video today are things you have never heard, are things you have never seen, except ICT traders. We understand what I put up here. And who is ICT? Anytime I talk about ICT, who is ICT? The full meaning of ICT is inner cycle trader. His full name is Michael Huddleston. He is the author of this smart money, right? He's the author of smart money concepts. He is the one who created this concept for us. He cracked the chart. He shared the code. So these are the things I'm here to share with you today in this video. And my thought process, my thought experience, so many things in addition that I'm going to discuss in this video today. And you can see what I have here. I have 10 things. So what I have? Number one, who is smart money? Who is smart money? We get to know it today in this video. What is trading? We have discussed about forex in our previous lecture. Then we did not add trading to it. It was about forex, and I told you what it's about. You see how the lecture is. Then today we're going to learn about trading, types of trading. Then we'll go down to the time theory, that is the trading session and the key zone. We work with time. There is a specific time in the market where we work. We don't trade. It is trading, right? So we don't trade blindly. We work. There's a specific time we trade in the market. So these are the things you're gonna know in this video. Then market structure. We're gonna know it. The another market structure will have consolidation, expansion, retracement, reversal, break of structure. These things, the way I'm gonna break them down in this video, it removes everything that you have been struggling with. Then number 4, we go to risk reward ratio, RRR. So we're going to talk about it. It sounds strange to some of you that are just coming in, but somebody that has been trading, listening to this, know what this means. And we are going to learn more about it today. Be you trading or coming in for the first time, you will learn so much. Like there are some things, very sweet thing you will learn about this today. Then number 5, management. Under the management, we have trade management, risk management, money management. We're going to learn about these things, right? Then number 6, premium versus discounts. So we'll learn what it is, we'll learn about it. Then number 7, premium and discount arrays, PDA. We'll learn about it. Under it, we have smart money footprints, stroke signatures. Then we'll have liquidity concepts. So these things, you get to know them today. So some of you, some of you have been waiting. Anytime when I trade, when I'm talking, this question always, Monday, what do you mean by PDRA? You talk about PDRA every time, every time. It is here today. You will know what it is today in this video. Then number 8, making your ends meet. We talked about your food, right? That is the very first thing we're starting from. So what is our you get to know other things that you should be doing apart from food. Your ends, those are the important things. So you get to know these ends today, and you will see how you get them meet in this video with everything you need to get your ends meet here in this video, down to the practical and everything. Then number 9, the rules. What you should be focusing on only. That's number 9. Then 10, it is a top-down analysis. In this top-down analysis, this number 10 here, which is top-down analysis, this is where this one I'm going to give you all the ingredients that result to Mandela effects. Whatever trade I've taken that inspired you, that want you to do this, whatever you think you have seen me doing in the market that you want to learn how to do it. In this top-down analysis, I'm going to expose everything to you today. So in this number 10, so this is what I have right here to discuss with you in this video. So let's go into the next slide to start the business of the day. Okay, we're here to start our business of the day. The core content number 1, which is smart money. Who is smart money? That is where we're starting from. Then before we proceed, let me make this a disclaimer to you all. It's going to be a long video. This one is going to be a very long video, right? The last time you people were complaining that it's too long, but it's well loaded, it's interesting, right? Okay, this one is going to be longer. What I put up here today, you can see, like, it is a Bible, right? It is a Bible. And when I say Bible, you know how bulky it is when I say Bible. I don't want to um waste too much time with you people with too many lectures. So I put up everything here in this video, everything, all the thing down to the entry is here in this video. So this is like a trading book. Like, this is me writing a trading book to sell. and I'm giving it out for you for free. So for the fact that this thing I put up here for free doesn't mean that it is free. Only people that has been trading will know the power of what I put up here in this video. The previous slide, the content of the previous slide, you are going to, when I go deep into each of them, you will know what I put up here today. And if you have been, if you have not been following up from the beginning, right from the beginning of this channel, you will not really understand so many things that I'm going to be discussing in this video. Right from the first video I uploaded on this channel, which is Life After School, so many things that I'm going to discuss in this video today start from that video to this one, because it is the 9 videos that are on this YouTube already give birth to this particular one. So if you have not watched all these videos, you will have issue with so many things that I'm going to discuss in this video, because I'm going to be referring to those things that I put out there for you people already. I'm going to be referring to some of them in this video, right? So before I proceed, I gave an assignment last week during the last lecture, and I want to advise all of you a quick advice. The code for you to do this. This is one of the best lecture in the world. In this lecture, I teach you, I show you what I'm teaching you, I take it down to the practical of it, then I do it, show you how to do it, then you follow me. Now, it took me time to work on this, right? I've been working. Today is 28th December 2024. All the Christmas you are doing, I'm not doing, like, I'm here working. Try to put this thing in place for you people to make sure I make it simple as possible for you, for nothing to be complicated for you, right? Then as I put it up for you that way, just take it as simple as it is. Now, something happened last time when I gave an assignment. So many people, those people that did it, you saw what Miracle did. If you're on the group now, Miracle is what Miracle did. Who is Miracle? Let me talk about Miracle briefly before we start our business, because there's something he did that so many of you are not doing, and you want to do this. If you want to do this, you must do what he did. And I was surprised. What he did, I was surprised that he could get me to that level. So on the 6th of December, I pinned a message there on that group. On the 6th of December, when you read the message from the 6th of December down to a level, you will see a comment that says, when I posted a trade and I said I understand that so many of you did not understand what I'm doing, but don't worry, my next lecture will give you in-depth understanding of what I'm doing. Somebody say, e.g. me. I said, okay. Then Miracle came up and said, like me, everything is like magic. I did not understand anything, but I will watch those videos over and over and over and again. That is what Miracle said. That comment touched me. Then check my response to that comment. I said, keep it up, keep the fire burning. Then I encourage him that you have already cracked it. What you just said, that you will watch those videos over and over and over and again. And he did. So when I give an assignment, if you look what Miracle did, he was the last person I added to that group. Then he did exactly what I put. If you watch the previous video to the end, you will understand what I'm saying, what I asked people to do. And some of you did not follow what I asked you, and you look at the result. Miracle was his trade. He was like excellent. He closed his trade with massive profits because he did exactly what I asked him to do. Some of you are trying to do it you are trying to do it your own way where you don't understand anything yet. Let me If you go to the group now, you will see how we interact with the group. Then I love it for the fact that some other people they quickly pick that challenge, like they pick it. Oh wow, miracle! If miracle could do this, then they started picking up their result. Godwin, Francis, and Wisdom, they have all of them. They are doing well now. I love what they are doing now, and that is how all of you should do it. The moment you see that somebody, your fellow student, is moving and you are not moving, it means there's something you are not doing that he or she is doing, and you need to do it, right? So, what am I trying to say? I understand that some of you don't really enjoy group interaction, some of you don't like to engage on the group, and I understand that some of you too, the reason why it's becoming difficult for you to interact with the group is because you cannot really trade, you cannot do anything yet. So for you to perform is so now you can see how the group is becoming interesting now, because some of you now can trade, you can act in the market. From the video you have watched, from those 9 videos I've given you, you can trade right now. But you don't know the right time to buy and the right time to sell. You don't know that yet. This is what this video is going to tell you today. That is what makes you echo with me. The only difference between those of you that have done everything that I have taught in the 9 videos, both those my live execution when I was trading, and what Miracle did is he watched those my live execution properly, like, and don't worry, you people will love you people will know why. You people will understand what I was doing in that video today. In this video, you will understand what I was doing in those videos, and you will know the power of what I did right there. So, what am I trying to say to call it short? It is just like you want to play, you like how Ronaldo play football, and you want to play like Ronaldo. Then Ronaldo come on board. Ronaldo need to play in front of you, and then you sit on the sideline. You sit on the sideline and watch Ronaldo playing in the pitch, right? Let me tell you people something that you don't understand. I told you people that I'm a practical person. I don't I don't I don't I don't want people to believe in what I say. I want people to see my result, right? Then when I started up, you come to I told people that okay, you see that I can do this. Then you come to me to learn it. How do you believe that I can do this? I need to show you how to trade. Then traded. I was trading in class that day when I was teaching people in live class. I made money in front of people that day. I was trading there. Then I traded up here again. For those of you that are not here with me in Makodi, I traded to record myself and post for people to see what trading is. After you have installed the app and all of that. From there, somebody watched those just videos and started trading. He was just copying me, copying me. I was like, wow. It was that person is not even on the group. I was like, wow. So that is just the beauty of it. If you want to play like Ronaldo, you have to watch Ronaldo playing. Then you try to play what Ronaldo is playing. You try to copy Ronaldo because you want to play like Ronaldo. And if Ronaldo is telling you that, okay, this is what you should do for you to be able to play like me, then you have nothing to argue with. He is the one that want to make you a photocopy of himself. And he's telling you what to do. And you're not following it. You always make it difficult for yourself. So those of you that don't really enjoy group uh, message, no problem. I understand all of you. If you are here and you are watching this video and you may like to ask questions and you are not on the group, that email Mandela FX, anything you put up to anything you send to that email will be attended to. Then those of you that are on a group that you want to you love to be attended, like you want to interact with me privately, not on group, and you are listening to this video, You can put your interest to that email as well, that you want a private attention. Because I understand some of you. When I started my journey too, it was all like that. Some people like private discussion, right? So I understand. Then put your interest there, and at the end of the video, I will drop my number for those of you that want to talk to me. You want to ask some questions from what I'm teaching, and I will drop it by the end of the video. So let's get into our business. I've already advised you people what to do, how to make this easy for yourself, just like what Miracle did. Miracle now, he's familiar with all these things in the 9 videos. He's familiar with them, and it's not only Miracle. Those of you that are doing the same thing right now, all of you are familiar with everything in the 9 videos. And another sweet advice is, please, anything you are doing, don't rush it. Ask from today. Ask from today. After this video, you are going to act like a senior trader. Don't behave like. So there are some things people are doing right now, and I'm going to address all of them in this video. I will address all of them in this video. So pay attention to everything that I'm going to discuss in this video. Even though when I'm teaching and I give you a story, there's a reason for that story, and you should be happy for it. It is for you to get something from it, and everything I put up in the lecture, there's a reason for it. If I feel you don't need to hear it, I won't say, right? So how do you make these things easy for yourself? This is my thought experience I want to share with you before I start. If you're watching this and you don't have a notebook, get your notebook. Like I said always, these are monetary information I'm giving you. You have to extract this information into your notebook. This is a textbook. You are going to refer to these things. You have to digest this information. The only way you digest them, it is when you take it like you extract this information. These are books you read and monetize. These are not the books you read in school to pass exam. Passing exam here, it is your success. You are not writing exam for anybody. Whenever I give assignment or I tell you to do anything, it is for your success. Your success is your exam here. Your success is your exam here. So let's get started. If you're there, as I'm talking, how I did it for myself back then is I told people that it took my mentor a longer time than it took me. And how I did it for myself to make it easier for myself to take me lesser time is, first of all, I watch this video. Oh, this is not something that you watch like, this is not something that you must watch at once. When you take it like you study at your leisure, anytime when you are settled, get that your book, extract this information into your notebook. When you are tired, you pause it. It's when you come back, you start from where you stop. After you might have extracted all the informations into your notebook, then you watch the video again. As you are watching the video, you are listening, you are looking at your notes. After that point, then you take down your notebook, put your notebook by your side, then open your phone and go to trading view. As you are reading your notebook, looking at your notebook, you are looking at the charts. You are looking at what the book is saying. You are looking at what the chart is doing. You are copying things. You are digesting this information. The moment you are doing these things, this information become part of you. Then you will see how I was trading that day when you people were like, everything is like magic. You will be acting like that. You'll be trading like that. Because the moment these are information, I have information on my head that I'm working with anytime I'm trading. There are so many informations. All my experience, I pour it on every single trade. And this is someone 30 years of experience that I'm sharing with you. ICT, this trading has been in existence before I was born. ICT, he has been trading for 30 years. It took him 6 years to create these things, and he has been able to share with people in less than 6 years. I have learned these things in less than 2 years. Then how are you going to do it? with what I put up here for you, like I said, that I am bringing the power for my student. Why I make this for free? If you have not been following up from the beginning, what Mandela Effect stand for. That first video, when you watch that first video, you know what this YouTube channel stand for. That is why I'm doing this for free. It is for my fellow students. So if you're outside enjoying it right now, know that it is because of my students. If you have ever contacted me before for a private mentorship and I discuss with you, this is exactly what I'm going to give you. If I am paid right now to do this mentorship, this is exactly the information I will give to that person. So what I'm putting up here, it is not free. I decided to do it for free. I decided to give it out for free. And people are here listening to me that have discussed with me before to teach them this. That is a paid a paid mentorship. People have discussed that with me, and they are here getting it for free right now. So if you are one of these people and you are listening to this, don't think I am giving you a free content. That is exactly what I will give you if I take your money. So take this serious. Take down your notebook, extract this information into your notebook. These are monetary informations. Digest them. And the way I'm going to take it step by step with you, everything we go deep and just the way I made those other video for you people, and you people are able to do all of these things, and this is how you are going to be able to do everything by the end of this video. Then next year, you will see how you and I will be trading in the forex market. You and I. So let's start the business of the day. Our core content number one right here. Who is smart money? Who is smart money? Smart money is the market maker. Every price movement in the forex through financial market is engineered by smart money. Now, what am I trying to say here? You know, so many of you, so many people that are trading right now, what I'm going to share with you in this video today, so many people don't know about the existence of what I'm going to discuss with you today in this video. So smart money, anytime I'm trading and you people see me, I keep talking about smart money. Smart money is, they are the market maker. That market you are trading, those candlesticks you are seeing, people make them. It is not, so many people believe price move based on um selling and buying pressure. No, it is moved by smart money. Whatever that is happening in the markets, it is it is engineered by smart money. Anything that is happening to any assets in the financial markets, being gold, whatever you are trading, right? So in this smart money, who are the smart money when I say smart money? And who are the market maker? When I say market maker, they are the market maker. These are the big boys. Anytime I'm talking when I'm trading and I'm saying big boys, these are the people I'm referring to. Who are the big boys? They are the banks. When I say banks, I'm not referring to West Fargo. I'm not referring to Bank of America. No, I'm referring to the central banks. Any currency you are trading, the central bank of that currency must come in alignment with the central bank of the other currency you are trading for you to be able to trade that pair. It is not buying and selling pressure. It is not candlesticks forming. Take for instance, when you're trading Euro USD, the European Central Bank and Reserve Bank of America must come in alignment to make that pair available for you to trade in the marketplace. So these are the smart money I'm talking about. They are the market mover. They are the market maker. So this is one of the best concepts in the trading industry you can find. So you will see how you are by the end of this video. You see how you're going to trade, how you engage price like smart money, just the way smart money trade. That's why anytime I get into a price, you see those my trade. Just go and watch them. You will understand what I was doing. So this is what I mean. Anytime I talk about smart money and I talk about big boys, when I say big boys, these are the people I'm referring to. So how do they operate in the markets? How do they operate? How do you know that smart money is in place? How do you know? How do they operate? They operate through algorithm called interbank price delivery algorithm. That is IBDA. Every price movement in the forex market is delivered by IBDA. So this IBDA. This is the bank interbank price delivery algorithm they use to deliver price. There's an algorithm. So many people don't believe that there's an algorithm in the markets. They believe it is buying and selling pressure. That's why you see when market comes against them, they don't know. When Wisdom was asking on the group the other day that when market is coming against you, that should you leave them or you close them? I told him, why will you close it? Don't close it. And after that statement, it didn't take up to 2 minutes. The trade started running to his TP, to his direction where he wanted it to go. And he was laughing, he was smiling, he was happy at the end of the day. He didn't know. And I told him, don't worry, in this video, you will get to know everything. You will get to know all those things you were doing. You did not understand what you were doing. You were just trading, but you get to know what you were doing in that video. And those of you that are listening to this for the very first time, if you have not been following from the beginning, you will really enjoy this lecture, right? So these people, they operate by algorithm called IBDA. This is what they use to deliver price from one place to another. Anytime you see any currency or any pair that is moving up and down, that's why I told Wisdom, I responded to him on the group that day. I told him that the moment you understand what price is doing, you will not be scared when it is doing something. You are scared because you don't understand what it's doing. So today you'll be able to read the tape, what the algorithm is doing. Today you'll be able to read it in this lecture. The moment you are able to read it, then you will understand what it's doing. Then whenever you engage, you will not be scared because you know what it's doing. You can see those my trade. Go and watch them back. You see, there was a point when he ran almost to my stop loss. He did not hit it. He ran back to my TP. I took money. You can saw all of that. You saw all of that. So in this video, you too, you will know how to read the price action so that when it is moving, when I place my stop loss, that place that I place my stop loss, it is not a regular place. It is not a zone. It is not just a place. It is a specific place. And price must not touch it when I put it. And when it touch it, I don't bother. I have a plan for it. I have a second strategy for it. And I'm going to share that strategy with you in the video. You will see how all of that works. So this is how they operate. They operate by this uh, algorithm. So when you're able to read the algorithm, what the algorithm is doing, how it's delivering price, when you're able to read the price action, you're able to read the tape. It is just like how you read books. When I'm looking at price, sometimes when people see me with phone in school and I'm looking at the charts, it is maybe if I'm on a trade and I want to stay tuned with the chart. I want to know what the chart is doing. I want to know how it's moving. I want to see, you know. So that's why you see me. I'm reading the tape. And now you will see how I read the tape today. You'll be able to read it just like the way I read it. Just like the way smart money read it. Right? So you take note of this. Take note of these following things. Price does not move based on buying and selling pressure. Never. It doesn't move based on buying and selling pressure. It moves based on what. Don't worry, I'm gonna tell you. Is there number three. Then number two is price does not move based on support and resistance. It doesn't move based on support and resistance theory. It doesn't. Based on it does not move based on that theory. Price move based on what IBDA is engineered to do by smart money. That is what price move. Price move. Anywhere you see that price goes to, That is what it is programmed to do. That is what the IBDA is meant to do at that point. If you fall into your support zone or you fall into your resistance zone when it happens, that is your luck. But this is the real reason why you see if your support stand or your resistance stand, it is because the algorithm at that point makes it stand. There is a specific thing why it stand. There's a specific reason why it stand at that point. So it is because of what smart money has been programmed to do. Like what smart money has engineered the IBDA to do for that day. So that is what price move based on. That's what price move based on. So we are going to move deep into the lecture where we'll discuss the other things we have in the previous slide. We have 10 things right there. So this is the first thing that we just discuss. So we are going to the number 2 where we'll learn about what is trading. So in that number 2, you people will know what is trading. So many of you were gambling last week. I saw some trade when you started submitting your assignment. Some of you were gambling. You are not trading, and I'm going to show you what is trading as we're going into the next slide. There's difference between trading and gambling. Some of you are gambling, but I can see now that you are picking your correction, which I'm so much happy. I love what so many of you are doing right now. So keep it up like that. Don't struggle with it. I've made this thing simple for you. So just take it just as it is. Don't struggle with it. You are a baby to it. You don't know anything yet. So just do it the way I'm giving it to you. Do it. Don't try to do it your own way. Do it. You just like a baby. You don't understand anything yet. Okay, let me just follow it. Jerry is giving it to me. That is how Miracle followed it up. He just take it the way I'm giving it. He copied me. I look at Wisdom too when he Wisdom copied my chart that day too. So all of you, and I'm going to expose more of my chart to you. All my chart, I will expose my chart to you today in this video. You will see my naked chart. Like what I mean my naked chart is these are the things I don't show people. These are the things I do not share with people. My chart, like my naked chart, the things I have on my chart before I come up to trade live. I don't show people, and I'm going to show you today on this video. So let's go into the next slide when we talk about trading. Okay, number 2, core content number 2. What is trading? Trading is the act of buying and selling of financial assets with the goal of making profits. Just as simple as that. This is trading. Just like the way you are taught in school, what you know trading is the buying and selling of financial assets with the goal of making profits. When you buy with the purpose of making profits. When you sell with the purpose of making profits. That is what trading is right here. In Forex here, if you buy, somebody was saying the other day that Monday, I don't understand. Like, when you buy, what do you mean by you buy is we sell it and you are still making money, both buying and selling? When you buy something, you don't need to make money from it. That you are supposed to. Why are you making money when you buy? When you sell, you only here you can see some of you sold last week, some of you bought, and you can see how you were in profit based on what the market did, right? And from the last lecture, from the previous lecture, what I told you people that when you buy, you're supposed to go up, when you sell, it's supposed to come down. So that is what trading is. You engage for the purpose of making profits. They will have different types of trading, right? So in this style, this is what I told you that I know I told you that I'm going to share different style of trading with you people so that you will pick the one you want, the one that suits your lifestyle. Because like me, I have my lifestyle. The things I'm sharing with you right here, they are not things that you would do You must not copy everything I do. You mustn't copy my lifestyle. You only have to copy my trading style. Then when you copy my trading style, then you master them, you refine them for yourself, right? Just like the way I did it for myself. So I'm going to share different types of 5 trading with you. Then you pick any one you want. You can do all of them with the lecture I'm going to give you here. You'll be able to trade all these. You can be any type of like me here now. I can trade all these 5, and I'm going to tell you the one I focus on in this video. I'm going to tell you, and I've I've done that with you already. You see the one I focus on as a student. The way I want to do it as a student. So now we have position trading, we have swing trading, we have short-term trading, we have day trading, we have scalping. Number 1, position trading. Number 2, swing trading. Number 3, short-term trading. Number 4, day trading. Number 5, scalping. So in all of these, I have not done position trading in front of you people. Even the one I did in class that day wasn't a position trading. Then I have not done swing in front of you people. I have not done short-term in front of you people. I only did day trading and scalping. These are the only things I've done in front of you people. The one I did in class that day when I was teaching in school, that one was a day trade. You know, I was there throughout the day when throughout the class. We started our class by 10. I was there throughout on that trade till I go home, yeah, before I collapsed the trade. So it was a day trade. Then scalping, we are going to see all of them, the explanation. I've done scalping, the one I posted right there. Those are scalping model. It doesn't take time for me to make that money. I just did that shit within some hours. Within 2 hours, right? I think, yeah. If you watch those videos, you will see what I did there. So these are different types of trading. And you pick any style you want. I'm going to explain all of them in the next slide. So let's go to the next slide where we'll go deep into the explanation. Okay, we're here. Position trading. This is core content number 2, 1 of 5. So in that number 2, we have 5 things right. That is 5 different types of trading, and this is 1 of 5, which is position trading. This is a long-term trade that goes for a duration of several months, starting from the time of entry, execution to the point of exit, take profit. This type of trade can last for 1 to 2 months and above. It involves higher risks and higher profits. When such trade pan out, they come with over thousands pips of profit. It also requires higher numbers of pips as stop loss to use on such trade, vice versa. The required number of pips to apply as stop loss for such trade will be taught later in this lecture when we go deep into the forex charts. This type of trading setups are framed on monthly time frame based on long-term perspective. So what are we saying here? What are we trying to say in these types of trading? This type of trading, this is a long-term trade. When you take it from the time of your entry, you are maybe you are somebody that you are patient, and you are waiting for some big move. This kind of trade, it takes time, like 1 to 2 months and above, for you to take your profit. You can see those trades that I took that day in class. I collapsed that trade that very day. I took my money. The other one I did, those 2 I posted right there. The one I named how I made your 30 days income part 1, part 2, and the second one is smart money mindset. You should all have part 1, part 2. Those trades that I posted there on this channel, if you watch them, you can see that I did not waste time on those trades. I took my money that very day out. So in this type of trading here, this position trading, you have to wait for some months for that trade to run. And when this kind of trade pans out, they come with thousands of pips in profits. You can see those trades I took that day, they were just like 30 pips, 20 pips. The one you people were trading last week too. After watching the lecture that I gave, Introduction to Forex, after watching that lecture, you know, you were able to trade, right? You were able to trade, place your step loss with the help of that lecture. So the things you have done already with the help of those 9 videos you have watched, this 10 video is to complement those things. Then you are set for your journey. So now here, those trades that I took that day, they were just like 20 pips, 30 pips, and the one you people were taking to you people could see they were just like 20 pips, 20 pips, 20 pips. None of you uh, hold up to 30 pips or 40 pips last week from all the trade you people did. So this one right here, you wait for some months, you leave it to run, then it run thousands of pips. So like that trade that I took that day, that those trade I took that day, if they were to be a position trading style of trading for 1,000 pips with that lot size that I use a mini lot size, that is going to be like $1,000 profit for 1,000 pips with a mini lot size. So it means once my take profit hit, I'm going to make $1,000. So if this kind of trade pans out, that is what it is, and you have to wait for it for several months to run based on the analysis you do. You this kind of trade, you you do the analysis based on that monthly chart. You know, I talked about time frame in the previous video, Introduction to Forex. I talked about time frame then, and I told you what time frame means. I showed you different types of time frame, monthly, weekly, and you will see how I'm going to do my analysis using this time frame today, or the time frame that I gave you in the previous lecture, or the time frame that I gave you there. You will see how I am going to do my analysis right from the higher time frame, that monthly chart, down to the 5 minutes chart where I make my execution. You're going to see it. So in this trade, when we go deep into the lecture, you will see the number of stop loss you're supposed to use for this kind of trade, the number of take profits, everything. I'm going to show you how you frame this kind of setup, this kind of trade position trading setup, how you frame it, how you can do the analysis in the market. I'm going to show you all of that, and I will share with you today all the things you need to do if you want to take this kind of trade. I will give you all the ingredients in this video, just like I said. Then my analysis that I'm going to do will take you down from this monthly chart. We'll take it from there down to the lowest time frame where you make your execution. So we go into the next slide. We talk about the number two. The number two, we'll talk about it. Okay, this is number two of five, which is swing trading. Swing trading. What is swing trading? This is intermediate term trade that goes for a duration of several weeks, starting from the time of entry, execution to the point of exit, take profit. This type of trade can last for 1 to 2 weeks and above. It involves higher risks and higher profit too. When such trade pan out, they come with over 300 pips of profit. It also requires higher number of pips as stop loss to use on such trade, vice versa. The required number of pips to apply as stop loss for such trade will be taught later in this lecture when we go into the forex charts. This type of trading setups are framed on monthly and weekly time frame based on intermediate term perspective. So just like what I just explained in the previous slide, it is just this is the next one to it. The only difference of this one, it does not stay for several months, but you can hold the trade for like 1 to 2 weeks and above. This is the type of trade. This is just the difference between this one and the previous slide that we just discussed. And the number of stop loss to use will be discussed later when we go into the forex charts. And this one too, the number of pips as profit you make, they are like when this kind of trade pans out, you see like 300 pips and above. Depends on the volatility in the market at that point. So this kind of trading setup, you frame them on that monthly chart and weekly chart. This way you do the analysis. You are looking at that chart based on that level. I told you people in the previous lecture that those time frame that they are powerful based on how big they are. You can see how many numbers of days we have in a month. We have 30 days in a month. Then you can see how many numbers of days we have in a week. So that is how these things are powerful. The monthly chart is so powerful, followed by weekly chart, followed by daily chart, just like the way they are. Anything you see on that monthly chart, weekly and daily, they are powerful. They are so powerful. So if you are doing a setup for this kind of trade, you do your analysis on that monthly chart and weekly chart. Right. So let's go into the next slide where we discuss the next number. Okay, we're here. This is core content number 2, 3 of 5. Short-term trading. This is a short-term trade that goes for a duration of several days, starting from the time of entry stroke execution to the point of exit, take profit. This type of trade can last for 2 to 3 days and above. It also involves higher risks and higher profits. When such trade pan out, they come with over 100 pips of profits. It also requires high number of pips as stop loss to use on such trade, vice versa. The required number of pips to apply as stop loss for such trade will be taught later in this lecture when we go into the forex charts. This type of trading setups are framed on monthly, weekly, and daily time frame based on short-term perspective. Right? So just like what I just explained in the previous slide, that is how this one too is. The only difference of this one is this one, it lasts for 2 to 3 days and above. When you take this kind of trade, you have to wait for some days for it to run. Then when it run, when they pan out, you will see that they will give you like over 100 pips. You see those trade that you took the day that next year we'll start trading. When we start trading next year, because this year is over, I'm not trading again. Like I told you people, I've stopped trading for the year. So those of you that are just practicing now, that's why I allow you people to trade. And as after this lecture, like I said earlier, you're not going to be trading every day again. If you are there to trade, you are there to practice to correct yourself in anything that you are doing that you know that you are not doing it properly yet. Because as you are trading with that demo account right now, you are treating that demo account as if that is live money. You are treating that account like you are a manager right now, and they handle money to you to manage. You are an equity manager right now, and an investor give you money to manage, and you are managing it. That is the mindset you are using with that demo account. From today henceforth, after this video, anything you are doing, you act matured, you add discipline to it, you do everything like a professional. Because I'm going to give you everything you need. After this video, like I said, I expect excellent result from all of you, and I want to see your success. This is the power I said I'm bringing to you people. So let's go into the next slide where we talk about the next style of trading. And like I said, I'm going to share with you people all this trade that I put up here now. This is just the theory part of it. I'll show you as we're going to be trading next year. you see that okay, this is a short-term trade, this is a position trade, this is a day trade, this is a scalping trade. You see all of them. Then you are somebody who want to wait. Maybe you just get in and wait for this big move and you get your shit out and you wait for another setup, something like that. You the moment you study this information, you digest them, you pick the one that is very suitable for you, right? So let's go into the next slide. Okay, content number 2, 4 or 5. Day trading. This is intraday trade that goes for a duration of a day, just one day, a duration of one day, starting from the time of entry, execution, to the point of exit, take profit. This type of trade only lasts for one day. It involves lower risks and lower profits. When such trade pan out, they come with over 50 pips of profit. It requires lower number of pips as stop loss to use on such trade, vice versa. The required number of pips to apply as stop loss for such trade will be taught later in this lecture when we go into the forex charts. This type of trading setups are framed on monthly, weekly, daily, down to the lower time frames based on intraday perspective. So what are we seeing here? It is just like I explained earlier that the only difference of this one is this one lasts for one day. When you get into that trade, that very day you close it. I've done this one in front of you people. That day that I was teaching in school, in class that day, that trade that I was trading, it was a day trade. It was a day type of trading. I held on to that trade till almost the end of that day before I collapsed it, right? So that was a day trade. And those kind of trade when they pounds out, they give you like 50 pips and above. Sometimes around 100 pips. Sometimes 50 pips. Like that day, it didn't give me up to 50 pips because the market was consolidating. Some of you guys saying, I'm money, what do you mean by consolidation? I have it right here in this lecture under market structure. I'm going to tell you people what consolidation is, and you will see how after this video when I'll be talking, we'll be interacting like colleagues. You both of us, anything I'll be saying from today after this video, you will understand me. Your questions will be less. The things I will be focusing on you is I will be focusing on looking at how you are doing this thing. Okay, because we're going to be doing it together. I'm not just giving this thing out to you people to go and do it. No, you are in the field with me. I'm showing you how to play. So I'm playing with you in the field. We're moving it together. This is one sweet part of what I'm going to do with you people. When I say I'm doing it for free. Only my time with you here, what I'm doing with you here, I am not after what somebody was saying. Godwin was telling me the other day that Monday, when are we paying for registration? I was laughing. I told him, which registration? Like, like this is what I'm bringing to you people. This is what I said I'm bringing to you people. Don't expect anything outside this again. You have everything you need in this video, and by the end of this video, you will know what I say. You have everything you need. You will see by the end of this video. So, here, as I was doing it that day, everything that I'm teaching here, it is something that I am going to do it in front of you to see. We'll do it together. I am not such a mentor that will give you things and you go and be struggling with them. No. If you're having issue with anything that I'm teaching you here, free. Like I said, those of you that those of you are on the platform already, you are seeing. Anytime I see a screenshot or anytime I see a message from that group, I always try as much as possible to attend to that message. Anytime I see a notification from that group, it is just I treat that group like my private chat. Those of you that don't understand that you don't like to chat on the group, no. Anytime I see that message on the group, I treat it like my private chat. And I've told you already, those of you that don't want the group conversation, some people are like that, they just want private conversation. So I've told you what to do already on that. So let's go. I hope people understand what this one means right now. This type of trade is just for a day. You don't stay more than, and this is the one I do. Like this is the one I do the most. This one is scalping, the one I'm going to discuss last. In the like the fifth number on that types of trading. The fifth number you see, these two, these are the ones I do. Day trading and scalping. So this is like this is just my lifestyle. I'm this kind of person. When I'm making money, I want to count my money immediately. I want to know what I'm doing. I want to know if I'm losing. Let me know that yeah, I'm losing. Let me know sharp. If I want to make, I know how I'm making. Let me. That's why when when I when I was trading that day, you see that I traded to the point. I said no, I'm no longer interested in this trade. Let me get out. And I got out. I saw something. When I got out, you saw what happened. It retraced back. What I could see, none of you, all of you, like what I was seeing on the chart that day when I closed the trade. If you watch those my live trade, you will understand that what I was doing, what I wanted to pay attention in those trades, what I was saying, were they happening as I was saying it, as I was calling the price. I put my stop loss. Don't hit it. It was running. I was calling it. I was controlling the chart. Was it responding the way I was calling it? So many of you were complaining and you didn't understand what I was doing. But right now, so many of you love it now. You can see how you are interacting with those things now, and you can see what you are learning from them now. Because I can see how wisdom, all of them, miracle. I can see how they copy my child, what they are doing with it right now. So that is exactly how you learn. You don't even know what I did up there for you people. So right now, if you come to me right now and you pay me money to teach you this, and I say okay, I will teach you. I just take your money and I start teaching you. Will you will you believe what I'm giving you? First of all, I have to play in front of you, show you what I'm doing. I introduce you, I've given you access to everything, everywhere to verify what I'm doing. Anything I'm doing in this forex chart right now, you have every access to verify. That thing you're seeing on Trading View, anything you're seeing on Trading View, that is what the whole world is seeing about that currency. When you access GBP USD and Euro USD, whatever currency you access on Trading View and you are seeing it, whatever that is happening there that you are seeing, it is what the whole world is seeing. So anything I'm doing here, you can verify it. And I put out there for you people already, and I'm going to use more of them next year. So what am I saying? This is my favorite type of training. And the next slide that I'm going to discuss. So I've done this one in class that day, and the one I'm going to discuss in the next slide is the one I posted for you people there. So let's go down to the next slide. Okay, cost center number 2, 5 or 5. Scalping. This is hourly trade that goes for a duration of minutes to hours, starting from the time of entry, execution to the point of exit, take profit. This type of trade only lasts for hours and not up to a day. It involves lowest risk and lowest profits. When such trade pan out, they come with over 15 pips of profits. If or 50 pips of profit, it requires lowest numbers of pips as stop loss to use on such trade, vice versa. The required number of pips to apply as stop loss for such trade will be taught later in this lecture when we go into the forex charts. This type of trading setups are framed on 4-hour time frame down to the lower time frames based on hourly perspective. So what are we saying here now? Like I say, I explained to you in the previous slide, the only difference of this one now, this scalping, this is the shortest form of trading. This one, I can sit with you just like I was discussing with you. Okay, it was Francis. Francis was here with me. There was a day I traded the other day after those trade that I posted. There was another trade I took. I did not post that one. So because I did not want to engage you people too much with those things, I just want to give you those two. Those videos were supposed to be two, but when I was doing my record, the software was using cut off. So the video now I joined them. That's why you see part one, part two, part one, part two. It is just supposed to be one. So if you do not watch them to the end, you will not understand anything there. So this scalping, it is what I was doing. This is the one you're getting, yeah. You just, if I sit with you, if I see a trade, I can see with you within 15 minutes, 1 hour, I will make money in front of you and I will take it out. That was it that day. And if you check the time of that record when I was trading that day, I was checking my time. It was I started that trade around 8 o'clock Nigerian time to 9 something when I took out that money, and I was talking about food that day, and I could not um meet up with people that says when I wanted to go out to get food. So I was rushing from that trade. That is, so that trade, I was in that trade within 2 hours. It wasn't up to 2 hours. That is 8 to 9. It was 1 hour something minutes. So that is the type of trade. That's what this scalping is. So in 1 hour something, you just make money and you get out. And you people saw what I did that day. It was $18, right? Yeah. And the value of that $18, that the dollar was 1 7 as at that time. So that 1 7 times 18, it was 30,600 naira. That was what I did in 1 hour something minutes. Then the one I did in school that day when I was teaching, and I told you I was supposed to make more than that. I wasn't concentrating on that trade to manage it the way I want. And you people will see what trade management is. I trade management is there in those my life trade already. Everything that I'm discussing with you in this video, most of them are in those my life trade that I recorded and post for you people right there. Those trade that I named, how I made your 30 days income in a day, part one, part two, and smart money man say you should have part one, part two. Those trade, most of the things I'm discussing with you here are there for you to go and verify already. And you're going to see more of them, how I will do them next year. Because the way I'm going to do this thing with you people, I'm not just giving you this. Like I said earlier, I'm going to publish everything I do here on this YouTube channel for you people to see. Before I trade, I will come and show you my analysis, do my analysis, show you. And this is my advice to all of you. When I post my analysis, before you come to watch it, before you come to see my analysis, try as much as possible to do your own first. Do your own and keep it. Then when you come to watch my own, if you see that you and I were having the same thing, then you, wow, you are getting it. So always do your analysis first. And when you get it wrong, if you don't have the same thing that I have, it is fine. That is when you learn. It's okay. This is what that is what I'm not getting. Oh, I missed this one. Oh, I misplaced. Oh, I did not put this. Oh, I did not. You complete your chart so that when we start trading for the week, you will not be left behind, right? So this is what we have under types of trade. The five. So, and this type of trade, you frame them based on 4 hours down to lower time frame. When I say lower time frame, anytime I'm talking and I say higher time frame is monthly, weekly, daily. When I say lower time frame to me start from 4 hours. I don't really, there are some serious trade I take when I want to take my, and those trade you will see, these are the things you are going to be focusing on next year on making our ends meet. These are the things we're focusing on, and you will see how we trade with those time frame. So this trade, you can frame it based on, we can look at it from far. But if you are working with that narrative from a higher time frame PDRA, where the chart is prompt to go from a higher time frame, because the chart, the market delivered based on what is programmed to do on that higher time frame. Anything that is doing on a lower time frame is just for a short period of time. It will not waste time doing that thing. If it is running down in a lower time frame, it will not run down for long in that direction. That is why I told people that day to take profit 20 pips from any time you are trading. And you see how I discuss those things in this video more. I break them down more in this lecture. Everything they are where explained in this lecture. So this is this one. Let's go to the next slide where we'll talk about the the trading session, which is our time theory. That is what we're going to talk when we go into the next slide. We'll talk about, I told people that we work with time. So when we go into the next slide, we go deep into the next thing that we're going to discuss, which is the time theory, where you know when to trade and when not to trade. I told you people that right now you can trade now, but you don't know the right time to be there. If you are there at the wrong time, you get burned. That's why you see so many people they are trading blindly. And this is the trading Bible that I'm giving you today, the smart money. This one, the information I put up here in this video, everything in the 10th video in this YouTube channel, Mandela FX. This one right here, this trading Bible, those things give birth to this one, and this one now this will complement your journey. You have all the tools, all the ingredients, everything you need right now to cook your soup, to make your food. You have all the ingredients right now, and I'm going to show you how you cook the food, how you make it, right? So let's go down into the next slide where you know when to be in the market and when not to be there. Okay, the core content number 2. Another number 2, we still have the time theory. You're following up the time theory, which is the trading session key zone. That is the time when you should be in the market. Some of you were trading that day, because I told you people to practice, right? To practice, to master these things, know how to set your take profits, set your stop loss. You know the number you use as your stop loss. If it's 10 pips, 20 pips, any number of pips, and you know how many numbers is your take profit. You know what you are doing. So that when you make money, you know exactly what you do. You are not trading blindly. You are not making money by luck. No. No, 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 no. We don't do that. Shit. Any money you are making, you know exactly what you do for you to make that money so that you'll be able to repeat it next time. If you don't know what you do just now, you will not be able to repeat it next time. So the sweet part of it is when you know the right time to be in the market. This is what so many people don't know. That is why they cannot trade. They can't trade profitably because they don't know the right time to be in the market. There are there's a time when you see the real move begin in the market. There's a time when these things happen. Time when this thing happen. That's why anytime when I get into a trade, it when I get into a trade, when I get into a trade, it's very difficult for it to waste time before a run for me. When it's wasting time, no, 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 that is not it. So today you will know when to trade and when not to trade. So what is trading session and key zone? A trading session is a period of time when a market is actively trading. Below are our trading session structure key zones. So the trading session and this key zone, these are the time when the market is currently like trading at that point, is actively trading in the market, right? So as they are trading, all these trading sessions I put up here, it is not all of them that we trade. You will see the ones that I do. That's why the things I'm giving you people here, they are the things that I do myself. These are my best. These are the informations I use personally that I'm sharing with you. This is just like my cousin is here with me. Part of this free mentorship is listening to this video. Is so I'm passing this information just like me giving it to my brother, giving it to my friend, giving it to my daughter, son. This is just the same thing. So the things that I do from these 5 trading session, the one that will focus on the one that will trade, where you see the real move, when you see the big, when things happen, when smart money participates. People don't know these things. if you know how to trade, when you add time element to it, when you add the time theory, the time, the sweet part of it is knowing the right time to be there and when not to be there. If you know when death is coming, you know when something is likely not to happen, and you are not there at that time, because you know that nothing is going to happen at that time. There's no point of you be there wasting your time. Go and do other things. Then when you know that these things are going to happen at this point, that's why when I put, if you see the group rules, the day I created that group, Mandela FX free mentorship group, the day I created that group, you can see the groups rule there. I put punctuality, very important. If you are not punctual, you cannot trade. Because these people, they cannot wait for you. These are big boys. When smart monies are operating, you are the one to come and wait for their time. You are the one. There is a time when they participate. You are not the owner of that time. It is their time. So you are the one to come and wait for them. They don't wait for you, right? So these are the trading session we have here. Number one, trading session. This is essentiation. This essentiation is start from 8 p.m. to 11 a.m. New York time. Now, everything that I'm going to discuss under this time, everything, the chart, the algorithm that I discussed with you earlier, what smart money used to deliver price, is deliver, it operate based on New York time. So, and when I go to trading view, I will show you how to set your time to New York so that you will see it in New York. You can see the other day when I was trading live, those my trade that I named, how I made your 30 days income in a day, part one, part two, those videos. If you watch them, you will see when I will show you my time, when I have Nigerian time and New York time. You don't really need to have two time on your phone, but when I take you to trading view, I will show you how you can set your time to New York so that your chart will be showing in New York. Then wherever you are in the world, you can now um convert that time for yourself to your own time wherever you are listening to me right now. Because I know it is not only people that are here in school with me that are listening to this right now. So many people, this is so many people wherever you are right now. People can get this from every part of the world as long as you have access to internet and you can access YouTube. So wherever you are right now listening to this, anything I'm discussing under this trading session is always in New York time. Anytime I'm talking about time on the chart, is always in New York time. You are the one to convert it to your own time, right? Wherever you are. So number two is London session. It starts from 1 a.m. to 5 a.m. New York time. Then London launch. It starts from 5 a.m. to 7 a.m. New York time. Then New York session start from 7 a.m. to 10 a.m. New York time. Then London close start from 10 a.m. to 12 p.m. New York time. So you see all this time here, the only one that I trade in London and New York. That is number two and number four. These are the place where you see the smart, when these people are moving, I can see their footprint, I can see their signature clearly when they are moving in this session, when they are moving in this key zone. We have key zones when they key. Like don't worry. When I'm going to talk about liquidity concepts, you know what I mean by key. The time we key, there's a time we key, the key zones. That is what we mean by key zone. The zone that we key, it is that London and in New York. And you will see if you check the last trade that I took, um the last trade that I took was in New York. Yeah. The one was it okay, I think no, it was in London. Yeah, the last trade that I took was in London. The one that I posted, the one that I named Smart Money Mindset You Should Have, part one, part two. The, that video, that trade, it was a London trade. So when I take you to the chart now, you will see how I will do all of these things on the chart, the lines, how you understand this time, on you know what you're doing, wherever you are right now, the time on the trading view is New York, then you convert it to your own time. So when you are getting close to that time, you have to set tune, you have to stay tuned with the market when you are getting close to that time in your own time, wherever you are. Just like me right here in Nigeria, if I want to trade in London, Anything 6 a.m. I'm awake. That's why sometimes some of you, I don't attend GST like that. It is not like I trade every day. But if I wake up in the morning, I don't like eh, sometime that morning time, the way I trade. If I want to trade in New York, I love to see what they have done in London. I check what they have done in London. So that my time. I don't really any day I want to trade. I don't really want to stress myself. I want to focus and make my money just the way I want to make it. Like that day I was teaching people. I told you that I wanted to make my $100 that day, but because I was teaching, there's a way I wanted to manage that trade. There's a way you monetize any move. Like if market begin to run, as a senior trader, as a professional trader, when you get into that trade, there's a way you maximize that move. So I wanted to maximize that move that day by getting in more entry, but I could not get more entry when I was teaching them that day, right? So and you will see how you too can get in more entry while you are trading. I'm going to discuss all of them in this video, right? So let's move down to the next part. I've told you already, this is our trading session. I hope this one is well understood, and anything you don't understand, you can always refer back. Just that is the beauty of this lecture. If I'm saying anything that is too fast, you can pause it, go back again, you have the lecture, you can repeat it 100 times. That is the beauty of it. So this is our trading session. The only one I engage, and you people will say I'm gonna do it. Then in our own time, Nigerian time now, from this 1 a.m. to 5 a.m. New York time in Nigeria right now. Today is December 28th, 2024. So our time, 1 a.m. New York time will be um 6 Nigerian time. Then this 5 will be 11 o'clock Nigerian time. So now sometime we have daylight. These times remain the same. Whatever time you are experiencing, you either daylight savings time, whatever time, this is the same time the algorithm operate with. It does not change. So if the weather, if the daylight, whatever, it is the same time. So this New York right here now, it's gonna be 1 o'clock p.m. Nigerian time. This 10 now. When you convert the time to your own time, wherever you are, you're in Nigeria or wherever you are, you just convert the time. Then it will be flexible like that for you, right? You master it. This is not is something hard, right? So I hope this one is well understood. We will move into the next part. Then the key zone to focus on will be discussed under making your ends meet, being number 8 of this lecture. I just told you already the ones I trade. These are the ones we focus on too. This London, this New York, because I'm sharing these things with you. You have to do this one that I'm doing. Later on, when you learn how to trade properly, you can take your time to come and study this other trading session. You can see what they do at that point. But with what I'm going to show you and with what you will see in price action, you will see that this Asian they don't really move. Price doesn't. You will not see price movement in this Asian session. Smart money don't trade during this time. It is always a small range where price doesn't really move like that. It moves within a small range where you get like 15 pips, 10 pips. It doesn't really run much. So I don't waste my time during that point. Then this London launch, this London session now, this is where they perform. They do a lot of things. Smart money do a lot of things this time. When they are doing these things, I can see their footprint. Then I move with them. Then this London launch, it is when we close from London. I'm just repeating this part now to make people understand it more. When we close from London session, this London launch now it is just an empty time when we don't really do anything. Even though when you want to make your entry, you don't make your entry during this time. Your entry should be inside this London here, either London session or New York session. That is when your entry should be inside. And when we go deep into the lecture, you understand all of them. So This New York session now, one will close from London. After the London launch, then we'll go into we enter New York. That's how market operates. People comes in, people are engaging. This is real business. People are engaging in these currencies. People buying, selling, and smart money is monetizing what is happening. It is what smart money is getting the attention. Whatever thing that is happening in the market, whatever it is happening, the chart, the algorithm doesn't know where your stop loss is, but smart money knows where the money is in the market. It is so smart money knows where the money is, then they send the algorithm to that place. That is what happens. And when they are doing these things, that you can likely see them when you see this their movement clearly with their signatures that I'm going to share with you. It is this time zone, this time window, New York session and London. This is where when they are participating, you can see their moving, and I'm going to share their footprint with you. You can identify them, then you move with them. You know, the thing is when you are in line with IBDA. You know what I mean by IBDA already? Interbank price aggregation. When you are in line with IBDA, wherever the IBDA is prompt to go, wherever it is programmed to go, if you are in line with it, you are moving in that direction, the market will never come against you. That's why I told you that the wisdom when you're asking that if you are trading, you should look closely. No. This is the reason why I said no. Because I know what is happening at that point. I am in line with IBDA. I know that if it is retracing, and today you are going to learn about retracement, whenever it is coming against you, that is retracement. The market doesn't really run in one direction. No, it doesn't run like that always in one direction. You need to retrace back, run again, retrace. Hey, that's how the market operates. And I'm going to show you the price leverage as we go deep into the lecture. So this is this on the trading zone, our key zones training session. Take note of this part. Everything in this video, everything, digest all of them. So let's go into the next parts of the lecture. Okay, we're back here. Core content number 3. We have talked about the trading session, the time to trade. We've done that. So now we have market structure. In the markets, as that market is moving, as it's delivering, there's a market there's a market structure. It runs. So what is market structure? The market structure helps us to understand what differentiates market from one another, right? Here I share with you the 4 major types of market structure in the forex markets: consolidation, expansion, retracement, reversal. So these are the major market structure in the market we have, and this is how market deliver price. If you see, when the market is moving, it goes up, it comes down, it goes up, comes down, it goes up. So there's a structure, is working with a structure. So that structure is what makes us understand, help us understand what the market is doing. So those structure, sometimes you can see in those my live trade, I was describing a market structure break in one part of those my video when I was trading live. If you watch those videos, there was a part where I was indicating something like a market structure break to the downside. So that structure, these are the market structure we're going to discuss here. So when I was saying all those things in that trade, I was saying something in that trade that I understand that you people did not understand those things I was saying. I was saying in the video that I understand that you people did not understand this thing, but my next lecture will make you people understand all of them. So this is the lecture. I've given you one of the lecture already, which is the introduction to forex, and this is another one. And I was telling you in that same video that just be paying attention, just be watching what I'm doing. That I know that you don't understand anything yet. I was saying it in the video. If you watch them. So those things, you can refer back to them now after this video. Then you see what I'm saying with the things we're going to do next year again with this same thing. So this market structure, I'm going to break them down for you people. You understand what is consolidation, you understand what is expansion, you understand what is retracement, you understand what is reversal. You know, all of you, I told you that you are trading already. Now you people can trade, you can buy, you can sell. Some of you are making money on your demo right now, right? So, and I love what you people are doing. And I told you that you don't know what you're doing yet, but this lecture will make you understand what you're doing. You understand the power of what you just did. Those of you that are demoing right now, keep that shit on. That is where I build my power. You can see me right there. I am the demo master, the eagle eye. That is where I got my power from. That's how I build up myself. It is that demo that will give you the confidence. Because whatever you are doing on that demo, it is the same thing you will do in your live account. So what I mean by demo on live account, demo is that account you are using to practice. The live account is the one you fund, the one they make a deposit to use it to trade. Because if you are buying a currency, you buy it with money. If you are selling it, you sell it with money to make more money. So your trading account that you are trading with real money, it is live. The one you are trading with right now is demo when you use it to trade. Because this information I'm giving you, you don't have to try this information with real money. You try this information with demo account, verify them. See what I'm telling you to do. How are you making progress with the things I'm telling you to do? Look at what Miracle did in his assignment. He followed exactly what I said. Then look at it. Look his result. Those of you on the group, you can see he got exactly his result was excellent. He made fucking good money because he followed instruction, right? So that is how everything here works, right? Some of you are trading already, but you don't know. Then, as I am going to tell you now what to do so that you understand the power of what you are doing. So, in this market structure, I am going to discuss each of them in the next from the next slide. I will discuss each of them and I'll tell you when each of them is happening, what you should be expecting. When it's consolidating, what you should be expecting. When it's expanding, what you should be expecting. When it's retracing, what you should be expecting. When it's reversing, what you should be expecting. Because when it was retracing on wisdom the other day on the group, those of you that are on the group, you can see wisdom was saying that when the trade was coming against him, he wanted to close it. So he did not know what the market was doing. So today you will know what the market were doing. It was retracing, and I will tell you how you will learn that now. So let's go to the next slide where we'll go deep into that. Okay, so we're here now. This is the core content number 3, 1 of 5, which is consolidation. This is a market that shows no willingness to move in one direction. In consolidation, the market trade within a given range for a specific period of time. This type of trading environment does not permit too much of price run in pips. Below is a clear diagram of consolidation market structure. So what are we saying here? In consolidation, when market is consolidating, you see that it doesn't show willingness to move in one direction. It's just moving up and down. It's not running in one direction. It goes up, it comes down, it goes up, it comes down, it goes up, it comes down. That is what consolidation means. And I'm going to everything I'm discussing with you here, I will take you to the chart. I will show you part what I'm saying, just like the way I did the previous lecture. This one is more like because I refine everything in this one, right? So here, when the market is consolidating, it does not show any willingness to move in one direction. It moves within a specific range, within a given range, within a specific period of time. It will just be moving there. So what do I mean by trading range? Trading range is when I take you to the chart, I will show you what I mean by trading range and I will explain that here with you too. So that is what consolidation means. And in consolidation, environment, when it's consolidating, price will not really run much. It will just run like 20 pips, come back again, 20 pips or 15 pips, it come back. You can decide to trade within the range of 40 pips. It will just be consolidating inside 40 pips range, something like that. Depends on how the range may be. But that is what consolidation means. It doesn't move in one direction. That is that structure. That is one type of market structure. And inside that consolidation, there are things you can do inside it. And it's not everybody that can trade in it. So the structure, I will explain all of them to you. Just like this one, I'm going to break it down. Now you can see the diagram here below. This diagram right here, that is what I'm saying. As the market is trading now, it comes and it goes up, comes and it goes up. You see what it's doing? This is the type of the structure. It's not moving in one direction. It goes up, come down. So take for instance, you get it from here and your TP is somewhere here, up here. Then instead of the market to run to that place, it's not running there. It goes up, it come. So this is consolidation. This is the type of the market structure. Anytime I'm trading and I say the market is consolidating, when I say that, that consolidation means it's not moving in one direction. So, and if it is not moving in that one direction, you will not get enough run. Maybe if you want to get like 40 pips, the market will just be consolidating inside 20 pips. It goes 20 pips, come back, goes just be running like that. So this is what this consolidation means. So anytime I'm talking, I say consolidation, you have to understand it, right? So this is what consolidation means. So in the next slide, I will discuss the other part of market structure. Okay, this is the core content number 3, 2 of 5. Expansion. This is when price quickly run away from the point of consolidation. It is a displacement that shows the willingness of price to move in direction for a specific period of time. Like, it is a displacement that shows the willingness of price to move in direction. Like, it's going to move in one direction at that point. Put that for yourself here, to move in one direction for a specific period of time. So to move in, after that in, you put one direction right there for yourself. So now this time, now in this expansion, now the market now shows willingness to move in one direction. Now in consolidation, it was not showing any willingness to move in one direction, but now in expansion, it's showing willingness now to move in one direction from the point of consolidation. That's what this expansion means. Below is a clear diagram of expansion market structure. You can see right here now, before it was consolidating, it goes up, comes down, goes up, comes down, comes down. All of a sudden now, expand upward. So this run, this is expansion now. Now this was the trading range, this shaded area here. It was the trading range when it was trading up and down in this range. It now expand outside the range. So this is the expansion. This is the displacement too. When I say expansion and displacement, I'm referring to the same thing. When the market move, that is it expand or it displays. It is an impulse move. So all of them mean the same thing, right? So you know now what is expansion. So when I say expansion, if you see it in the marketplace, you know what expansion means on the chart, and I'll show you what that means. The picture of it, how it looks like on the chart. Even in the forex chart right now, I'll take you there to the chart. You see it on your trading view because I'm going to work with the current real-time chart. The date that I'm recording this, the day that I'll get the when I'll get to the time of top-down analysis. Under the top-down analysis, I'm going to break down everything, right? So this is this on this expansion. I hope it's clear now. Then any part that is not clear, you can just take it back a bit for you to get it properly. So let's move next to the other parts. Okay, we're back. Core content number three or five. Retracements. This is when a price trade back into the expansion range. When price trade into the expansion range, it is expected to make another displacement in the same direction of the initial expansion move or reverse back opposite way. What am I trying to say here? Now, on this retracement now, take for instance, those of you that are on the group and wisdom, that trade, that the other day, that movement, it was coming against you. That was a retracement. So that's what a retracement means. When it's coming back into the expansion range, that's what retracement means. You know, we just talked about expansion, right? So now this is retracement. It's going back into the expansion range. And when it's going back into that expansion range, it is expected to make another displacement in the same direction of that initial expansion move or a reverse back opposite way. So this is, look at the diagram here. Below is a clear diagram of retracement market structure. You can see now, after this expansion move, this drop down, it is a retracement. This up, this down move into this expansion range, it is a retracement. This is what happened. Those of you that are not in the group and you are watching this video, one of my students, he took a trade the other day and he was saying that the trade was coming against him. So when it was coming against him, his stop loss was at somewhere here, somewhere here. He got in like this, stop loss was somewhere here, then the trade was, so he did not understand it, right? And from the previous lecture, they will never understand why trade is coming down. No, that was just the introduction. Then this is the Bible, the smart money, the trading Bible for you now. You now have the Bible. So it is not just the introduction. You have the Bible, the full Bible right now. So you can know now, this drawn now, the market is prompt to do that. The market is supposed to do that. It's supposed to retrace back into that range for a price, for a proper price delivery. This run now. This is one currency that is weakening or that is strong against another one. This up run now, it is a whole currency of a country. So they have to make it back for a fair price delivery. So this retracement, it is to balance the price, and you will later on in the mentorship, in this same video, you will know what makes that price come down. Then what lead to this retracement, you will know why. Because price don't just retrace. There's a reason why it retrace. So next, I have it is part of this. Under the PDRAs, you will know why price retrace. You will know why price do what it does. So you can see now, wisdom it's clear now. When it's retracing for a specific thing, and that is that movement that is coming. It is a retracement. So you know that today now. And those of you that have, when I'm using those my students to teach now, those of you that are watching outside, any of you that is listening to this right now, you are my student. If you are listening to this and you are following what we are doing here, you are my student. You are my cycle. You are in Mandela effect cycle. If you are doing what we're doing here and then you are seeing what people are, you are progress, we're going to be making our commentary next year here. We'll be posting, publishing, everything we'll be doing, right? So next year on YouTube, I'm going to be live. I'm working on that so that I'll be able to go live with you people. Anything I'm doing, you will see it time to time. It's not going to be like that record when I record myself and post later on. No, it's going to be like when I come on live, you'll be notified. So if you are just watching and you have not subscribed, all this why you you are going to miss a lot next year. So if you want to follow this properly and to see what we're doing, so that you see you follow you follow your own measurements. your progress. You gauge yourself. If you're following, are you progressing with us? Are you moving? If you want to stay tuned with everything we're doing, then you subscribe and click the bell notification icon so that whenever I drop something, you'll be notified by YouTube. Even though if I don't post the link, those of you that are on the group, if I don't post the link on the group, you can be notified. And those of you that are watching outside my group, you have not you are not in there, you're interested in it, you're watching it, you can just do that too for yourself so that you'll be notified, right? So I hope this one is clear now. What um expansion retracement, I mean, what retracement is. You can see right there, this is it. It's clear now. And if there's anything you still don't understand about it, you can still take it back a bit for yourself. And I'm still going to go deep into it again because I'm taking you to the chart to show you what how this thing look like on the chart. I will take you there so that when next you see it on the chart, you know that, oh, this is retracement and this expansion, this is consolidation. Here you recognize all of them on the chart. That's why I always tell people to take screenshot of whatever you're doing on the chart. Those are your stepping stones, right? So let's go to the next part. Okay, core content number 3, 4, 5. Reversal. This is when a price trade back in opposite direction of the initial expansion or displacement. Price retracement can lead to reversal. Price can also move from expansion to reversal. So what am I trying to say here? We talked in the previous slide, we talked about consolidation, from consolidation to expansion, from expansion to retracement, from retracement now, from that retracement it can lead to reversal. From that expansion, it can lead to reversal. So that's what we're saying here. So below is a clear diagram of reversal market structure. You can see right here now. It was consolidating before, it left, which is expansion, it retraced. Then from that retracement now, it dropped to take out this low again. So this is a reversal. So this is a structure in the market. I'm going to show you how this structure, how they look like in the market when I take you down to the chart, because these are the things you need for you to read these things. These market structures, they are like the alphabet for you to read the price action. You know, just like somebody, this my student wisdom, when he does a video on a group, when he posted that trade that day, you can see that retracement. Some people that are trading right now, why so many people are not profitable is because they cannot see when the market is retracing. Like they cannot see when it's reversing. All these things you need to. The only thing that makes you a profitable trader is when you can see it before it happens. You need to see it coming. You can see those my trade. If you watch just my live trade, you can see how I was calling the price. Anything I want to do, I have to see it coming. I have to like you need to see it before it happens. So this reversal now, somebody like me, you can see when you watch those trade. The time immediately I left, you saw what happened next. The market reversed. I already saw that reversal. So the beauty of you knowing how to trade, knowing how to read price action is when you know when something is likely to happen and when it's not likely to happen. Then you'll be able to play along with the money. You are playing with big boys. This is real business. The people that are into this, the people that are running this. This is the moment you understand these structures plus the signatures that I'm going to share with you, the smart money signatures, their footprint. The moment you understand these structures and their footprint, you just align it with every other thing that I've given you in the 10 video. Your journey starts. So I hope this is clear now. You understand what a reversal means. A reversal now. Yeah, somebody is in that market. You think it's going to keep going. No, we see the reversal when it's coming. When it's going up, when I see a reversal, no. If I see something, I will say no. When I was trading in class that day, I was telling them that this candle that I'm looking right here, I don't want to see strength from that candle. The moment I see strength from that candle, then I'm going to get out of that trade. I told them, they were like, and they saw it the way the price broke through that candle. Price did not respect the candle. I told them too that I don't want price to respect it. I said it before happened. If it was just my live trade as well, those trade I recorded myself, if you watch them, you see that I I was I was I was seeing it before it happened. And these are the things I'm going to share with you here. I've started sharing already in the Bible. The smart money, this is it. This is your trading Bible. These are the things you use to trade right now. So it is for you now to digest them. They are like 5 and 6 to you. The way you are playing with those initial things that I've given you, the things that you have watched in the 9 videos right from the beginning of our journey. Then we said there is something we said that we're going to do from the beginning of that video in this channel, or on this channel. I mean, the first video, life after school, there are things we say we'll do. So these things, those things, these are the ingredients for them. Yeah. So this is the reversal. When you are in the market, you need to know when reversal is coming so that you get out, so that they don't squeeze up your profit. I mean, personally, somebody like me, I don't like giving up my profit. That's why when it's, I just no, I'll get another one trade. So I you will see how we're going to do it, right? So I hope you understand what reversal mean now. Let's move into the next part. Okay, core contents number 3, 5 for 5. Okay, this 5 for 5 is not really a market structure, but it is a break of structure. You know, this part is very, very important. You need to spot out a market structure break in the market. When, I talked about consolidation, from consolidation to expansion, from expansion to retracement, from retracement to reversal. So from that expansion to retracement, if you stop at that retracement and go back to take out that high again as it's going up, that is a market structure break to the upside. I know that you don't understand this yet, so let me break it down for you here. Break of structure, BOS. A break of structure in trading is the point where the market surpasses a previous high in an uptrend or falls below a previous low in a downtrend. So that's what I'm saying. If the market is moving up, once it retraces and it goes to make a higher high, that is a break of structure to the upside in an uptrend. Then if the market is going down and it retreats and go to make a lower low in a downtrend, that is a market structure break to the downside. So look at the diagram here. Below is a clear diagram of break of structure, BOS. You can see now this is a market structure break to the upside. Look at it here. Upside BOS, break of structure. You can see now the market goes up, it retraces, it come back to take out this high to make a high. So this is the high. It retraces, come to take. So taking out this high to the upside, it is a market structure break to the upside. It retraces again, goes up, breaking this one up again is a market structure break to the upside. So that is the market structure break. You need to spot out. So when you get into price, you should be, take for instance, when you buy, you should be seeing market structure break to the upside, upside, right? So you need to spot the market structure break, and this is it. And I will show you what that means. It is there in those my live trade already. I was explaining it that to you that there was a place where I was showing a diagram that this is a market structure break, that it goes up, it fail, it comes down, take out this low, drop. I was explaining it in that video, and I was saying that I know that you people did not understand, that my next lecture will make you people understand all of them. So this is a lecture. I've given you part of the lecture already, which is the introduction to the forex. Then this is the Bible. So here now you understand all of them now, what I mean by market structure, and now you go back to those trade and watch them and find out these things. because I'm not going to trade this. We are not going to trade this here again. Today is 28th December 2024. So we are over for the year, right? So we're not trading again. But as you're doing your own story right now, you can go and check all these things in those trades. That's why I put up there for you. I told you that there is a reason why anything I give you, I have a reason, absolute reason for me to give it to you in that order. The way I design that is just a package. This is someone's 30 years of experience that I just package for you in a single package. I just compile it for you in a single package in just 10 videos. And I just package them and give it to you. The way I serve them to you, that is how you take it. If you're not taking it like that, you have issues. Just like when you go to school, you did not go to nursery school, you did not go to primary school, you just go to secondary school. When you get there, you have a lot of issue with those people that are there. You will not have any understanding with them because you jump and you cannot even cope. So, and the way I give this thing to you, that is how you should take it to make this thing very easy for you. The moment you understand the market from that angle, you will do very good and you will do very fast. Right from the beginning of this first video, those things I discussed with you in that very first video, life after school, the things I discussed in those videos, the moment you have that mindset in this thing, this is real business, this is trading. These are the things you should tackle as you are trading. Those things that we discussed in that first video. I told you people that if you have not been following, if you don't know what Mandela effect stands for, that is what I want. That is what Mandela effect stands for. That's why I'm doing this for free. I'm bringing that power. What I discussed in that video, I'm bringing that power to you people live. And this is it right here. By the time we get to the end of this video today, you will know that yes, money, yeah, he did it. This is it. The power. So this market structure, what am I saying here? You need to spot them out in the market because they are powers. If you cannot spot them out, you won't know when the market is not likely to go in your direction. If I get into price in an uptrend right now, if I'm not seeing market structure break to the upside, there's a way I will act towards that trade so that I'll protect myself. We are warriors, right? When you're in the market, as from today, you are going to be trading like big boys, you're going to be trading like smart money. Whatever you are doing in the market, you are the one responsible for it. If you make money, you are the one responsible for it. If you lose money, you're the one responsible for it. So you act smart, you act like a businessman. You are playing with big boys, you are doing business with big boys. So you play like big boys. You act smart, you act mature, you add discipline to everything you're doing. So the moment you do not see these things in price as they are moving, the moment you don't see them in your direction, you start acting the way I'm going to show you in this video. So this is up market structure break. You can see the down one here. So the market goes down, it retraces up, come to take this low, break the market structure down. So I was explaining that in those my live trade too, show you the live things, those things on the chart, and I'm still going to take you to the chart to show you again. Because this video is well loaded, I told you people this is a Bible. This one is more than a movie that you watch. This is just like a textbook you read in school for like 4 years. It's more than the information I put up here is more than that 4 years talk I'm talking about. The information this video contain. So these things right here, it took me a very long time to spot out the market structure break in the market. They didn't teach me this thing like this. They did not point out this thing to me like this. The way I'm telling you, the way I'm teaching you. And I'm going to take you down to the chart to show you again because I told you people from the beginning that I'm bringing power to you people and I don't want to waste your time. I don't want to waste too much of your time with me before you do this. And there are some things I'm going to discuss at the end of this video. Those things will answer so many things that you are asking me right now because some of you that are watching this video, you are asking some question within you. There are some questions you are asking. I know that I'm going to answer those questions at the end of the video. I will tell you so many things that you need to know. Then if those questions if they are not satisfactory, then I'm still going to drop my number at the end of the video. Then you can take up from there, right? So for this breakup structure, I hope you understand what all that one means right now on the breakup structure. So let's move to the next parts. Okay, core content number 3. We're still here. So this is in conclusion now of the number 3, which is market structure. In that conclusion, this is price delivery that you can see here, just the way I explain it to you. In the market, this is how market deliver price. I told you people from the beginning that before you be able to read the chart, you need to know how market deliver price, so that when it's delivering to the other side, you will know that it's going to deliver to this side too. So the market move. This is the delivery. Point 1, it move from consolidation. Point 2, it expound. Then point 3, it retrace. Point 4, it can reverse. From this point 4, it can still go back to expansion. From this point 4 now, it can expand. When it retrace, it can expand. It can from this retracement to expansion, right? Then it can from this retracement to reversal, which is what you see here. When it retraces, it can reverse from there. Then it can come from this expansion to reversal, but it will never move from consolidation to reversal. It always, when it's consolidating, it will expand. Anytime you see market is moving within a small range, it means smart monies are accumulating orders. Banks, they are accumulating orders. People are getting it, people are selling, people are buying, people are getting it, people are getting it, people are getting it, people are buying. So when they are doing that, we the real people were waiting. That's why we the real people, we the real people, we are waiting for smart money to distribute those orders. They distribute them first before we get in. If they don't distribute, we don't go. That's why you see when I get into price, it's going to move the way I call it. And when I get it wrong, I will get immediate feedback that, oh, money, you're wrong. Yeah, I read it wrong. Yes, sometimes I read it wrong. And when I read it wrong, I know, oh, yeah, I read it wrong. And I'm not worried because I know that I do this thing more right than I am wrong. So it is just like that. The moment you understand price delivery like that, that when it's consolidating, the next thing it needs to expand. When it expand, it retrace. Then when it is retracing, in the next video, when I get down to the PDRE, when I in that part, when I'm going to discuss so many things, when I get that down to that part, the premium and discounts, when I get there, I will now tell you when price is no, it will move from retracement to reversal. It's supposed to, after retracement, it's supposed to expand, so that when it retraces, it's supposed to break market structure and go again. But when it's reversing, I will let you know further in video when we're talking about premium and discount, which is the PDR rates, all of those things. You will know when price is going to reverse. You will know when price is going to expand. You will know when it's going to retrace. You will know all these things, because if you don't know these things, you won't know that, oh, you have to put some certain things in place. You need to know when these things, you need to know when market is likely to expand, so that time it is when you will see a big move where you can make money. It is from that move that you make real money. That time when you get in, put your stop loss, it's not going to stop, it's not come back, it's not coming back to stop you, because you are in line with IBDA, you are in line with smart money. When they engage liquidities and are moving, when smart money is moving large funds, when they are moving, you follow them. They will never come against you except you are in front of them. When you are in front of the moving train, you always get crushed. So we don't stand in front of them. We don't stay in front of smart money. You stay behind them. So it is when you understand what price is doing, when you can read the tape. If you cannot read the tape, you won't understand what smart money is doing. And this is how you read the price. Consolidate, you move from there to expansion, from expansion to retracement. From retracement, it can reverse. From retracement, it can go to expansion. You know what expansion is. You know what reversal is. You know what consolidation is. I've taught you all those things in the previous slide. So this is how price deliver. This is price delivery right here. So I hope number 3 is clear now. So we're going to talk about the next thing, which is number 4. There we'll go deep into our study. Okay, so we're back. The core content number 4. Risk reward ratio, RRR. So what does it mean? You know, in the previous slide I was talking about, I was saying that whatever I'm doing on the charts, I'm not worried. I'm like, I was telling you that I do this thing more right than I'm wrong. And in what I'm going to discuss on this slide, you will see how powerful is trading when you can read the price action, then you add these things I'm going to discuss here, the risk reward ratio. When you add these to it, to the things that I'm giving you already, just like as we are following this video now, right from that first video, life after school, down to where you install those apps, to everywhere, as you're following it like that, with what I'm giving you here, you are just adding to that, slide by slide by slide. As I'm discussing, the next slide is going to be an advance. Like what I'm going to discuss in the next slide, it will advance this one, like that, like that, like that, down to the top-down analysis. That top-down analysis now, it is now you will now understand everything that I now, all these things that I'm saying from the beginning. On that top-down analysis, you now, wow, oh, okay, yeah, I can do this now. Then you start putting it into work. So, what am I saying right now? The risk reward. What is risk reward? The risk reward ratio, RR ratio, is a mathematical calculation that measures the potential gain of an investment against the risks of loss. It's a key tool for risk management that helps investors and traders understand the balance of risks and reward in a trade. Now, what am I trying to say here? This reward ratio, this is it is a mathematical calculation where you know, okay, you give one, anything you are doing, you know that if you risk this, you're going to make this. If you risk this, you're going to gain this. In those your demo, those things that you are doing, like those things that you have done right now, those your trade that you have already done, and the ones that you are still practicing, whatever you are doing right now, that's your stop loss. I told you people about lot size and stop loss. Now, when I said use 20 pips stop loss and 20 pips take profit, okay, you know what 20 pips is, and you know the lot size that you use on a standard lot size, on a micro lot size, on a mini lot size, or any lot size. You know what I discussed on the lot size. When you go back, if you have forgotten, go back and listen to what I discussed on that lot size. Then when you know what your lot size is, you know what your stop loss is. You know that okay, 20 pips is equal to such amount of money. That's what you're doing. So on this risk reward, there are some things we do in trading that's okay. When you're doing it, you know that okay, you are doing this, you are doing that, you are giving this to take this. So it is just a mathematical calculation that help us to understand our balance, what we are doing. If you are topping the market or you are below the market, you need to know, because you don't trade blindly. This is real business. It is just like when you get into a business, you are doing, at the end of the day, you do your account, how much do you lose today? Like in your own whatever business you are doing, you check your expenses, all the things you do, then you check what is your balance. The same thing happens in trading. You don't trade blindly. That is what so many people cannot do. These things that I'm teaching you right here now, they did not teach me these things at my point when I came in newly like this. And the way I'm even breaking it down for you, they didn't take it down to me like this. I made a lot of research on my own, and this I did so many hard study on this. So what this thing is saying is, you don't trade blindly. Some people trade, they make money, they trade. No, as you are trading, you are checking yourself, checking your balance. Are you topping? You need to know what you are doing. So that is what you are checking under your demo. As you are trading now, check yourself with the concept that I'm teaching you, what I'm teaching you to do. As you are using them, check yourself with this calculation that I'm going to show you here on this slide and the next slide where I will show you the recalculations. Yeah, I'm just explaining it to you. So what it is, that is just what risk reward ratio is. Now, let's go down deep there. The RRR is calculated by dividing the potential profit, which is reward, by the potential loss. E.g., if you risk $100 and expect to make $300, your RR ratio is 1 for 3. This means that for every $1 you risk, you can make up to $3 as a reward. Or if you risk 10 pips and expect to make 30 pips, your RR ratio is 1 for 3. This means that for every 1 pip you risk, you can make up to 3 pips as a reward. A higher RR ratio indicates a better trading opportunity, as it means you can potentially make more money for every dollar you risk. However, risks and rewards are inseparable, and the more risks you are willing to take on, the higher the potential rewards or loss could be. So, what am I saying here? You know, on this calculation I'm going to show you people, what it's saying is, like you say now, for every, if you are using 1 for 3 now, for every $1 you risk, you get $3. But if you're risking $100, now look at those trades that you people took. All these things that I asked you to do, those things were just 1 for 1. You risk 20 pips to take 20 pips. That is what you did. I told you people to use 20 pips stop loss and 20 pips take profits. On those that other trade, introduction to forex, if you look what I told you to do there at the end of the video, 20 pips stop loss, 20 pips take profit. So you use 20 pips to take 20 pips. That means that one is you give one to take one. That's what you just did now. Here, right now, with what I'm going to teach you on this lecture, you are not going to give one to take one again. You're going to give one to take two. You're going to give one to take three. You're going to give one to take four. You're going to give one to take five. You're going to give one like to take 10. We're going to do those shit next year. You're not going to give one to take one. No, that is not. This is real business where you take one, you give one, you take a lot. You give one, you take a lot. So this is the risk reward ratio that helps you as a trader when you know that okay, you can do this thing more right than you're wrong, and you are using a good proper risk reward ratio at your trading. You're good. Whatever thing you are seeing in market, it is just like a game. So if I'm interacting with the chart right now, it is it is just like my that is one of my best, like that is my best, like that's my babe. The chart now is like it's one of my sweet thing. Like when I'm reading the tape, I treat like a relationship, right? Because this is why I talk to that child, this is why I control it. This is why like it is just like a matching, right? So and the moment you know how to control that child like that and you can monetize it, it's just like you are printing money It is there is nothing outside that. You are printing money from your house. That is just it. And how do you find out that this thing is real? It is from that your demo. Whatever thing you are doing on that demo, that is the real thing. The only difference is that account, that trading account now you are using right now, it is a PayPal money. It is not money that you can withdraw. You are using it to train. The moment you master yourself doing this thing and you pick the confidence that you can do this thing alone, you do this thing without me telling you what to do, and you are seeing your progress on that demo. That time you can decide to sign up with a real broker. You make a deposit and start trading. That will be your personal decision when you have seen your progress with that thing you are doing on that demo. And whatever thing you are doing on that demo, it is the same thing you will do the day you will trade with real money. Don't say that because you are learning with that demo, so just be doing. No, treat it like real business right now. Oh, okay, just like you are now an equity manager, you or just take for instance, they just employ you into a bank now. Okay, they say okay, you work in equity management department where people manage funds. That is where you work. Like you are now, or you are managing funds for yourself. You have money that your own personal money that you are managing. You are as a manager, equity manager. Now you are managing it. So that is how you treat that demo account. With this risk reward ratio that I'm sharing with you here, when you are using this risk reward, that is how you move. Then in the next slide, when I go deep, you will see how I explain all these things. So you in your own study, you can still digest this thing, read this thing, know how what I put up here, the text that I put up here, these are your notes that you read, you meditate around them. Then the things I'm explaining, anything that makes sense to you, you add it to your notes. That is the extra thing, for your own understanding. You mustn't really quote what I'm putting it for you here. No, what I'm trying to make you understand is knowing what it is. That is all. Nobody's going to question you. Nobody's going to give you exam to no. The only exam is your success. The moment you are able to do this and you are making it, that is your exam. That is your exam. If you are passing your exam, I'm not going to mark it that you are good or no. No, you will know that you are good. Those traders people who did all the assignment, if it was real money now, it was only Miracle that was profitable that day or the group from that assignment. He was the first person to submit, and he was the first person, like he was the last person I added to that group, and he was the person complaining that he did not understand anything. And he encouraged himself that he was going to watch those videos over and over and over again, and he did. And look at his result. That result, if it was to be a live money, Miracle would have made that $300 that day. And some of you lost how many dollars that day? Check all of you that did it. And whatever thing you are doing right now that you have not submitted, or you have not sent your screenshot to me, or you don't have access to do that yet. And whatever you are doing, following this video or following my lecture, try to check your progress and try to do whatever things that I'm telling you to do. Even though you are not submitting to me, try to check yourself if you are progressing with whatever you are doing on the demo. It is a real business, right? And I'm going to be here to keep you posted whatever thing I'm doing, so that you be carried along. You stay tuned. So let's go into the next slide where we'll discuss I show you how you do your calculation when you are trading, how you calculate your trade, so that you know where you are, so that okay, you are topping, your account is growing. You need to have all these things in your head. So in the next slide, I'm going to discuss with you how you know if you are topping the market. Then you know the strategy. These are strategy you use to top the market. These are the strategy you use to top the market. So let's go down there. Okay, same core content number 4, risk reward ratio RRR. Here we're going to discuss why losing trade will not affect your profitability. From there, now that is the calculation. As you are trading, as you are doing this, you need to check, because you don't trade blindly. One day my cousin, was arguing with me when he was with me, when he was staying with me. He said that this is gambling because he did not understand what I was doing that time. So this what I'm going to the calculation that I'm going to do with you here, and that my cousin, I love it for the fact that he's here, he's part of this free mentorship, he's listening to this, he's doing it now. He would see by the time he start doing it with himself, he will know that he's playing with smart money. And you see how sweet it is with those things I did in front of you there. And that is business. That is business. So now focusing on high probability setup that yield multiple times risk reward is the key. It removes every fear of losing trade and will never affect your profitability. Below are the possible risk reward ratio RRR to use. 1. Using 1 for 2. 2. Using 1 for 3. 3. Using 1 for 5. From there to 1 for 10 and above. And you are going to see those type of setup. I will show you. I've done them there already. With the calculation that I'm going to do with you here, you can go and measure those trades if you have. Those of you that are playing with the chart very well now, like Miracle, God, all of you, Wisdom, Francis, all of you that are practicing now, those of you, if I do not mention your name and you know that you are following up and you are doing all these things that I'm doing, you can go and do your measurement right now as you are trading, right? So these are the possible ones to use so that you top the market always. It is business. So the next slide now we'll go into the real mathematical calculation. Let's go there. Okay, core content number 4, we're still on it. This is the real calculation now. You can see the table here. So what we're doing here is, as an equity manager, let's say you are managing money or you are managing fund, because as a trader you are nobody but an equity manager, just like that. You are like that. You are not just here to make money and run. No, you are not gambling. You are compounding. Trading is all about compounding. You are trading. You can see the name. So now, from what we have here, this is the calculation, and with what I'm going to share with you people here, this is just the rough calculation. Now let's say, okay, we have 10 trade. In the number of 10 trade, this is the table right here. The number, the trade, win or lost. This is the risk. In every trade, you risk $5 for one trade. Then the reward under this place, what you see here like this, the reward for one for 2 is going to be 10. Okay, that is if you give $5 now on this 1 for 2, it's going to give you $10, right? Then if it is 1 for 3, it's going to give you $15. If it is 1 for 5, it's going to give you $25. That is if you give $5, this is the risk, this is the reward. So all these things you see here, this is the explanation of the table. I want to explain the table to you before we start the calculation so that you follow up. Then you are operating with $100 account size. That is, I told you people that your account, that your demo account you created, it's showing $3,000, but don't operate with it like a $3,000. Right now, none of you should trade with a standard lot size again. None of you should trade with a mini lot size again. Before the end of this video, I'm going to tell you the lot size that you'll be trading with. The lot size that you'll be trading with, because right now you are operating with a $100 account. That is the mindset you are using. The demo account you created right now, the minimum account size there is 3,000. That is why you can see, if you watch the video, I was telling you that day that the minimum account size there is $3,000. But we are not operating with a $3,000 mindset. You don't have a $3,000. If you okay, take for instance, those of you miracle you're asking the other day that how when are you going to withdraw the money? So ask yourself right now that that loss side you're using to trade with right now, that account balance is showing a $3,000, right? If you are to start trading line right now, do you have a $3,000 to use as a deposit to use to start your business as your capital? Do you have that size? So if you don't have that size, don't trade with the mindset of that big money. And when you start small, you don't have that kind of amount of money to start in with. You start small and you are using that kind of lot size, that kind of high lot size, that kind of high leverage, you're going to block the account. So all of you are going to operate with the mindset of $100 account. You are going to, with this first thing we are starting up now, we are going to practice to see how we make our ends meet. How these things that I'm teaching right here now, how you practicalize them. Okay, check them. We are going to operate like we are operating with $100 account size. So that is it. Then the table. This is what we have here now. This is the number of trade. Let's say you take a trade 10 times. Out of 10, how many wins do we have here? We have one win, which is $10 right here. This is under the profit 142. Under the 145. Okay, this is how we're going to do the calculation now. We'll do the calculation from this one first. This is 142 now under the reward. So let's say that out of 10 trades, you have 4 winning trade and you lose 6. This is what, according to this table that I put up here, this is what I put up here. This is one win, which is $10. Then let's count the win first. Win $10 here because you are giving $5 risk to take $10 because the risk reward you are using is you are giving 1 to take 2. That is the setup that is giving that you are seeing on the chart. The setup on the chart is 1 for 2 and you see it. You take it, you risk $5 to take $10. So as we're doing that, this is the $10 now. The one win, the other win here, which is number 4. Yeah, it's $10 here. Then the other win is number 7, it's $10 here. Then the other win is number 10, it's $10 here. So we have 4 wins out of 10 trade. We have 4 wins. Then the 4 wins now, 1, 2, 3, 4. 10 times 4 is 40. Okay, let's count the losses now because you risk 5. On number 2, you risk 5 to take 10. You fail. On number 3, you risk 5 to take 10. You fail. That is $5 loss. Then on number 5, you risk 5 to take 10. You fail. Then on number 6, you risk 5 to take 10. You fail. That is $5 again. A loss. Then on number 8 and 9, loss. Then the total losses now out of 10 trade is $30, right? The total loss now is $30. Okay, now let's finish this part right here now. With all these things as a trader, you are trading with all the things you are doing, with all this number of losses, you still have $40. Okay, let's look up here the total profit minus total loss equals to net profit. So the number 1 that we're using here, which is 1 for 2 here, that is it here. 1 for 2, which is number 1, using 1 for 2. Now, this $40 total profit here minus this total loss, which is $30 here. 40 minus 30 equals to 10. So that means with all these 10 trades you take, you are wrong. You are wrong 6 times. You just win 4 times. and you do your calculation, everything, your account balance shows $110. You are still good. You are still good. Even though you did not really make so much money yet, too. You have not made so much, but that account, that account they give you $100 account. The account is not dropped. The account is still there. It's still okay. You make it just $10. You have so many losses, oh, but $10 is still up. That is what this one just said. If you are using 1-for-2 risk reward ratio in the market, that is if you have those kind of losses, that's what will happen to you, right? Then let's calculate 1-for-3 now, which is this one, when you are giving 5 to collect 15. So all the 4 wins result to all the 4 wins now all the 4 wins result to $60, because 1, 2, 3, 4, 15 times 4 now is 60, right? Then the losses is still remain the same. You are still risking 5 to take 15, and it's working. Out of 10, it works 4 times, it fails 6 times, and you're not doing your calculation. You go, after all, you still have 60 and you have 30 here. Okay, let's do the calculation here now. The total profit minus total loss, which is equals to net profit. Then, which is this number 2 that we're using here, 1-for-3. This 1-for-3. Now, the total of this 1-for-3 here is $60, but the risk is still remain 30. So when you minus this, subtract 30 from 60 now is equals to $30. So at the end of the calculation, after 10 trade, your account will shows $130. After all these 10 trade, you do your calculation, your account shows like that. It is all about compounding. You are not gambling. You are not trying to get rich quick. Trading is not. It's not about get rich quick overnight. You are building something. You are working. You are moving. You are growing. You are taking your food. You are making. You are building something. Right? You are building your bridge. Checking all these things without demo account. It is a skill set that you are learning how to do. You are learning a skill set without demo account. The moment you learn that skill set, you will now be able to monetize it. So this is the calculation I just show with you right here now. So let's now do the calculation of when you are giving 1-for-5 rich reward. You are giving 15 now to take 25. Let's do that calculation now. And I will show you people this kind of setup they are there in the market. And next year you see how we're going to trade them. Let's check that one now. When you are giving 5 to take 25, you have 4 wins. Only for 1, 2, 3, 4. 25 times 4, which is 100. Then your losses, which is 6 trade. Out of the 6 trade, you calculate them is still $30. Now, when you do your calculation here that we always do, using 1-for-5, when you subtract this 30, which is the total loss here, and the total profit here now, under 1-for-5 is 100. When you subtract this 30 from the 100, it is equals to 70. So at the end of the day, when you do all this your calculation, if you are focusing on this kind of setup, because most time next day these are this kind of setup I will be trading you. The one I will give 1, take 5. The one I even love to take mostly, the one I will give 1, take 10. Once I give 1, take 10, I will go and rest. I will go and wait for another one that will give me 1, take 10 again, I will rest. So even if I have 6 and I myself, with the calculation that we're going to, and with what we do next, check those my trade that I did on when I started my live class. When I started my live class, I was trading that day. I made $27. Then the following week, I made $18. The following day, I made $10. When you calculate the total of these things together, now you can see the calculation now. 27, that day I was trading in the class, I showed you people, I closed the trade with $27. Then the one I posted, which is 18. Then the following one is 10. If you check those trade that I posted, those my live trade, do the calculation of what I did on those trade. You see that, you see like that, because I was showing my account balance, showing how I was trading. I showed you all this thing. So in 2 weeks, that is $55. So as at that time, dollar was 1,700 naira. So when you calculate 55 times 100 and 1,700 naira, it gives you 93,500. Do that calculation now. Go and do this same calculation that I do here with the trade that I put out there for you people already to see. They are not up to 10 trade yet, but I've had 3 wins like that already in front of you people. So out of 10, if you win 4, this is the calculation I'm doing with you right here. And next year, I'm going to show you the one that I will give 1, take 5, give 1, take 10. You will see the set. I will trade live with you people right from the beginning of the trade to the end. So I hope you understand this calculation. If you don't understand it, reverse it again. You will understand it. Now, what of the time when you are winning 5, winning you win 5, you lose 5. You now add a calculation on that one now. This total profit is going to increase. This one will increase. This one will increase. This one will decrease. The moment you have 5 wins, you have 5 losses. Your risks here, the total loss here will reduce. Then the total profit will increase. That's how you calculate it always. So this is a skill set where when you understand that, okay, this thing, I myself understand, I do it more right than I'm wrong. And with all these strategies right here, how to the trade, it removes every fear of losing and whatever. And that's why when Wisdom, one of my students, he knows, he's listening to this now, he'll be laughing. When the trade was coming against him, he was afraid because he didn't understand all these things, all these strategies. And today now, he will understand this. And those of you that are watching too, we learn from that. The same thing in your trade, you add it to that. This is the skill set. This is the power. So I hope you all understand what a risk reward ratio means now, how to do the calculation. And this is what we're going to be doing all through next year. If you don't understand anything, if this particular part, the calculation or anything you don't understand, note it down in your notes. Then those of you that don't want to message me in the group, it's fine. You can DM me, put up your question there. Then those of you that are still active on the group, put up the message on the group there. We'll talk on the group. Then those of you that don't have my number yet, look at the email there. It's always there. I've said it already. And at the end of the video, I will drop my number. So I hope you all you understand what risk reward ratio means and how we can help you in your trading, and you will see how I'm going to trade with you using this thing. I will tell you this, that, and I will still take it in the chat to show you all of these things. So I hope you enjoyed this. Let's go to the next one. Okay, it is called content number 5. So actually, what I want to share with you on this particular slide, it is something that I learned very late in my journey when I was learning. Right? This particular slide is like, it's like a course on its own in trading. When it comes to trading, what I'm going to share with you here in this particular slide, it is like a course, a different course on its own. Something that you study lately when you have learned how to trade and all of that. But I'm giving you right now as I just coming in, because I told you people I don't want to. I want to pass this to you people as soon as I can and see you people doing it just the way I'm doing it. Let's start getting our shit done for ourselves. That is my plan. So I decided to put everything in here. That is why I call it Trading Bible. Everything is here, right down to the entry points, to the execution, exit, That is your take profit. All of that is here in this video. So this particular one is is just like a takeaway for you. Is a bonus, right? So no matter what you are doing in trading, no matter what you're doing in trading, what I'm going to discuss with you here, if you don't have it, you will not reach profitability. You will not reach success, right? So I love it that here is all about management, and um, I'm a business management student, and I am also happy that most of my fellow students that are listening to this right now, they will they will perform very well in this. I trust my people in this one. So I believe they have advantage over every other student that is listening to this right now. If business management students have higher advantage over the things that I'm going to discuss here. So let's start. It is management. Management. What is management? Management it is a coordination and administration of tasks to achieve a goal. In trading, management is one of the key factors that gives birth to a successful trader. Always apply the following strategies in every single trade. 1. Trade management. 2. Risk management. 3. Money management. Okay, you see these three things that I have right here. Like I just said earlier now, without management, if in anything you are doing, even in your business, whatever thing you're doing right now, those of us that are students and will have something doing already, and there are some people outside the school right now listening to this. Whatever business you are doing, if you don't have this, if you are not very good in these three things that I put up here, if you're not conversant with these three things that I put up here, I don't think you grow well in your business, whatever business you are doing, being trading or not trading. You If you're not good in these three things I put up here, that your business, um you won't do well with it. Yeah. So with what I'm going to discuss with you in in the next slide, I'll break all of them down in the next slide. Then you will see how powerful these things are in trading when you can do this thing properly, applying what I put up here in trading. So let's go to the next slide to talk about them. Okay, core contents number 5, one of 3, which is trade management. Trade management begins immediately after your entry stroke execution down to the point of exit. Take profit. Do the following in every trade. 1. Always take profits at the midpoint of the trading range. 2. Always take profit at 20 pips. 3. Always adjust your stop loss except to break even after taking a profit, after taking a partial profit. So what am I trying to say here in this slide? This is trade management, right? You can see what I was doing in those my live trade, how I was trading. The moment you get into a trade, these things that I'm teaching you right now, I want you to apply them to your trade immediately. I don't want you to have issues. I don't want you to start losing trade before you apply these things. That's why I'm giving it to you right now. During my time, they didn't teach me all these things from the beginning. You will be losing trade before they teach you trade management, money management, and risk management. It is a course on it. Oh, you learn again. You spare another money. All of these things, and these are the things I put up here for you in this Bible. So in trading, the moment you get into a trade, you don't just relax and say, okay, because you buy it or you sell it, you don't wait for it to run till your TP and you just no. Some people, that is why so many people are not profitable. When they get into a trade, they just wait, they think the price will just run to that place for them and they will get out. No, you have to manage the trade. It is from that management that you make. You can see those my live trade that I posted. The one I said how I made your 30 days income in a day, part 1, part 2, and Smart Money Mindset, you should all have part one, part two. Those videos, when you watch them, you will understand how I was managing my trade. And immediately I left those trade, you will see what happened after on. Because it is because of the management. Sometimes you are supposed to lose money in the market, but when you manage that trade properly, you will not lose anything. You even make small money. And sometimes you will make, you will plan to make like $10, and if you manage that trade properly, you will make more than that just with that same entry if you manage it properly. So there are some trade that may not be profitable when you get it, but if you manage them properly, you will still be able to get money from that move. So what do you do in under trade management when you get in? What do you do? These are the things I put up here. This number three. This number one, what do I mean? They always take profit at the midpoint of the range. What do I mean by that? This means if you are trading a range, maybe that range is like 40 pips. You will understand anything I'm discussing in this video. I believe people already know what I mean by pips, because I put all those things in the previous lecture, which is Introduction to Forex. So that trading range, the range you people traded in the assignment is 20 pips range. That is 20 pips range. All of you, I asked you to take a trade, use the 20 pips stop loss and 20 pips take profit. So that take profit range, it is 20 pips range. So that is the trading range. Now, if with what this number one is saying here is, as you are trading that 20 pips range, when you run 10 pips, you need to take profit at 10 pips. That is if you get in with two positions. When you run 10 pips, you take one off, you take profit from one, take money into your account. It is that money that gets into your account that is your own. The one that is still running in the market is not your own yet until you close it, it entered your account. You can see when I was trading that day, the money will read like $100, it will drop because I have not closed the trade. So if I do not close the trade, that is how it will stop running. It will keep running. It will be swimming inside my profit, decreasing my money, increasing it, decreasing it until you close the trade. So what this number one here is saying is, under trade management is, if you are any range you are trading at the midpoint of that range, that is the 50% of that range. If it is 20 pips range, it means once you run 10 pips, you take profits. If it is 40 pips range, it means once you run 20 pips, you take profits. Then you leave the other one to run. So you always take money into your account. It is that money that get into your account that puts in more energy to your account. When I was trading that day, Wisdom quickly understand what I was doing in class. That day when I said that I have taken one position off, I've taken partial. He now said that one now add more strength to my account. He quickly, he was, that was the first class I had with them in school that day, and he quickly understand that part. So it is that money that you take in, that is that one now wage your account. It increase your account size. Then you have more weight in the market. You have more legs in the market. So you always take profit like that. Then this number two says always take profit at 20 pips. So what is the difference of this one now? The difference of this one is whatever range you are trading. If that range is 30 pips, if it is 40 pips, if it is 50 pips, if it is 60 pips, if it is 100 pips, once you run 20 pips, you must take profit. If you are in with two position or more position, you take profit from 20 pips into your account. Then if you run to the 50% of the range, if the 50% of that range is more than 20 pips, you take another profit. Because if you leave those trade open like that, sometimes the market retrace. That retracement, like somebody like me now, I don't like giving up my profits when I'm trading. Once I make money, I don't like giving it up. So I love to take money into my account. Let me know that, yeah, I've secured money, whatever it is. I've banked something. I'm in the market. I've banked something. Oh, even though if I don't make much, I've banked my transport to the market. So what you are doing is you are banking your transportation because you go to the market. Even though you are in your house, you still assume like you are in the market. You spend money to get in your hair. So you calculate all these things. Okay, are you getting you take money? Okay, this my transportation, this my workmanship, this hey, you are in the market, you are working. You need to pay yourself as a trader. You are working. So this is your own thing, this is your business, you are the CEO, you are the one now influencing everything. So as you are working, you take money. That is what this one always say. Then number three said adjust your stop loss. That is said to break even after taking a partial profit. If you see those my trade when I was trading, those my live trade. That's why I said after this lecture that all of you would love to go and scatter all those videos, watch them over and over and over again, so that you get these things, you digest them. You will see how I was trading that day. I did all these things. I applied them in that my trade. Immediately I got into that trade. I took one position. I took some position off. Then I took something off from 20 pips. Before 20 pips, I took something off. Then I adjusted my stop loss to break even. Whereby on this break even, take for instance, you know those trade that you people took that I say use 20 pips stop loss and use 20 pips take profit. Let's assume that as that trade run 10 pips from your entry in your direction, you now move your stop loss from 20 pips down. It's no longer 20 pips again. You have reduced it to 10 pips, or you have reduced it totally into your entry point or below your entry. If you are short, when I say short, it means sell. If I say long, it means buy. So when I go into the chart, you understand all these things more. But these things that I'm explaining here, they are in those my trade already. Those my live trade. I use them there. You will see when I was talking about break even, I even wrote it. This break even that is right here now, I wrote it. Break even SL, I wrote it in when I was trading. That's why all the lines I was drawing in those my trade, I was writing something on those lines so that you people will understand that I will be referring to these things. That is the reason why I was writing anything I was doing, I was writing something on them. These are the things you people will refer back to now. And I will do this thing over and over and over again next year. And next year I'm going to do it. I don't want you people to sit on the side and be watching me. I want people to be able to do it at that point. Let us doing let it be that all of us are doing the shit together. It is not just only me that is playing in the field. Then you will now see the power of this thing by yourself. That's why I am trying so hard to make sure I release this video before we get into New Year, so that you will digest these things. Or because we don't trade first month of the year, is we don't it's part of this lecture under the rules. You get it there. So you're going to use this period to digest all these things, get yourself prepared for our trading from February. We're going to get things done, a whole lot of things from there on. So you you be watching and studying, digest this information. The basic thing you do is to digest these things so that you don't forget anything. If you forget these things, you will not be able to trade, because when you are in the market, when you are looking at that chart, it is the things that I'm telling you now that will be singing on your head. It is this thing. Look at what Miracle did. He did exactly what I said, and all of you saw his result on the group that day. So if you follow exactly what I'm giving you to, that is the result you will have. You are going to have exactly the result, because the things that I'm telling people to do are what I am doing. So you will have the same result that I'm having. But the moment you are struggling with it, you are doing outside what I'm telling you to do, you will now have a different result. That is why you see when Godwin and Francis and other people, when they started sending their screenshot, they were making mistake and they were not following what the video taught. So they did not get it accurate. And now I am so happy that all of them they later realized and they went back to study, and I love what all of them are doing right now. So all of them are going to jump on this video. Those of them that are familiar with those 9 videos already will be they will love this one. But those of you that are still struggling with them, you will not enjoy this until you conquer those ones. Hey, this one nice is a compliment. So this is what trade management is. I hope you understand it now, and if you don't get it, you can still reverse it. all right, the things I said about trade management. So let's go down to the other number. Okay, core content number 5, 2 of 3, which is risk management. Risk management. What is risk management? When we talk about okay, risk management now in trading. Risk management begins before the point of entry or execution, down to the point of exit. Take profit. Notes. Now, before I talk about this note, let me explain to you what this risk management is saying here. Risk management begins before you get into that trade. You have already done your risk management uh, thing, or everything you have done it. Before you get into that trade, you already know your account size. Okay, if you are trading with what is your account size? If you are trading with $100 account, you know that you cannot trade with a standard lot size. You cannot trade with a mini lot size. You trade with micro lot size. As a very good risk manager, you trade with a micro lot size. 1 micro, 2 micro, 3 micro, 5 micro. Then you build it up. When you take it to a level, then you can trade with a mini lot size. Like me now, I can trade with, even with that account I was trading with the other day in class. I took the account from $50, $54 to 90 something dollar that day, within 2 weeks that day that I did. That is almost 100% of that equity. But I did that shit with high level of experience. You that is just coming in right now, you cannot trade with $100 account and you're using a mini lot size. No, that doesn't show any sign of risk management. It is your experience that will give you the confidence to put in more money to whatever you are doing. But as you're coming in right now, whatever thing, even in that your demo account, I told you that you have created it, it's gonna be like $100 account. So before the end of this lecture, you will know exactly what you should be doing. But what risk management is talking about is you put this into consideration before you get into that trade. Once you are doing your analysis, you see the setup, and you know that you are going to trade tomorrow or so day. The trade, once you get here, you get in. You already know that okay, when you get there, this is the amount of money that I'm going to risk. And that money, it is not something that will weigh my account down. It is not something that will affect my account. You already know that. You have done all these things before you get into that trade. And you have already weighed the outcome of that trade, that okay, if the trade comes against you, okay, total amount of money is going to go out of that account. But if the trade goes in your favor and it pans out, total amount of money is going to be added to your account. You have already done all this calculation, you have done this work before you get into that trade. That is what risk management is saying. So note, number one, always respect the risk side of the trade over the profit. What this number one is trying to say. Now, you always respect the risk side of the trade over the profits. What does it mean? If you are trading right now, some of you, some traders and the gamblers, they don't respect the risk side of the trade. They feel okay, when they risk something, they are risking a whole lot from the account in anticipation of a higher profit. They are only thinking about the profit. Okay, take for instance, you want to make uh you want to make like $20, and you are risking a $50, or you are risking $30 to get 20. That is what Francis did from the assignment he sent to the group that day. When I saw the trade, he opened a risk of 30 pips as stop loss. Then his take profit was about 15 pips. So what he was doing is that is gambling. That is what this side is saying now. You are risking like $3 to take one or to no, that is not business. You don't give too much money to take small. No, you give small to take much. That is what business is all about. Whatever money you start a business with, your aim is to build up that money into a bigger money. That is the aim of that business, and that is what trading is all about too. So whenever you are risking anything in the market, first of all, you respect what you are risking. That money that you are risking, know the value of it, know how much it is before you risk it. You respect the money. It is not a profit. You are not thinking about a profit, okay, because you want to make $100. Then you forget that you trying to make $100, you are risking something. You forget that risk, then you are hoping on that $100. The moment the trade comes to get you out of that trade, now you get upset because you cannot manage risks. That's why so many traders they can't trade. They are just gambling. I can never lose a trade and I will be upset about it. No, I will never lose a trade and I will be upset. No. When Francis was here with me the other day and I was telling him that I just left $9 in the market right now in the morning. I told him that I just left a $9. Like I just lost $9 in the morning. I told him that was in London session. So I told him that and that is because I know that $9 they took from me compared to what I've done in 2 weeks is nothing, right? So I, this is business. So when you are risking something, always respect the risk side of it before you think about the profits. Don't say because you want to make $100, forgetting that you will lose a $20. For you to make $100, you will lose something. Oh. If it does not happen, oh, you need to know, right? So don't always forget. Respect the risk side over the profit. You don't even think about the profit. The profit can just be like, oh, okay, if it comes, fine. But if it does not come, that money you know that is going to leave your account. You need to know it. That money I told Francis, the $9 I lose that day, I already knew it that if the trade did not come in my direction, it will not pan out for me. $9 will definitely leave my account. It is well budget. It is well budgeted, right? So let's talk about number two here. The thing that you know. Number two said do not over leverage your account in anticipation of higher profit. Almost the same thing with that first one. Don't over leverage your account. What do I mean by over leverage? Now, that account you are trading with right now, those of you that are doing demo now that you have created a demo account already, it is $3,000, right? And I told you that it shouldn't be $3,000. It's we are operating with $100. And now I told you $100 account, you cannot trade with a standard loss size. You cannot trade with a mini loss size as a good risk manager. Now, the moment you are violating these rules, you are increasing your loss size. You are now over leveraging that account. That account now, any little retracement in the market, just like wisdom, when you were in the trade that day and the trade was retracing against you, that retracement, if you over leverage your account cannot withstand that retracement. So the reason for this risk management, it is for you, for your account to withstand any kind of retracements that may come in the market. Because market retrace, I've already told you people market structure. I've taught you what market structure is. So a retrace. So if it is retracing and you are in with a very large lot size that your account cannot take too much of retracement with that lot size, it's gonna blow up that account. So this is this over leverage. These are the things. These are the traps that I'm telling you right now. These are the traps in the market that I'm showing you. The things that will hinder your profitability are the things that I'm sharing with you. They did not share these things with me as early point of my mentorship. And I like I told you earlier that I don't want after this video, all I want from you it is to come on board for you to prove to me that oh yeah, Money, thank you. I'm done. Like I can do this right now. I'm just thank you and I'm good. That is all. Nothing else. So these things are the things that will hinder your profitability. If you cannot manage risks, if you cannot manage a trade, no matter how you are not a good trader, you are not even a trader. You are a gambler. You are not a trader. So that is just it. Now, number 3, when you have a record of losing trade, reduce your lot size to 50% of the initial loss incurred. Always. What is this number 3 trying to say? What this number 3 is saying is, if you have a record of losing trade, take for instance, if you are trading without your $100 account right now, you take a trade, first trade, because we are risking $5 from that $100 now, we are risking $5 to take 10 or to take 15 or to take 25 or to take more. So assuming you risk 5 now, you lose it. When you lose that 5, the next time when you want to take another trade, you will not risk 5 again. You will risk 50% of that $5 that you lost before. 50% of that $5 now is going to be like 2.5, right? So that is going to be a 2 micro lot size now. So what I mean by reducing your lot size is, take for instance, when you go into that trade, you use a 5 micro lot size, then that trade you lose it. Now, when you want to take another trade now, you will not go with 5 micro lot size again. You will go with 2 micro lot size. You reduce the lot size so that you are not, that your account, that is the bullet, that is your bullet. It's just like you are a warrior and you go for war. If you don't manage your ammunitions, if you don't manage your bullet properly, when you get out of bullet and your enemies are still around, and how do you do it? So if you waste your bullets in the market and you are out of bullet, you are out of, like, maybe you are like, your account now is not sufficient for you to trade again, then you start seeing good setups, nice setup. That time you don't have money to risk again, because you are not managing the account properly, you are not managing the risks properly. So when you give out all these things, it is just like you now try to kill a bird, and when they are flying, when they are not settled, they are flying, and you are shooting, you will hardly kill. You will waste a lot of bullets. And when you waste a lot of bullets, now maybe by the time they settle, now when you can target and fire, at that point you don't have bullet again. What causes it in the market? It is what I'm sharing with you right here. When you lose a trade, you don't continue to risk that same amount of money. Take for instance, if you risk $10 now on this trade, you lose it. When you want to take the next trade, don't risk $10 again, risk $5. Then when you risk that $5 and that $5 pounds out, it's gonna give you back that first money that you lose. Then when your account come back balance now, you can start to risk the normal risks that you always do, which is $5 that we're going to be risking from that $100 account. The moment we take that $100 account to like 150, then we can now trade with a mini lot size. You people will see how we're going to do this thing without your demo account next year. We're all getting into field to work now. You will see what you will do with yourself. You're going to do all this thing, do your calculation. If you are progressing or not, you're going to measure yourself. That's why I told you people, this one right here, it is that nobody's giving you exam. I told you people that from the beginning that the certificate that I'm giving you here is fucking bigger than the teacher certificate you're gonna get from the university you are here. This certificate I'm giving you here, it is your success. The moment you see your success, that is the certificate. No one is giving you exam. You're the one that is giving yourself exam. You're the one that is issuing that certificate to yourself. I've given you the ingredient, everything already right here. I've shared with you. So it is left for you now to say, okay, yeah, I want to end the certificate. I want to gain it. Then you put a little work, you do it for yourself. The one is you are measuring it. You are not trading blindly. As you're trading, you are checking yourself. Okay, are you growing? Are you moving with it? Then you are going to be confident when you're able to do this thing properly. When these informations are in your head, you don't need to wait for me before you trade again, and you are trading, you are profitable with the things I give you, you are good. So these things I share with you here, these are some of the powerful strategies you use as a profitable trader, as a professional trader, as an institutional trader, because we trade like banks, exactly the way banks trade. We are equity managers. You are not just somebody that make money and you run away from the market. No. If they handle money, if they give you money right now, can you handle it? Can you manage it? Can you manage that money? So these are the things I'm sharing with you here. So let's go into the next slide where we discuss money management. Okay, core content number 5, 3 of 3, which is money management. Okay, money management begins before the point of entry, execution, down to the point of exit, take profit, and remain in play after your exit. Do the following in every trade. Now, before we go into this part, let me explain to you what this money management is saying here. Money management begins before the point of your entry, and even after your exit, when you get out of that trade, you are done, you close your everything. Money management is still in play. Every time when you make withdrawal, money management is still in play. You don't leave money management at all as a trader. Every time, even when you finish trading, you will make withdrawal into your account. Money management is still in play. You are managing that money. When you make a withdrawal from your trading account, you have routine. There's a time when you are supposed to make another withdrawal. You have to do some. You have to make another trade before you make another withdrawal. So that withdrawal that you make, you have to manage it properly so that you don't go and stress your account again. So this is what this money management is trying to say. Money management, it begins before the point of your entry, and it is still in play after your exit, after you close the trade and everything. That money management is still in play. That is what it's saying. So do the following in every trade. The money for every trade should be well planned and budgeted. That's number one. The money for every trade, before you, like I said in the previous slide, before you trade, before you get into any trade, budget that money. Like, even though, as I was saying, as I was trading, that if it was just my live trade, I was saying it that this trade, if it stop me out, this is what I'm going to lose. If it goes in my direction, this is what I'm going to make. I was explaining to you people while I was trading. I was telling you all of that. That is that money that I put in on that chart. It is well planned and budgeted before I came on board to trade. That is what this one is saying. So you always do that before you trade. Then number 2, always make withdrawal whenever you make profits. Always. I don't joke with this. Anytime you trade and you make money, make withdrawal. Make withdrawal. Pay off yourself. That is how you know that you have done something. I'm not somebody that if I make money I'll just be looking at it. No, I don't teach investment or where you store. No, when you do it, pay off yourself so that you know that you have done something. You just work, right? And you need to eat. So always when you trade, make withdrawal. Make withdrawal. Number 3, always save money for another trade from the initial profit made. This is called taking power. Now, what I like I said from the beginning of this particular number, that the things I'm sharing with you, they are powerful strategies. So many. I told you that some of you that are here listening to this, as a trader, you have been trading and you are listening to this, you will discover that there are some things that I'm saying here that you have never heard before. And when I get down into the full, like, there's a place I'm going to right now. After this slide, the lesson is going deep, 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 deep to where You, even though you have been trading in this industry for years, there are some things I'm going to be talking in the next, maybe when we get them there down to the PDRA part, you would understand that, oh wow, this is different, really. So now, this number three, what is this saying here? This is one of the powerful strategy that we use, right? I personally learned this strategy from my mentor, Mr. Patrick, the one that introduced me to ICT. He's the one who shared this with me, right? This one, he did not. I think he learned that one from his own thought process shared with me. Just like there are some things that I'm sharing with you people in this mentorship that I learned myself in trading. So now, what this taking power is saying is, anytime you trade and you make money, you make withdrawal, that money that you make, save money in that your account for another trade. I was telling you that day in those my live trade that if I come to trade the following day, that I will risk $5 from this profit that I made. Or I was saying something like that. If you go back to those trade, so that is taking power. Take for instance, you take a trade now, you make $20. That $20 you make, maybe you withdraw like $10. Then it remains $10 in your account, in your trading account. So that $10 that is remaining, it is a taking power. So if you are going to trade next time, it is from that $10 you risk from. You see now, you are not going to risk from your initial account balance again, because your account balance is top up already. You have something on top of your account right now, which is $10 profit. So when you come to trade next time, you're going to risk like $5 again from there. So that is taking power. So you don't make money and you withdraw everything. Or when you withdraw it, you finish it, you come back and withdraw another one while you have not made another one. No, we don't do like that. That is not money management. You have to be disciplined. You have to be strict. When you trade, you make withdrawal, you must make another one before you make another withdrawal. Right? So you don't make money. You make money. The one you made, you you spend it all. No, we don't do that here. As a professional trader, you keep your taking power for next trade. So that way, you now relax. That's why you see when I'm trading, no matter what that chart do today, there is nothing that chart will do today that I will be scared of. Nothing. There is nothing that will happen on that chart today that will, that will, that will, that will like, wow, nothing is going to wow me on that chart again. On nothing. I've seen a lot of wow on the chart already, and nothing is going to scared me there. Why? Because the only thing that scared people from the chart is fear of losing money, fear of losing trade, because they cannot trade, they cannot manage these things properly. So they always have that fear. Now, what remove that fear? It is when you have your taking power, just like when you trade now. I was telling you something that there are some setup when you give like $1, you take 10. We give $10, you take 100. That is the kind of trade I was looking for that day, but the market was consolidated, so it didn't really run like that. And next thing, you will see those kind of setup when I will get into a trade, I will risk $10 and I will take 100. I will risk $5, I will take 50. You see those kind of trade. I will risk 5, I will take like 25. That is like giving one, take 5, give one, take 10. So when you take a trade like that, and you now save money into your account, you make withdrawal, you pay your bills, do some stuff you want to do those things, then leave the another money for that your account. So when you go into that chart to trade again next time, you are not you have bro, you made money last time. So I'm playing with my money, so I know what I'm doing with my money. So I'm not scared, right? It is my game. I know it. So this information I give you here, this is how you do it. This thing, if you use these things the way I'm giving it to you, and you witness this thing, check your result. You see your result by yourself. This is the same way you pick that confidence. It's going to come naturally into you. It is from your result that you gain that confidence, and it is that confidence that give birth to your success. So I hope all we have discussed on that management is worth taking, and anything that you don't understand, you can just reverse it as usual. So I hope this one here is, you people see, just like I said, it's like a takeaway. It's like a bonus. This thing is something that when you learn how to trade, you are trading, you are struggling, you are struggling, you are struggling. Before your mentor will now come and tell you to do all these things that I'm telling you right now. That's how a lot of people do it. So I shared them here. This particular one, take them, and anything I'm discussing in this video, none of them is optional. None of them is optional. None. It is something that you take your time, digest them, just the way I'm giving it to you. Like I said, I've given you the code already. I've given you the code already. How you do it by your notes. You extract the information first and all of that. You can still go back and see. If you are still watching and you are not with your notebook, you are not in school. Anytime you are coming to this channel, you are coming here like as you are going to school, because you are coming to learn. That's what it stands for. So let's go to the next uh, core content number, where we'll talk about the other things that we have. Okay, core content number 6. Okay, this number 6. We're getting in deep into what smart money is all about. The Bible is going to be very, 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 very much interesting now. If you're a trader that have been trading already in the industry, and you have been following up now for more profitability, all the things I've been discussing, if they were familiar with you, this particular part is going to be strange. It's going to be changed to all of you. And I've used those things in those my trade already. So as I'm going to be talking about them here, you get familiar with them as well. So let's talk about what premium versus discount is. Premium versus discount. Premium versus discount. This is where the real smart money work begin. This is where the real smart money work begin. This is how smart money engage. This is how they start their work in the market. This is how they operate. So let's know what it is. Smart money engage price from premium to discounts, and discount to premium in rotational form. Always. Smart money sell at premium and buy at discount. This means smart money sell a pair when the price is high and buy it when the price is low. This is one of the logic always used by smart money. Smart money sell above old highs and buy below old lows where the liquidities are resting. So what am I trying to say here? Here is in the market, there's something we have that is called premium and discounts. That's why anytime I'm talking about PDRA, that PD, it comes from this premium and discount. The P stand for premium, the D stand for discount. So when I say PD arrays, I'm talking about premium discount arrays. So it is from here that we'll have those things, and I'm going to talk about those things deep now when we go into the next slide. So smart money always engage price from premium to discount. When it is trading at premium, that's when they sell it. Then when it is trading at discount, that's when they buy. It is just like when you want to buy something now. You buy something when they sell it to you at discount, right? When they sell it to you at when you are buying it at discount, you buy more. That is when you love to buy. Just like like um like rice, let's say rice right now towards Christmas, and there's a season for rice and there's a season for every other uh, food that we eat. There's a season for them. There's a point where you see that those food will be available at discount. Then at that time people buy more. Then if you want to sell something too, you will sell it high. You sell it high when it is high. That's where you sell it. You sell it at premium. So that's how smart money engage price in the market too. When smart money want to buy, they buy it when it is low. And when they want to sell it, they sell it when it is high. So when you see price that is running up in the market, is running high, 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 I know that smart money, they want to do something, they want to sell it. And when it is dropping, dropping into a discount, they are going to buy it. That's what this one is saying. So smart money buys when the price is low and they sell it when the price is high. So this is one of the logic that is always used by smart money. They sell above old highs and they sell and they buy below old lows. That is what they always do. So this premium and discount, it is what the retail traders refer to as um, support and resistance. Support and resistance theory. So here it doesn't operate based on support and resistance. It is based on premium and discount. That's how smart money run it. So here you take note of this. Take note of these following things here. Note: do not engage price when it is trading in between these two levels, premium and discount. That is what this number one is trying to say is don't engage price when it is not trading at premium. Don't engage price when it is not trading as discount. It must be trading either at premium or discount. If it's trading in between the range, and I'm going to show you people the discount and premium on the chart. When I take you to the chart, I will tell you what I call premium and discount in the market, in the forex market, because I'm taking you down to that level in this lecture, right? So this is what this one is saying here. Don't engage price when it is not trading at premium or discount. Don't engage it. Number two, only engage price when it is trading at either premium or discount. Yeah. So that is only when you engage, when it is trading at either premium or discount. That's when you engage. And I will tell you how to engage from each of them. When it is trading at premium, you are supposed to sell. When it is trading at discount, you're supposed to buy. So let's talk about number three. Number three, big up move in the market begins from discounts. Number four, big down move in the market begins from premium. So now, what this one means is, this number three, what it means is, if the market want to always big up move, if the market want to run up for a very want to run very well up, it begins from discounts. Then if they want to sell it down for it to run down deep, it begins from premium. So and when I take you to the chart, you see all of these things that I'm talking about. So this is what premium and discount is all about. Premium versus discount. This one is all about. I hope it's worth taking now. Now, as I'm going deep to the next slide, I'll talk about the things that fall under this premium and discount. We'll talk about the smart money footprint. So we'll see you there. Okay. So core content number 7. This is where we now the premium and discount arrays. This is where we have them now. So in this particular one, you will see the power of these things that I'm going to share with you in this one now. Already, I've used these things in front of people in those my light trade. You can see how powerful this thing is there. And so many of you were asking me, Monday, when are you going to tell us about PDRA? You are PDRA, Monday, when are you going to tell? Today is here. Just as simple as I'm going to pass it to you, you will see how powerful this thing is. Right? So the premium and discount, they have arrays. Each on premium, there's an array for premium, there's an array for discount. So this is what it is here. So let me explain to you what is premium and discount arrays, which is PD. What is it? They are the tools used by smart money to deliver price every single trading day. There are 7 PD arrays used by smart money to deliver price in the market. In this lecture, we are going to discuss 2 of them, which are order block and fair value gap. These 2 PD arrays are frequently used by smart money to send price from one place to another in the market. So what am I trying to say here now? This PD array that I always talk about, when I say PD array, I'm referring to premium and discount array. That's what it means. PDA. So in the markets, you see how I was using those things that day, and every single trading day, like every single trading day, these things happen. They are in price every single trading day. There are 7 PD arrays used by smart money to deliver price. I told people there is an algorithm, interbound price delivery algorithm. So the algorithm use those tools to deliver the price every single trading day. So those of you that have been trading before, you don't know there is an algorithm. So many people believe those candlesticks move based on buying and selling pressure. No, I've discussed that earlier already. So here now, these are the tools they use. And these 2 of them that I'm going to share with you here in this lecture, you see the power of these 2. All the things I've been doing with people are these tools. I've not traded with any other thing apart from these 2 tools here. So now, how do you read price action to identify smart money in the market? How do you know that smart money is in the market? How do you read the price action so that when you see smart money, when they are moving, when they are in price, when they are currently trading, how do you see them? The moment you see them, you cannot unsee them, and they can never hide anything from you. You are part of the club at that point. So, how do you see them? How do you read price action for you to see them when they are in price? Smart money can be identified in the market through the following. These 2 things that I have right here: smart money footprints, signatures, liquidity concepts. Now, with what I'm going to share with you here, the power that I said I have, I'm bringing that to share with people. Now, when you go into that forex chart, when I'm talking, there was a day I was trading with one fellow trader. He's a trader, he's a senior trader too, but he's not a smart money trader. Let me tell you people, it is not only smart money trader that are making money from forex. Some other traders are making money, but they can't read the price action the way smart money traders are reading it. No, they can't view it like that. So I was trading with the guy that day. So I sent him that the trade. I told him when I got in, he got in too. When I got into that trade, I because I can read price action, I can see their footprint when smart money is moving, when they are doing something in the market, I can see their signatures. So when I see those signatures, I understand their footprints, and I know that this is what they are going to do, and I will leave. And when I leave, you see that something will happen. So when I left that trade, I closed that trade with little profit, but that other trader, I just made it's a trader I met in Makori here when I came. So in school. So he told me that he lost that trade. And I told him that I clubbed that trade with profit too. And I told him I told him that my last statement with him before we left online was I was telling him that that trade, that retracement, because me I can see their footprint, their retrace when they are doing anything. So already I am on break even, just like what I shared with you on the under trade management to take your stop loss to break even. So already I'm on break even. The guy was still on. He has not done anything to his stop loss. He's still there. Then reversal came in. I've already told you about reversal, what reversal is under market structure. Reversal came in because he could not see, like he cannot see the footprint, what not money is doing. It's not everybody that can see. And the thing is clearly on the chart right there. It is only when you can read the price action, then you with the footprint, what smart money are going to do with the things I'm going to share with you here. These two things, these are in the next slide. You see how powerful this thing is. Then with how they use this thing, you will understand that okay, wow, you are trading with big boys at that point. So let me take it to the next point where I break down these two things that I have right here: the smart money footprints, signatures, and liquidity concepts. Core content number 7, one of two. So smart money footprints, signatures. Some of the signatures are these two PDRAs that I'm going to share with you in this lecture, which are order block, OB, fair value gap, FVG. See, I told you when I was trading live that day that most of the things we do here, I use abbreviation a lot, right? So you see, when I was drawing something on the chart that day, I put OB and FVG. It means fair value gap and order block. So you see these two things I have right here. These two things. These are smart money footprints. These are their signatures that we call PDRAs. So with what I'm going to tell you about these things today, with the information I'm going to give you about these two things right here, if you're able to use this thing properly, you don't even need to use the two of them, just one. You don't need to use two. But if you can use two of them, just like I was using them in those videos, I was trading with order block and fair value gap. Just those two things, all the trade. Even those of you that were in live class with me that in school, you see what I was doing. Ever since I've been trading, I've not done anything outside this thing in front of you people, including the one I posted on the group, including the one I posted on YouTube. You see all of them. So you these things I put up here, just one of them is okay. If you can use one properly, it's okay for you to make any amount of money you want to make. You just have to use it and keep using it, using it. And the way I'm going to trade with you people, you'll be able to use the two of them. Because with what I'm going to be doing with it, all of you, it is something that you'll be using the two of them at the same time, almost at the same time. So you'll be very, very familiar with them. So take note of this. Take note of the following. There are two types of OB, that is order block and fair value gap, which is bullish order block and bearish order block. Same to fair value gap. There is bullish fair value gap and bearish fair value gap. 2. Every PDRA has an opposing PD array. That is one PD array for the bull and other PD array for the bear. This means there is other block for buy and other block for sell. There is favor lookup for buy and favor lookup for sell. Always like that. So now, what is this trying to say now? You see this one here. Every thing you see in price, there's always two things, just like the introduction told you that forex is a game or combination between two things. So anything we are doing here, when I say something, there's an opposition for it. When I say something for bull, you know that that thing too is available for the bear. So when you see that other block, there's another block for sell, another block for buy. So every PD array has an opposing PD array, just like I talked about premium and discount. So and this PD array now, you already know what PD array is. Premium, discount. That is what this PD mean. The arrays, these are the signature, the footprint. So now every PD array has an opposing PD array. What does it mean? It means premium PD array and discount PD array. A discount PD array, it is the one that is used to buy. Then the premium PD array, it is the one that is used to sell. So just like we said from the beginning, the bull and the bear. So anything that we are doing, when the bull is strong, the same thing smart money use to move it up. They have the same things too when the bear is strong to move it down. So everything we are doing here is vice versa, right? You can see how when you buy it, you sell it, you will see a down, you see favor gap opposite way, you see another favor gap in another direction. Just how the market is moving. And the way I'm going to break them down in the next slide, you see their diagram and everything, how I break it down in the next slide. Okay, this is it right now. Core content number 7, one of 2, still on it, which is other block, smart money footprint signatures. One that we're talking about, other block. Now, I'm just calling other block, other block. People don't know what other block is. What is other block? You just saw the picture on it. Yeah, like you just saw those things I was doing on the chat that day, and you are just marking. You don't know what is other block yet. You need to know what it is so that you'll be able to spot it out in price. If you cannot spot it out by yourself, then you will not be able to trade it when you see it. You need to be able to spot it out, so you need to know what it is. So now, bullish order block. Anytime you see me, I write something and I put plus on it. That thing stands for bullish something. It stands for bullish move plus. That is bullish order block. So when I put this plus like that, it means up move. It moves for up something. So that is the abbreviation. Then what is bullish order block? The lowest down close candle that is found in the support level. Simple as that. Just try to find it like that. And the way we're going to use it on the chart, you get it. I don't want to put too much of right up here. When I studied this thing, it was, I have, one of the sweet part of this is I have one uh, student here that is listening to this, following this free mentorship. He's part of Tochuku. I always tell people about him. I've already gave him a link to ICT to study this thing direct from there. And somebody else who directed him to me when I gave them link there. They said ICT is speaking grammar. I was telling Francis that day too when I was showing him my notebook. Those things there, I I understand that my student here in school. I know what all of us are passing through already. So I was working, trying to make sure how I can just package this thing in a simple way for you people to understand and start doing a shit. That is just my aim. So I work so hard to make sure I bring this thing down like this. Just the way I put it up for you there. Order block is just the lowest down close candle that is found in a support level. And I'm going to show you what support level is on the chart. I'll show you that okay, any order block you see like this in this kind of level, that is order block right there. And I'll show you all of them. I will take you to the chart after the diagram here. Once I finish all the theory part, I'm going to take you to the chart when I will treat them one by one again. It is the Bible, right? So the bearish order block, what is bearish order block now? You see the way I put it, the short form here, minus OB now. That is the one that go down. The bearish, the one I used to send price down. That is the bearish one. This is the abbreviation for it. Then the what is it? It is the highest up close candle that is found in a resistance level. So resistance, I'm going to show you all of that, what it means. You can see now below are clear diagrams of bullish and bearish order block. So let me explain to you what it is right here now. Now, the bullish order block says that it is the lowest down close candle that is found in a support level. You can see right here now, this down close candle right here, this is the lowest. You can see all this down close candle right here. This one is lower than them. You can see now, and this one is found. This is a support level. This support now, this is a discount. This is a discount. It is something that supports anything that is called support. This is something that sends something higher, right? So this down close candle right here that is found in the support level, it is a bullish order block. That is, you can see the name here. It is a bullish order block that send price high, right? So now the bearish order block. See the diagram of bearish order block right here on this side, which is found. The opposite is the highest up close candle that is found in a resistance level. So you can see right here, this is resistance, which is what? Which is premium. Resistance is something that is when something is going higher. If there's a resistance, resistance will prevent that thing from going higher again, right? So you can see now there are up candle here, but this up candle here is higher than this one, and this one is found in resistance. So that is what is called bearish order block, and it is the one that sends this price down. So when I go into the next slide, I will tell you how you will use them as entry. How do you okay, you see order block now. How do you utilize it? How do you know what smart money is doing with it? Because they are the one doing this stuff right there. So how do you know that okay, this is what they are doing? So when you do like this, I'm going to do like this and I'll follow. Now in the next slide, I will show you their entry points. How do you use these things? Right? So let's go to the next slide. Okay, so core content number 7, still on it, one of two. Smart money footprints, signatures. So on the other block now, I told you that how do you use them? This is where the power is. And something I want to tell you people is in trading, your entry point is the least of the thing. The place that you get in, that very moment that you get in, it is the least of the thing in trading. Your analysis can be excellent, your analysis can be good, everything can be good, but that place that you get in, that very moment that you get in, where you buy it or where you sell it, if that point is wrong, it's gonna mess up your analysis. Because if you get in at the wrong point, that is when you lose money. So this entry technique that I'm going to share with you here, it is a list of the thing. It is a list of the things. So how do you use order block as an entry? If you see other block in the market now, you can't just see other block and you start getting it. How do you use it? How do you utilize it? What smart money do? Let me tell you people now. Okay, the entry technique. When order block is used for a displacement, smart money will capitalize on it to be used for a second displacement. entry. We get in alongside with smart money the moment price return to the order block. Okay, what am I saying here? Now, when you see another block in price like this, when price okay, market is trading down, and you know that you have a discount, and no worry, you people we're going to see all these things on the chart where you mark those things I mark on my chart. That is where you see me marking things. When price, you see, I was saying something in those my record that any level that I mark, if you see a place, if I mark a level, price must respect that place. And you will see how price was respecting to all the things I put on that chart. Go and check them. And you will see more of them next year. So now, price was trading down. Then it got here, it retraced up. It came back into the discount level, which is the support level. This is where smart money comes in. Then they sell it up. They take it up. There was a rally to take out this high here. That is what result to this other block. So if when you see this kind of thing in price, what do you think smart monies are doing? When smart money leave another block like this, price will run away from it. People will keep going, people will be following it. No, we are not following at that point. When it all this up move, no, we are not in. When it's running up like this, no, we are not in. We are not in yet. They need to permit us time to get in. So when this thing happen like this, smart money will capitalize on this other block. They will come back there. Then when they come back there, they rebound. That is when they remove will now begin. So at that point, when they come back that point, for them to to take another displacement, that is the time we now we're getting with them. We're getting with them. Okay, when you get in with them, oh Monday, okay, you the entry, I've gotten the entry. So where do I put my stop loss Monday? Because you talked about stop loss. Because stop loss is for you to protect yourself because you know that you can be wrong. It can fail, yes. It can come to yes. So for that reason, that's why we have stop loss. You cannot give the whole of that your account to the market that if you are wrong, go and check the previous lecture what I talked about stop loss. What is stop loss? No trader that does not have a stop loss. And that is the power. You are the one instructing the child that okay, if I'm wrong, take this from me. Let me know that I'm wrong. So when you are wrong, Money, okay, how do I protect myself now? Okay, I'm in. Where do I put my stop loss so that okay, this is the place. This low right here. Anytime you use other block as an entry on any time frame that we are trading, if you're trading, don't worry, I'm going to talk about those time frame when I go into the chart. I talked about time frame on the previous lecture. I talked about time frame there. Then whatever time frame we are trading, all the time frame has these things that I'm saying here. Or every time frame, monthly time frame, there's an order block on a monthly time frame. There's an order block on a weekly level. There's an order block on a daily time frame. There's an order block on 4 hours. All the time frame I give you, they have these PDRAs. They have order block. All of them. So any of them that you use as an entry, this is where your stop loss will be. And before you do that, you have to measure it from that your entry point to display what is the stop loss. You have to know the number of that stop loss. Then when you know the number of the stop loss, you now convert that number of that stop loss to the loss size that you are using. I talked about loss size already. When you know your loss size, then you know your stop loss pips, you know how much you are in that trade. That's how you know it. Then Monday, I'm in, and my stop loss is there. So how do I get, like, where do I take my first profit? Like, where do I take money now? Because it's going in my direction now, and I don't want to. I need to take money to my account. Where this is it. This first level here. This is where your first take profit will be. When you take that fixed profit, what did I say under trade management? You move your stop loss to break even at that point. Whatever happened at that point, you start going with the market on break even, right? Now, I already showed you here stop loss. Where do you place the stop loss? The low of the bullish order block is the safe place for protective stop loss placements. I already explained that right here. Reverse the same thing for bearish order block. So what am I saying here? Everything I explained to you here for bullish order block, you reverse the same thing for bearish order block. That is what this mean here. So reverse it for yourself. You, you because I already told you that everything this is what we discuss now for bull, which is bullish order block. So you just translate the order, just reverse it for bearish order block. Is the same thing. So you reverse it. I already showed you what a bearish order block is on the previous slide. So the entry point of it to you reverse it for yourself. Now let's go to the next slide where we'll talk about the second footprint. Okay, core content number 7, one of two, still on it. Smart money footprint signatures. So this one fair value gap now. This one, some of you are doing powerful things with this one already. You're spotting out fair value gap. I can see what some of you are doing on the group with fair value gap. So I love that. I love that. But with this lecture now, you will understand what this fair value gap is all about. But if you are just using it right now, you don't really know what it is yet. You watch just my live trade here now. You are able to do some things with them. Now you will know the real power of them. So always we have bullish fair value gap. You can see the short form right here too. It means buy side imbalance, sell side inefficiency. That is BC. What does it mean? Like when I say buy side imbalance and sell side inefficiency, if people are just you are seeing that fair value gap, you don't know what it is, you don't know the meaning, you don't know why they leave that gap open, you don't know why smart money does that, you don't know. So now this fair value gap, you can see right here, this is a bullish fair value gap, right? Now you can see when this price is trading, it dropped this candle wick, this candle trade, it open here, this one open here, it trade up. Before it trade up, it drop here. This gap from this wick to this one, it is a fair value gap. You can see this one did not have a gap. This wick now, it trade into this level again back. It did not leave the body of this candle is traded into midpoint of it. This one too, but this one here, it didn't do that. This one did not try to touch the wick of this. It left it open. Why? Now, when you see it like this, it means when smart money is delivering price and it leave a fair value gap like this, it is mean that price is not efficiently delivered there on the downside. The downside is inefficiency. So it's not efficiently delivered on the downside. It's only going up, 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 and it is buy side imbalance. It is not balance. It is buy side imbalance. It is not balance on the buy side, and on the sell side, it is inefficient. It is not efficiently delivered on the downside. So price will come back to it for a price delivery like fair. That is why it is called fair value gap. So this place now, when price return to it now, the price is now fair. It return to equal value. So whenever you are trading and you see this kind of gaps opening in price, you be careful, because if you get in from here and you see the gap is open here and you get in your stop loss somewhere here or anyhow, it's going to come into this fair value gap. This is where smart money will get in. Again, don't worry, in the next slide I will teach you how you get in entry with it, how you use it as an entry. So this is what the fair value gap means. it is a bullish one. This would be bullish one now. A bullish one. It is the one that when price is going up and it leave, it is inefficiency. It is inefficiency. Price is not efficiently delivered at that level, and it will come back there for a proper price delivery. And once it come back there, what is the meaning? It is meant to go back to where it's coming from. It when it goes to a fair value gap, it doesn't supposed to waste time there. That smart money use it for liquidity grab, and I'm going to talk about it under liquidity concept. You understand that properly. So this is what the bullish fair value gap means now. It is the one on the upside. You can see now. Then bearish fair value gap means sell side imbalance, buy side inefficiency, just like the opposite side, CB. They just like the opposite one of these. This one now, the price, it is on this sell side, it is imbalance. It is not balanced on the sell side, but on the buy side now, it is inefficient. It is inefficient on the buy side. So price need to buy up into it back for proper price delivery. At that point, now price now will be efficient at that point. So this bearish fair value gap. So everything just the way I explain it, this is how you translate it down to the other side of this bearish side too. So you can see the diagram are very clear there, and you have seen how I use this thing already on those my live trade, and you see how we're going to be using them over and over and over and over and over again. So in the next slide, I will teach you how you make entry with them. Okay, core content number 7, one of 2, still on it, smart money footprints, signatures. This is fair value gap. So I talked about the entry technique, right? For the fair value gap. Entry technique using bullish fair value gap. When a fair value gap is created and left open, it means price is not efficiently delivered at that level and will return back to it for efficient price delivery. When price return to it, smart money buy it from there. Entry, we get in alongside with smart money when that is the moment price return to the fair value gap. Stop loss placement, the low of the candle that formed the fair value gap, that is the blue fair value gap, is the safe place for protective stop loss placements. So what am I saying here? Like I said, I bring this on the previous slide, that when a fair value gap is created and left open, there's a reason why smart money leave it open. The It means price is not efficiently delivered from that point, and they would everybody's eye is away from that level. They don't know that market will come back to that level. So everybody is going to be away. But we, the smart people, like the smart money, if you're in line with it, that you know what smart money is doing, then you wait. You wait for that level. That's why you see when I mark something, when anytime anywhere I mark on my chart, when price get there, you will see how it reacts. It is when they get there, that is when I will do something. I don't trade whenever. It is not everywhere. It is not every single price run in the market that you are participating. No, you are participating in the one where the real move begins. When you see when you can see their footprint clearly. So, what does this fair value gap mean? When you leave it open, it means price is not efficiently delivered there, and they will come back there later on. And when you know that okay, price will come back to this level, and when it come back there, this is what it will do. When it come back there, what will it do? It will go back to where it's coming from. It does not need to waste time there. It just come there to do something. It just come to make price balance, just to balance the price, to make it efficient. So as it has done that, you need to go back. So now this is the diagram you're seeing. Where do you put your stop loss? Your stop loss, it is the low that form the fair value gap. This is the candle that form it. This candle open here, traded up, drop, close there. Another one open and it traded up, it drop, close there. Then another one open, it traded down a bit, ran up back, close there. Now, this week, it did not trade down to this weak level here. So it left this place open. This is our entry point. It is not when all this no, we don't get in from all this up move. No, it is when it return to it, we get in. What do you wait for next? This level. This is your first take profit. First one here. Why your stop loss is here? Below this low. This is the entry. This thing I just showed you here, the same thing you use them on monthly, weekly, all the time frame. You will see all these things. And when I take you down to the chart, I'm going to show you each of them on each time frame, how I use them. And you see, I was trading with them the other day on 5 minutes chart with these things, and I made money with them. So these are the informations. When you digest them, I've given you entry like this at the early point of your journey. You don't get in from, and it's not everywhere market is trading that you get in. And this place, these things that I show up here, I am going to add something more to it. It is not every fair value gap that you use as your entry. No. That's why I'm going to talk about liquidity concepts. And when we go into that, you will now know the fair value gap you're supposed to use as your entry. You know the other block you're supposed to use as your entry. It's not all of them. That's what I said. If you don't know what smart money is doing, I see when they place all their things, their fair value gap and their other block, I know the one that stand and the one that does not stand. So it's not all of them that I take, and I'm going to show you all of them. I see how we do them next year as well. So I hope you get everything clear now on this fair value gap. Those of you that have been, you who have been spotting that already, you know, but now you know more about it now. You know when to use it and when not to use it. You know how to use it better now. You know what fair value gap means now. Why did it? Why fair value gap? Why did they leave it open? It is because price is not efficiently delivered there. When they are running, it is running with volatility, and that volatility is not allowing price to settle. As it's not allowing price to settle, it is not balanced. That is why it is called imbalance. It is not balanced. Then on the downside, it is inefficiency. Price is not efficiently delivered there, so you need to come back for efficient price delivery. And when it come back there, what does it need to do? You need to go back to where it's coming from. That's where we're getting our entry. So I hope this one is clear now. Let's go down to the other part of the lecture where we talk about the like why smart money are in price. Like why do they when you see smart money, why are they there? Why? In the next slide, you will know why they are in price and the fair value gap that are likely to stand and the other blocks of the one that I used. Okay, you will see that okay, this level, this one has stand and this okay, this is what smart money has done with this one and this one they have not done. You will be able to see all these things from the next slide. And as we are going in, you can see how everything is getting interesting as we're getting deep into the lecture, right? So let's go to the next slide. Okay, core content number 7, 2 of 2, liquidity concepts. Okay, what is liquidity concepts? I told you people previously that those PDRAs are used for a purpose. They use them for liquidity runs, and the liquidity is what I'm going to talk about here. So what is liquidity concept? Liquidity, now what is liquidity? It is a situation where an asset or security can be converted into ready money without affecting its market price. Liquidity in forex market is when an asset or security can quickly be bought or sold without affecting its current price in the market. So what am I trying to say here? When I take you to the chart, you will understand what this liquidity concept is all about. Smart money is in price. Now, they are the one that can buy it. Anywhere you see the price, anywhere it goes to, if it goes up, smart money send it there. If it comes down, smart money send it there. So the in the forex, in the liquidity run it is a situation where a currency can be quickly bought or sold, and you will see those type of liquidity runs in the market. I've been trading them. The last one I did, it was on non-farm payroll, and Francis was with me that day. I'll show you those kind of setup next year as we're going to be trading. You see these liquidity runs, they will run it quickly. That's when you see that somebody will just make money within 5 minutes, 15 minutes, 30 minutes, 1 hour. You have made good money. It is from these liquidity runs that smart monies are doing. It is when they are running for liquidities. So liquidity is when they can sell the pair or they can buy it, and they will reprice it immediately, rebalance it. It will not affect the current the price of it. So this is what this liquidity concept is all about. So now in the market, in the next slide, when we're going to talk about making our ends meet, these liquidities in the market, you need to find them. You need to see where liquidities are. You need to see where they are. It is money. So where are the liquidities in the market? Above old highs and below old lows are where liquidity rests in the market. Note, liquidity is the sole aim why smart money engage price. So now, how do you see liquidities in the market? Every high and low you see in the market, there are liquidities resting above and below them. If you see every high in the market, there's a liquidity above it. If you see every high, every low in the market, there's a liquidity below it. That is where what do I mean by this liquidity in the marketplace? These are people's stop loss. That is what makes us different from every other trader. What I'm discussing with you here today. Smart money engage price just for this reason. It is for liquidity purpose. That is the sole aim. That is where smart money that just in price to take money from people. Yeah, that is just it. Where stop loss are in the market, that is where the liquidity is. And where all the traders in the world, where they are taught to put their stop loss, it is below old lows and above old highs. Just like the one I showed you now. But the difference between what we're doing and other traders is which low is likely to stand and which high is likely to stand when you put your stop loss, so they will not go there. So smart money knows the ones they are attacking. That's why you people will see how we'll be priming our entry down to the point of execution. The day that I will trade live with you people, we're going to be doing all of these things next year. So when we do them, you will see how you wait for smart money to take liquidities. They must take the liquidity they have in the market. They must take them first before we engage. This is one sweet part of this that so many people don't know. When other people are losing money, that is when we are getting in. When other people are losing money, that time they sweep them, they take them out, they clear the market, then the real move will begin. That is when we are stepping in with the smart money. So Whenever I talk about smart money, smart money, smart money, smart money, when they get into price, you will see movement. And their movement, it is for liquidities. They are running for liquidities. Now you see what I have here? Smart money, liquidity. Smart money, liquidity. See smart money, see liquidity. See smart money, see liquidity. Anywhere, when they get into price, they must take liquidities. They must take money from people. And it is when they are running, when they are moving large funds, when they are moving this money, that is when we move with them. That is when you see big move. That point, when you are moving with them at that point, they will never come against you. They will never come for your stop loss because they don't see you. Your stop loss is too small. The people they are looking after, they are the people with large orders. When I told you about consolidation, right? When market is consolidating, it's not showing willingness to go in one direction. They are accumulating orders at that point. In that consolidation, that is what consolidation is all about. It's moving, it's not showing willingness to go in one direction. And when price is not showing willingness to go in one direction, how do you know when to engage? How do you know that it's going to go up or it's going to come down when it's just showing any willingness to move in one direction? Then some traders, some neophyte traders are getting in, they are buying, they are selling because they cannot see, they don't know what is happening. They are the ones smart money is accumulating. Then when smart money accumulate them, they are going to distribute. And before they distribute them, they will manipulate that accumulation first. In that accumulation, they will send price to a wrong direction. Then people will run to that place. That time now, when people are running to that place, that is when we are preparing, looking for our own entry. Because that time now, smart money will now send the price to the real direction after they have taken the money. When they take one side of the liquidities, they will take the other side of the liquidities. So when they take one side, they remain the other side. Then when they want to take the second side, that's when we'll go with them. That's why you can see when I was teaching about order block and fair value gap, you can see all the first move. I told you that in the first move, the first displacement, we did not engage. We don't follow that one. That one is for confirmation. That is what I'm saying here too. When they take first money, we don't go. When they want to go for the second one, that is when we follow them. That is when the real move begin. So you see the concept of this liquidity right here. This is what the market do every fucking time. Every fucking time. This is what smart money is doing. They are taking money, taking money, taking money. They are always making money. So, and as they're doing that, that's why I told people that this model is not something that can be broken. What I'm sharing with you people they cannot stop it. The moment you're able to do this thing, you can spot out these things. When you can see these things yourself, you cannot unsee it. It's going to be like magic the very first day that you would do analysis by yourself. You see smart money moving, you know that this is what money say. They have done it. You follow up, you do the chart, you get into your entry, you manage that trade to the end, you close it all without me directing you, do all these things. Then you keep doing it, keep doing it, keep doing it. You get your confidence from there. That's your success. So why am I saying this? For the purpose of why smart money are in price. As long as smart money is trading, we will always see their footprint. When you can see it, as I share with you right now, I will take you down to the chart. I will show you step by step on the chart. Like I told you that this lecture is long, it's a trading Bible. All these things that I'm giving you now, all this theory, I'm still going to treat them from number one again on the chart. That is the kind of person I am. I'm not just giving you theory things for you to go and be struggling. No, I'm still taking you down to the chart, just like I did in that first lecture. And this one is going to be more deeper than that because I have top-down analysis here. In this one, I am going to share with you how I do my analysis right from beginning to the end. The things I consult, how I do it first before I come on that chart to trade. I do my analysis first. How I do that analysis, I'm going to do that analysis in front of you. I record myself. Just the way I traded, hey, you people saw it and you follow that. You people are doing some things with those my live trade right now. So when I share my own analysis with you and you are able to do that analysis like that, that is the power that I said I'm bringing for you people. So when you do that top-down analysis, you can repeat it yourself, repeat it. Bro, you're good. Then get your journey, get into your ship and move your shit on. Then I'll be happy to see all of you doing it. So some of you are gonna be worried, oh money, okay. This thing, are you sure it will not stop? No. You see, anytime I trade, I say every day, every week, and it don't stop. Because they are always there to take money. This is what this liquidity here is all about. So this particular slide here, that is one of the major reason why that chart is moving. That candlesticks that you see that are moving up and down, this is the reason. It is for these liquidities. So I hope you all understand. Now, anytime I'm talking about liquidity in the market, I myself, when I go into that chart, the first thing I look for is liquidity. You have to trade like smart money. That's why when I was trading that day, the other trade that I recorded, I said smart money mindset you should all have. I was looking for liquidities in the market. I was telling people that look at this low. This is where my take profit will be. Look at this level. I will take profit here. Those levels are where liquidities are resting. This is where people stop loss are and smart money are running for them. So you are looking at price like smart money, just exactly what smart money is. You are trading as if you are smart money because you can see what they are doing. So if smart money is looking for liquidities, then what am I looking for too? I'm looking for liquidities too because I want to move in their direction. We don't move against them. Most time when you get it wrong, it is when you move against them. Most time all my from my calculation when I see my losing trade, it is when you want to show your ego, you want to show your like you want to prove that you can trade you and you don't want to wait for smart money to do their thing before you follow them as usual. That is when you see some of those losing trade, which is you are human. So you sometimes when you see those things you learn and you refine yourself. And I'm telling you now, whatever I'm sharing with you here, I shared my thought experience with you so that you won't make those mistakes that I made in the past. You are going to be making some mistakes right now if you don't take everything that I'm giving you in order. You you make it harder for yourself. So here, what I'm saying here is when you go into the price, the first thing you look for, you need to find liquidity where liquidities are. You need to look for them, and I'm going to share with you all of that on the chart. Just like smart money. So if smart money get into price now, the first thing they need to see where the liquidity and the smart money can spot it out quickly because they know where the money is. They know where the money is. And I know. And I'm going to show you people when I take you to the chart, you'll see how I'm going to trade. I'll tell you this high. When they take this high, if I'm going to do like this, I have all these series of those trades that are not even uploaded. And I want to be doing it live, go live. I'm working on that next year on YouTube so that I'll be doing live. Once I go live, you will see me real live, real time. It won't be a recorded thing again. As I'm talking, a minute to minute, you'll be sharing what I'm saying. You'll be seeing the chart from wherever you are. That's what I'm working on so that you see these things. So I hope you all get what liquidity is now. This will always be in your mindset. As you are going for that chart to make money, to look for money, this is the money you are looking for. You have to find that liquidity first. When you see where liquidities are, you wait for smart money to engage one side of the liquidities. Then when they want to go for the other side of the liquidities, you follow them. So I will show you the things I just explained now on the chart. It's still looking like theory here, just like it is. But I hope the theory part I give you will take it deep. If you have not got anywhere, you can still reverse it. So let's move next to making our ends meet. There now, it is the next slide is where we're going to discuss the real things while we're here. Okay, core content number 8, making your ends meet. So, this is where we are now. We have taught, we have done so many things. I've given you a lot of videos, high length of video to watch. To do what? To do what? Now, every month we will be working on achieving our monthly budget using everything we learned from the 10 videos stroke lectures taught in this mentorship. All the things I've given you, including this video right now, making it 10 video on this YouTube channel. With the information I've given you in the 10 videos, we are going to make our ends meet with them using everything we learned from the 10 videos. So, with the combination of these 10 videos now, it is what we're going to use to make our ends meet. And the things I have here to share with you people for our monthly budget, we have food. That's number 1. We have food. We have rent. We have clothing. We have school fees. We have healthcare. We have entertainment. We have childcare. I put up this 7 here. I know there are so many other things you may have in your budget for the month, but I put this 7 here. Then, from the beginning of this journey, what Mandela Effect stands for. When I told people that day to send how much you spend on food to the group, I saw a lot of comments. So almost everybody responded to that, and you people sent all of that, right? So now you look at what we have here. What we have right here. The only thing we'll focus on right now, it is food. Don't add rent to it. Don't add clothing. Don't add school fees yet. Don't add anything yet. Only thing we're going to be working on right now, using the information given to you in the 10 videos, is food. You want to make food with it. In a month, whatever be the cost of that your food, we are working, all of us, we are working with $100 account, and you're going to do it from that your Diamond account. Everybody, I'm going to do it right here in front of people to do it. I'll be recording it for you people to see how we're going to start the journey. So why I put up this thing is, right now I can do so many things with this, with trading. All these things I have right here, when you are able to trade profitably, you will do all these things for yourself. Your rent, clothing, school fees, healthcare, entertainment, childcare. I put childcare here because there are some people that are watching this right now. They are not students. They are no longer students, right? In school, they are no longer in school. Some are married, right? But the main reason why I'm doing this, when I started this journey, is because of my fellow students that are here in school. My cycle. So this is my offer to them. And I said we're starting from food. And before we leave this school, we will see what we can do if we can achieve this 7. But we're starting from food. That is where the power is. So in the next slide, I will tell you what we're going to do for you to make that money in a month. What exactly we will do for you to make that money. The next slide, you see everything they will put into work. We're starting it. The work began. So Let's go to the next slide where we'll go into that. Core content number 8, make your ends meet. So this is where we are now. Our monthly budget, food. The amount for it, $30. Trading account size, $100. Like I said, that's all the demo account that you have already opened. It is, you are operating with that demo account like $100 right now, not like a $3,000 anymore. So all of you now will not be trading with a standard lot size again. You will not be trading with a mini lot size again. You have started the real journey now. You want to make that shit done for yourself. You want to make that $30 now a month. As you are coming in as a new trader right now, this is what you want to do now with this $100 account. That is what you have in your mind. That's what all of us are working with. I myself, I have my account right here that we're going to work with all next year, right? You saw my own when I was setting up that day. So it is nothing that I'm giving you to do alone. We're doing it, and you see how I do it, so that you understand that it is the same thing that I'm doing, that I'm giving you, I am sharing with you. So this is how we're going to do it. Number one, we will be looking to take a trade only when smart money engage liquidities into a higher time frame PDRAs, monthly, weekly, daily. So when I said engage liquidity into this HTF is higher time frame PDRA. So HTF means higher time frame. Once this H turn to L, it means lower time frame. So when I say higher time frame PDRAs, the PDRA on the higher time frame, you know what PDRA means already. So on that higher time frame, monthly, weekly, daily, that is a short form rare. So that is what we'll be doing. We will only look to take a trade when it trade into higher time frame PDRA. It don't just trade into it. It take liquidity. Smart money sweep liquidity. They take liquidities into it. That's when we now move closer to the price to engage. That's what we'll be doing to make our ends meet. That is the number one thing. Number two, we will be looking to take a trade only in London session and New York session. Like I told you people, that time, it is one of the key elements here. You need to know smart money doesn't trade every time. And I told you that these are my key zones, London and New York. That is the only time we'll be trading to make our ends meet. We don't trade outside this time. You know what time is London session. You know what time is New York session. Is in the lecture already. So that's the only time you'll be trading right now. Don't do anything. All of you, I see Wisdom and some other people. You people are trading. I know you don't know, but now you know. So you don't trade. You are now. You are a trader now. You work with time now. You work where smart monies are working now. So that is the only time we'll be trading. And you see how I'm going to do that too. Number three, we will only trade with two positions with true micro lot size. So what I mean here now, when we are going to be trading now, all of you with that your demo account, whatever you are doing right now, we will not be trading with that mini lot size again. You will not be trading with standard lot size again. You will trade with just two positions. That two positions, two of them will be two micro lot size. You know what two micro lot size is already. If you don't know it, go back to the lecture and digest all these things now, so that next year, as we're going to be trading, you will know everything that we're going to be doing. You will not be, nothing will be strange to you again. So number three, that is what we're going to be doing. Two positions with two micro lot size. Number four, we will only use stop loss of 10 to 20 pips. So as we are going to be trading, all the stop loss we'll be using is just going to be 10 to 20 pips. We'll not use more than that. So, and you will see how those setup comes, except when you want to take position trade, swing trade, short-term trade. That's when you use more than 20 pips stop loss. And when I go into the chart, you see how those kind of setup forms. You see them. I will show you on the chart. So that is what number four is. Then number five, we will always take profit at 20 pips. TP1, just like I said now. the two positions that we're going in with, we'll take one off at 20 pips. That is what it is. Then number 6, we will always collapse the entire trade at 80% level of the trading range. Okay, this is this point now. Once we take one profit one, that is take TP1, the remaining position now we will close it when it trading close to the TP. The last TP, maybe you are trading like a 50 pips and now it's trading at 40 pips for you or 40 something pips. You just collapse the trade from there and get out of the charts. That's what we're going to be doing always. Then number 7, we will only be looking for one setup per week. Harvest that and stop trading for the week, for the rest of the week. No exception. Period. That these 7 things that I have right here to make your ends meet. This monthly budget. You see all those 7 things that will list under the monthly budget in the previous slide. Those 7 things: the food, the rent, the school fees, the entertainment, and everything that will list there. This is the same thing you will do if you want to achieve all those things in a month. But we are starting with food. The moment we're able to do this food, if you want to do, whether you want to build a mansion, you want whatever you want to do, whenever you have large account, it is this same thing you will do. The same thing, nothing. That's why I say that your demo account right now, you take it serious. Like right now, you are a manager right now, managing an account. That's where you are right now. And you have to make it $30 with that account in a month. You are not gambling, you are not trading blindly, you are trading with these things that I put up here. You are not going there to take a standard lot size or mini lot size and run small and close the trade and you say you have made $30. No. We are going to use these things exactly like this. That's what I'm saying, because some of you are trading right now, you don't even know what you're doing. You're just you go and open a trade, it runs, you close it, it runs, you close it. You don't even know what it's doing. You don't know where that is. That how you make money? We don't make money like that. That is gambling. That is luck. I don't make money by luck. I don't make money by luck. If you make it by luck, that is not a power, because if it is luck, it means you can't repeat it next time by yourself. I make money when I know that I have the power to do it again and again and again and again. So if these things doesn't, if those things, if these things are not well documented in your head like this, how do you repeat them next time if you are doing it blindly? Okay, all of you now that are trading blindly right now, if I ask you why, if you get into a trade, if I ask you now, why did you get in there? What do you think price is going to do? Give me a reason why you think price will go to that place that you think price is going. Then let's stand in front of that chart and call the movement now. You talk to the chart, let the chart respond to you. Let me see. Just the way I was calling it, and I will do it more over and over and over again next year. Then if you follow this same thing that I'm sharing with you now, you'll be able to call the same thing that I'm calling. Everything I put up right here, these are the things I use. Anytime I come up to trade, you can see when I say I'm going to take, I will take 100 pips, I will do this. You will see, I will not wait for that. You say, I say I will make $100. I will do. I will not wait for $100. I'm making money. These are the strategies that I'm using. The goal is for you to make money. If I am doing this thing that I'm doing, if I'm doing them with a standard lot size, with a large account, you know what I is as a trader. If it gets those trade 30 pips, 20 pips, 40 pips, the trade, check them. Now that you know what pips is, you can check those trade. Now you can see what I was doing. So, and next year we're going to do more of them. Now, for us to make our aim meet, this is what we're going to be doing. These 7 things that I have right here in this slide. Exactly like this. Always, this one is just going to be like your daily routine. It's just going to be like your your money, like any day you want to trade, you must know these 7 things in your head. Any day that you want to trade, you must reverse these things here. You must reverse this thing here. If market is not in that condition, that first one, that number one, if market is not trading at that higher time frame PDRA, we do nothing. We are not doing anything there. We are not. It does not worth taking risks on. So we are not doing anything at that level. We are waiting, right? So this is what we're going to be doing. Like I put it out for you people. So I hope it's taking. We go into the rules from the next slide. There are some rules that you work with. So we'll go into that next slide. This is a rule-based idea. If you cannot follow these rules, you will have issues with the concepts. It is for well-disciplined people, so it is also guided with rules. So I'm going to share the rules with you, how I engage them, because you are playing with big boys. I explained to you what big boy is, people they are playing with. So they operate with rules as well. So you have to follow their rules. These are the rules I'm going to share with you in the next slide. Core contents number 9. Okay, the rules. This is me now. Everything I've given you in this mentorship, in the 10 videos, it will be very unfortunate for me not to give you the guidelines, the rules that abide by these concepts, because these rules, they are like trap in the market. So if I'm not showing you the trap that are in the market, it means I'm not giving you the defense. I just gave you the concept, but not the defense. If I give you without the rules, that is just what I mean. So the rules that I have right here, these are the things I do in my trading. In my best, everything I do in trading, these are the things I do. And the beauty of it is you are going to see me doing these things next year on this YouTube channel. I will publish everything and you will see it live, because you have access to TradingView right now. You can access TradingView from your Chrome. Any currency that I'm trading, if I'm trading EU or GU, anyone, you can verify anything that I'm going to be doing, and you will see how I'm going to be working with these rules as well as I pass them to you. So we have 7 rules right here, and these are the rules that I'm going to explain to you. Number 1, we do not trade every first month of the year. I will list these 7 numbers right here. I will list them all, then I will start explaining them to you people so that you understand why the rules, right? So 1, we do not trade every first month of the year, January. 2, we do not trade every first day of the week, Monday. 3, we do not trade ahead of the following news releases: non-farm payrolls, NFP, rate announcements, consumer price index, that is CPI, and Federal Open Market Committee, FMC. Number 4, we do not trade outside our trading session, the key zones. Number 5, we do not trade on banks holidays and public holidays. Number 6, we do not trade the last trading day that is heading into a long holiday. Number 7, we accept to miss so many entries. Okay, so let me start explaining them to you now so that you know why the rules, how I do it, exactly what I do, how I do it is what I'm sharing with you. So, number 1, we do not trade every first month of the year. Like January now, as January is coming up, all of you, as you're watching this video, you can study it, prepare yourself. We'll start trading next. That is, we'll start trading in February, right? That first month of the year, we use it to study the market, right? So the real things when people are getting in from work, things are resuming up. We allow that first month of the year to show us clear footprints, what smart money is doing, because that very first month of the year they do a lot of things. So we leave it for the market. So I'm not going to be trading. If I'm doing anything with you people for the month of January, just going to be teaching. Maybe I'll be tape reading. I'll be reading the price action. I'll be reading what they are doing, but I will not be trading. I will just be reading the tape, right? So that's what number 1 means. Then number 2, we do not trade every first day of the week. That is Monday. Like on Monday, that is the first day of the week. We leave that to see what they want to do for the week. You see the real move the middle of that week. When you leave Monday, hey, anything you have to do, use Monday to do the other stuff for the week. Number 3, we do not trade ahead of the following new releases. I took you to investing.com, the investing.com app. When you look at that app, I was showing people some news events, right? So when I want to start my top-down analysis, at the end of this lecture, I will take you down there. I will show you all these things. This new release, like non-farm payroll, rate announcements, like when they want to announce rates, when you go to bank, you will see sometimes you see the rates of different currencies in the bank. You see rates, the currency rate, maybe like dollar against naira. You see them when you go to bank. So the day that they will release that rate, they used to change the rate. They used to change the rate every 2 months, 1 month. They used to change the rate. So whenever they want to announce that rate, there is something that will happen in the forex market. So we don't get ahead of that thing. And you people, the very day when these things will happen in price, the very day, the date of this news event, I will take you people to the chart too. I will show you that look at what is going to happen with that news. When they announce something, they use that information to do something on the chart. Smart money use it. Smart money use that information to do something on that chart, to send price to one direction. And when they are doing that, we don't get it ahead of them. So these are the news event that I put up here. Rate announcements, CPI, which is Consumer Price Index, then Federal Open Market Committee, that is FMC. This news event, we don't get it ahead of them. And people will see all these things from investing.com, that investing.com app. That is the only thing I use it to do. We use it to check the news. It's just like a news calendar. When they want to announce news, you will see those news there before the time of release. You will see them on the calendar that okay, so time they will announce this news. So these news are going to be there, and you will see them when I'm going to do my top-down analysis. You see all of them too. Then number 4, we do not trade outside our trading session. That is that key zone, either London or New York. If not there, we don't trade. To make our ends meet, to do everything in the 10 video that I'm giving you, we don't trade outside those key zone. Then number 5 that says we do not trade on bank holidays and public holidays. Yes, if you know, like I said from the beginning of the lecture, I I, I mean you understand who is smart money, right? I told you. So bank holidays, banks don't trade on holidays. So market is not going to give you good price delivery. You are not going to see clear footprint for you to work with. And these holidays, bank does not trade. And what did I say smart money is? Go back and listen to what I said smart money is. Now, these holidays they don't operate properly. So we rest too. Now, number 6 that says we do not trade the last trading day that is heading into a long holiday. Yes, you know, any let's say okay, today is Friday. Let's say that let's assume today is Friday, that this Friday is heading into a long holiday. We don't trade that kind of day. No, you don't trade that kind of day. There's going to be a lot of manipulation in price that day. It's going to be like a last trading day. So many things will be happening in the market. So these days, we don't trade. Now, the beauty of me sharing these rules with you is if you know when something is likely not to happen and you don't get in at that time, that is the power you have over people that cannot see and that doesn't have this information that I'm giving you. These rules that I'm sharing with you, it is just like you. You can see death. No one can see death. That is why when death comes, you have to go. If you see death when it comes, you will dodge. You will never want death to take you. Nobody want to die. So I am here. These things I'm sharing with you right now, it is like you seeing your own death in the market. Then you will dodge it. That is the importance of these rules. Number 7, we accept to miss so many entries. You know, when you miss entry, don't feel like, oh, that is the only thing you get from price, or don't feel, oh, no. Wisdom. How did you feel that day when you were saying you miss a trade? You screenshot that day, you send it to the group that you missed you missed an entry. Wisdom is part of my student on the group that is following the free mentorship. So he sent a trade to the group the other day saying he missed the entry. So how were you feeling? Were you were you feeling like that is the only entry I could get? No. We accept to miss so many entries. Just like during the time of my exam. During the time of my exam, I used to miss so many entry, and I was like, oh, well, fine, it's good. That one is gone. I'll see another one because these things repeats. They repeat. So you don't worry. You accept to miss so many of them because you as human, you are going to be doing other things. Trading is not anything you do. It is you when you conquer it. And this is one thing I want to disclaim to all of you today. Somebody somebody was interacting with me once upon a time. He's part of this mentorship right now, Godwin. He was saying that they said trading when you are trading that you will not have time for your family. Like, I just laughed. I was like, trading? No, no, that's not what trading is. That people that have that mindset, people that are saying that there are gamblers, there are people that cannot trade. Trading is like business. And you can see what I'm saying right here now. You accept to miss so many entry because you are not going to be available at the market every time to be checking what smart money is doing every time. No, you're not going to be a slave to the chart. You are just there to make your team when you see the hand. So when you do from the top down analysis that I'm going to do, when we do that top down analysis, you wait for price to get to a specific level. When you get there, that's when you are going to engage. So you are not going to be in price at every time. No, you go there when they get to your zone. We are going to wait for them at a specific level, like you are just like a sniper, like a soldier. You are just waiting patiently with a gun for you to shoot. And as you want to shoot, you 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 don't just want to shoot. You want to shoot and kill. So you don't shoot when the animals are running. No, you shoot when they are settled, so that you can kill. So from the top down analysis, you will know when you are to shoot and when you are not to shoot, as I'm going to share with you. So these are the rules. Okay, so this is my chart. This is my real personal trading chart. When I this analysis, you can see most of the things I drop here. Uh, now this lecture is going to be very, very, very interesting, because I'm going to be discussing all these things that I've explained to you people right from the beginning of the lecture. That is right from who is smart money. That is number one of the lecture. Right from that part, all the things I explained to you people, those things were taught to you on the playground. This is the chart where you'll be trading every day. This is the chart where these things I've been teaching you. This is the chart where you will see them. So it is the chart that I put up here in front of you. This is the live chart now that I want to teach you people. This thing, all the things I explained to you people in the previous 9 slides. This is the chart. I want to tell you which of them is. This is what. This is what. This is what. This is. So now this is what we're going to do. Like I told you people, I don't want to waste too much of your time with me. I want to pass this to you as soon as I can, because that my first video on this channel that says life after school. The thing I discussed in that video, I'm bringing it live to you people as soon as I can, and this is it right here in this lecture. So this is what I want to do now. You have your notebook there already. You have been copying. You have extracted all the information I've given you in the previous 9 slides. Now you are here. You go back to your notebook now. This is one of the beauty of this lecture I'm giving you. Now you have already extracted those informations. If you have been with your notebook since now, the things that I'm going to explain to you now on the charts, with those things, you cannot take back the video. You cannot backward the video now to those places while I'm going to be explaining it here on the charts. So the beauty of it is you have your notebook right now. So you go back to your notebook now, open it to number one. That will say you smart money. Then you'll be following up from there. Because I'm going to be treating these things on the chart. Now, this is the chart where you operate. This is the field. All the things all the grammars I've been speaking, this is where we're going to use the information. So I'm here. I will explain all of them to you on this chart. Tell you this is what it is, this is what it is. Just like I choose to do this with people. Right? So, these things were not taught to me in simple language like this. But with my own intention not to waste too much of your time before I pass on the power that I said I'm going to share with you. I don't want to waste too much of your time before I pass it on to you. So for that reason, it took me time to design all these things in a simple way like this for you to understand. Right? So now when I'm saying do something, so if you have been watching all this while you don't have a notebook, you it means you have not started your journey. You have not started. It's just like you have been going to school all this while, you don't have a pen, you don't have a notebook. That's what you are just doing. And I hear that is sharing with you. Anything I tell you to do when I'm teaching you, anything I tell you to do, that is that thing I tell you to do, it is not optional. It is a list of the things you need to do at that point for you to get it. Some of you that want to do this your own way, you don't want to follow instructions, you are going to waste more time to do this. Just like exactly what happened from the previous lecture that I gave. I gave assignment on the previous lecture, which is Introduction to Forex. The assignment I gave there, you will all see what Marco did on the group. You saw his excellent result. That is the example of your success that I'm talking about. Anything I tell you to do, or you should understand that that is the same thing I am doing. That is the same thing I am doing, and that is the same thing I did back then to make it easy for myself. And as I'm teaching you people, I'm not just teaching you, I'm sharing my own experience, my thought experience with you people, right? So if I am giving you what to do, it is just like I'm giving you code. I always tell my friends that there is no shortcut, right? But when I tell you to take these measures, do like this, for you to get there quick, I am giving you shortcuts. So anything I tell you to do, you should understand that, okay, oh wow, it is a shortcut. I'm trying to make it easy for you by telling you to do this. Look at what I asked people to do that day. People were like, okay, Miracle was the last person I added to that group, and he was the first person to submit the assignment. He was the first person to do it. And what he did, just as humble as he is, I was surprised when I saw his result, but I know that he's very, very humble. He follows everything that I say in the video, in the 9 videos that I on that on the YouTube right now. He has watched everything there, and there's something the boy did. I was like, this is criminal. I'm sorry for using that language. When you say somebody is criminal, it's like somebody who is very smart. You can't when they look into something, they can quickly grab what is there. It's just like when you go to central bank right now and you see them printing money, then you cite them. When you cite them, you get home, you go and get what they used to print those money, the machine and everything. You get those things in your house and you print money by yourself. That is the kind of person Miracle is. And that is the kind of person I am too. That's how I learned from my mentor. My mentor, anytime my mentor is talking to me back there, he will like, the money I know, all this thing. Once my mentor exposed his chart to me, my mentor, once he exposed his chart, I'm looking beyond what he thinks I'm looking at. I'm stealing so many things from his chart. So, exactly the same thing. Miracle was when I was trading, I recorded myself, and he saw everything on my chart. He was just doing, he didn't know anything, but he was just copying everything I was doing. He was just doing all those things I was doing. Then, immediately I gave the assignment, oh wow, he has been doing this. I saw his live trade. So he just copied me, and his result was excellent because he did exactly what I used to do. So he got excellent result. So what am I trying to say? All of you, anybody who is following what I'm telling you to do, that is how you're going to see this thing easy for yourself. You just gonna be like easy, like it's like why everything will be like magic in front of you when you start doing it, just the way I'm telling you to do it. I've taken my time to make sure I bring it down to the easiest level before I come up to teach you people here like this. Because I don't want you to waste too much time here for you to start doing this thing. I want to see all of you doing this. Let's see what we discuss in that first video. how we can bring that freedom to ourselves live. I want to see how many of you that will conquer that freedom next year. And I've given you everything in this video. The 9 videos I put up here in this YouTube channel has given you the power that I said I'm going to bring to you people in that first video, life after school, the freedom. So when I'm telling you to do something as humble as you are, the only short code to this thing, it is when you are humble. Like you're like a baby, you behave like a baby to the child, then you see how the child too will behave like a baby. Then that's when you be able to control the child, you call it. I am very, very humble when it comes to this chat. I am open to learn anything because I have learned so many things from this chat, apart from what I studied from my mentorship. And it is because of how humble you are. Just like as I'm talking to you people now, you're a baby. Even though you're a trader, you have been trading, and you are here to learn from me right now because you're not profitable, and I'm telling you what to do. All these things have been used to trade before. I'm talking about people that are here because I have students right now that have been trading and they are here in this my free mentorship because they have not reached profitability. So if you are part of these people, anything I'm asking you to do, you have to purge away everything you have learned in your written mindset. Like because this is institutional training I'm teaching you. You're not trading like retailers. Smart money are against the retailers. They are after their stop loss. So you are going to trade opposite. You're going to trade against that your previous trading knowledge you have. I'm giving you institutional trading right now. So you have to purge those things. Don't try to use what I'm teaching you with what you have been doing already. No, you have to pause all those things. Then follow everything that I'm telling you here and use this thing for a given period of time and see build your profitability with what I'm teaching you compared to what you were doing before. Then you see where are you. If you know that you are profitable with me, stay. But if you know that your previous concept works better for you, then go back. Then those of you that are just coming in as new traders now, anything that I'm telling you to do, that's exactly what you do. Don't do anything outside your own. All of you saw it that on a go when you were struggling to get it, like the way Miracle got it, because you did not follow instruction from the beginning. Then I love it for the fact that later on all of you were picked. You picked challenge by what Miracle did, and I started seeing good result. Godwin, Francis, Wisdom, all of them they started coming up. And that is a sweet part of a good work. When you see your colleague is growing and you know that I'm not giving you any special information, I've never called Miracle. I've never had a private chat with him. I don't even know him. He, the only way he could do those things clear that day is by watching those my videos. Nothing else. And he just follow everything I brought up there. So what am I trying to say? I anytime I'm trying to share something with people like this, anything I'm telling you to do, I want to make this thing easy for you, like I said from the beginning. That's why I say, okay, do this, do this, do this. So if you don't have a notebook and you've been watching all this while, you are just playing. You don't know where you are at. You're just playing. So if you're with your notebook now, get your notebook. If you're not with your notebook, pause the video. Then whenever you are ready, get your notebook, extract the information from the beginning. Then when you get to this part, you will see how you are going to be using that notebook with what I'm going to be teaching now. You will see the help of that notebook by your side and be watching the video as I'm listening to video. You're watching it. You know the number that I'm talking about when I'm doing something on the chart right here. And the day you're going to trade, when you start doing this thing without me, you are going to put your book by your side, looking at that information while you are looking at the chart. The moment you are okay, I'm not going to be writing the number again. So as I said now, you are putting up. Once I call the number, you open your notebook to that number, so that I'm talking about number on the chart. You know that okay, this is what he's talking about. This is what he's explaining. So I want to talk about smart money. I was talking about the interbank price level averaging, right? So you can see this chart here. This is a daily chart. This is a daily chart on EU, the daily charts. So now I was telling you that the major thing I want to say here about smart money, you see all these candles here, all these candlesticks. You know what I've been seeing them, in trading, you'll be seeing now. Those of you that have watched the 9 videos, so these things they are moved, they are engineered by smart money. And you know who smart money is already. I told you, I explained to you, is on your notes. So many people, the NeoFi traders and retail traders, many of them believe that this candle move based on buying and selling pressure. It does not move based on buying and selling pressure. Any of this candle that you see here, if it goes up, comes down, it's smart money engineering. By what? By IDA, interbank price level averaging. Like I said now, this is Euro USD. So for you to be able to trade this pair in the forex market, the European Central Bank and the Reserve Bank of America need to come in alignment. So that's why the pair now, the two become a pair for you to trade them. So it is the aggregate that I talked about, which is IDA, that is walking this chart up and down, up and down, up and down. You know, you're seeing it. So this part now, this is what it is. And I said on that part that price does not move based on buying and selling pressure. It does not move based on support and resistance. Price move based on what it is engineered to do by smart money. That's what I told people, right? Under the number 1. Then you can see now this based on support and resistance. No, retailer will tell you that anywhere price touch more 2 or more times, it is a support or resistance. When I say support is something that I already know what support is. I showed you other block, and when I was teaching other block, and I'm still going to go deep into that when we get there. So this is that number 1 that we talked about smart money. So you can see the chart right here now. The number 2, that is where we're going into now, what is trading, the types of trading. So now we talked about position trading, right? So this is the chart. I told you that this type of trade, it lasts for 1 month and 1 to 2 months and above, and you frame those kind of setup based on long-term perspective, and you frame them on a monthly level. This is a monthly chart that I'm talking about. Look at it here. You click on that monthly. So any trade that you are taking, you can see right here now. You can see right here. Let me take out this drawing first. All this down candle right here, this down candle. These are candles for 3 months, because we're on a monthly chart now. This is the type of position trading I'm talking about. This is position trading. You can see this trade, it has been running down 1, 2, 3. This is from October, November, December. So assuming you make your entry around this point, you are going to allow that trade to run for 2 months for you to take your profits below this low, which is here now. So you can see this trade now. This is position trade. This is 3 candles on a monthly chart, and I told you what monthly is already. This candle here now, it takes 30 days for one of these candles to form. So you can see right here now, this is the type of trade I'm talking about, and you can see how many pips it is. Let's measure how many pips from this shaded place that I put up here. Let's say you get your entry from here down to this place. You can see this trade now, it is 800 and something pips. 800 something pips. And I told you that this type of trade, when they pound out, they move over thousands of pips, right? Okay. You can see this one, and this is 800 pips. Now, you can see this one, this is the same trade here. All this trade from here, up here, that is the position trade too. This trade started moving here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Like 10 months, it's been running up. So if you check how many pips it is from this level now, you can see, man, this is 1,000 something pips, 1,200 something pips, 1,300 something pips. You can see 1,400, right? That is the type of setup I'm talking about. So when you get into this type of trade, you see how many pips is secure. And you know what pips is already. I told you, if you make 1,000 pips from a trade right now, or you make 800 pips, or you make 500 pips from a trade right now, on a mini lot size, you know what that is. On a standard lot size, you know what that is. On a micro lot size, you know what that is. That's how you view your trade, you measure your trade. So this is the position trade I'm talking about. You can see then the stop loss. You can see here now, if you want to use a stop loss for this type of trade too, you use your stop loss. Let's take for instance, you get in here, you are going to use like 1 and something p stop loss, right? For this type of trade on this monthly right here. If you were to make your entry here, to put your stop loss here, you can see this little move from here to you on the monthly chart. See what the result to 156 pips right here. So you can see now, if you are risking something on this type of trade, I told you to, it requires a higher number of stop loss to use. And you can see now, this stop loss now, it is 1 something pips stop loss. That is enough of trade for you to say, okay, if you are to trade in that direction now, and you're using that kind of pips as stop loss because it is a long-term trade. So when you are using that kind of stop loss, it means that the market, when the market is retracing or whatever it's doing, you know that the market will not get to that point on the monthly chart, because on this monthly chart, they can do whatever you want to do and still deliver price to where smart money programming to deliver to, right? So I hope you understand what position trade means now. So if you are to do this one, now you frame that kind of setup on this monthly chart, and when I'm going to do the top-down analysis, you understand this thing deep on that top-down analysis, because the top-down analysis starts from the position trade down to scalping, right? So you can see now what position trade means. Then swing trade, which is that lasts 1 to 2 weeks and above. Those type of trades too, you frame them on this monthly chart down to weekly chart. You start from here first, then let's drop it to a weekly chart now. You can see right here now. This is a weekly chart. This is a weekly chart, right? So the when you get into this type of trade, it lasts for some weeks. One week, 2 weeks, and above. Take for instance, you getting this trade from this candle right here, this week. There's a fair value guy right there that I mark. I told you anywhere I mark on the chart, you see how price respective. When price straight to wherever I mark, you see what will happen there. So let's say you take entry from there, like you sell it from there down like this. You know how many weeks it is? Let's say that 1, 2, 3, 3 weeks. Let's say you just wait for 2 weeks and you get out. So this type of trade, you 1 to 2 weeks and above, that is swing trade, right? So, and when you are using a stop loss for this type of trade too, you can see when you get it from here, from a weekly chart, where will your stop loss be? If you are making that kind of long-term, short-term trade, which is this swing trade that we're talking about now that lasts for 1 to 2 weeks and above, you have to give a higher stop loss to the market as well, because you can see right here, if you have to put your stop loss above this high, it's going to be 300 something pips. You can see now it is not 100 and something again. The weekly now it drops, is lower is in pips of stop loss, and is lower in pips of take profit as well. Is lower than position trade. Position trade is one of the biggest, followed by swing trade, just like the way I explained to you on the node in the previous slide right from the beginning of the lecture. So you can see now this is type of trade I'm talking about. And as we're going to be trading next year, you will see how we will trade. If I see a setup of position trade, I will take that trade, and the day we make that execution, you will leave that trade, will run for some months. Then if you see a setup of swing trade, we'll take it to and leave it. If you see a setup of short-term trade, we'll do it. If you see a setup of day trade, scalping, we'll do it. People will see how we're going to be trading all these setups, because I told you people that with what I'm bringing to you here, you'll be able to trade all these types. Then the moment you're able to do all these, now you now pick the best one for yourself, because I don't do all of them at once. Like I told you now, when I was teaching, there are some of them I focus very well, and you see how I'm going to be doing them next year too, and you too will be doing it, right? So this is the swing trade. Then the short-term trade, now that short-term trade too, this is the same thing. You start your analysis from that monthly chart down to weekly chart, then from weekly chart you drop it to a daily. Drop it to a daily chart. This is the daily chart now. Let's say the short-term trade that we'll talk about is that last 2 to 3 days and above. You can see now. Take for instance, the day I got in this trade entry, I was trading here when Francis came to my house the other day. This was a non-farm payroll week. Then I got in entry here, but it was just a scalp. I didn't hold it for long. But if I was to hold that trade for short-term trade, maybe away for some days, you can see now 1, 2, 3, 4, 5. All these days markets were trending down. So you hold on for the market to give you that run, and once it gives you that run, you're going to see that you have 100 something pips, right? And which is what I told you people, that when this type of trade pans out, you get over 100 or something pips, and you can see now it's still down to 200 something, right? So, and when you are using a stop loss for this type of trade too, the stop loss number is lower than the position trade, than the swing trade, but it still requires some pips to use. You can see this one now. If you have to get in from this trade here and put your stop loss above this high here, this week right here, it's going to be like 43 pips. It's not going to be up to 100 or something pips again for stop loss, right? If you are pulling the notes with what I'm explaining here, you understand that that is exactly what I gave you in the notes. So this is what that swing trade is, short-term trade. I mean, then we have day trading. The day trade now, you can see now the day trade is this one that I was doing on GU that day when we were in school, when I was teaching people live. That one was a day trade. That is a day trading. That is for the whole of that day you were in. So that is day trading. And you did not hold more than that very day you collapse the trade, you didn't hold it till the next day, right? So you can, let's check how many pips it is now. You can see now. This is 90 something pips, 96 pips. If you get it from the week, it's gonna be like 100 pips. That is it. So that is what I say. That when it comes out, it gives you over 50 pips and above, and you now have more than 50 pips right here from this candle. Like I'm talking about this candle. So all these things that I'm doing right here now, you have the chart on your phone already. This is EU. Anybody who's watching this right now, anywhere you are in the world, see, as long as you have access to internet and you can make use of your browsers, access TradingView, I've showed you people, you you have this same thing that I'm talking about right here already. So, and I know now some people like me, like all of them, wisdom, all of them, have started copying my chart, and I know what they're going to do now. So you can see what I have here. Before the end of the video, you and I will have the same charts. And when I'm trading, those things will not be they will not be strange to your face anymore. After this video, anything I have on my chart, you will have it. Then you see how powerful these things are in price. Any level I mark, we are not just marking an ordinary level. I am marking a smart money level. When I mark it, you will mark it too. Then when price get there, you see what happened. That's why I told you that anything I ask you to do, that is what you do. Because if you do otherwise, you will see what price. Like those of you that were running, that were not following instruction, you could see your result that day. Like Francis and all of you see your result before you now picked up. Say, no, let me be humble now. And you even will see your result when you started following instruction. So that is what trading is all about. It is about you following up because there are information given to you that you have never heard about. The things I'm discussing with you people here are things you've never heard in your life. There are things you've never seen in your life. Trading has been in existence before I was born, but because you are not informed, so many of you don't know that such things exist. Just like me, till I got to know. So let's move down to the scalping parts. Now, from the scalp now, you are not going to do the analysis on this daily alone. You can start your analysis from 4 hours if you want to scalp. But to me, as a very good scalper, as an institutional trader, I'm an institutional trader. So I do my analysis from a higher time frame period down. I do it from higher time frame down to lower time frame. So when I say higher time frame, you already know what I mean. This monthly, weekly, daily, I refer to them as higher time frame. So I still do my analysis like that. When you drop it down to 4 hours now, this is 4 hours, let's go to 4 hours. When you drop it to a 4 hours chart now, you'll be doing a lot of scalping here. Scalping is something that you do within, I told you already, within some minutes or within hours, you are out of that trade. If you are to lose money, you know that already. If you have to make money, you know that already. So you can see some of this trade. The trade I was taking, okay, I've cleaned my chart, I've dressed my chart. You can see my chart looks more neat now than the other day where I was trading so many lines. So as we be trading, you will know when I delete those lines, when to delete them. And there are some of them I leave them for a month. I don't delete those things for a month. Some I delete them that very day, and you will know all of them that I delete quickly and the one that don't delete quickly as we be trading. Like all this lower time frame PDRA now, anything 1 hour, 15 minutes, 5 minutes. I like this one now. This 1 hour order block that I still put up here. When I take it to 1 hour, people will see because I took a trade from there that day. So people will see it as I'm going to talk about scalping now. This one now, I don't really need it again. I will delete it, but I want to use it to teach you people. That's why I still leave it on here. So you can see for a scalp now, if you are scalping, you don't waste too much time in the market. And this is the lowest. It requires just I can use when I'm scalping. Sometimes I get 5 pips stop loss. That is why God do it. I know that when he did his assignment that day, I know he was copying when I was trading live. Those my live trade. I was using like 10 pips stop loss, 5p. So he tried to do the same thing from the assignment, but that is not what the assignment said. The assignment said use 20 pips stop loss and use 20 pips take profit. There's a reason why I said that. Anytime I'm trading, it is not every time that I'm using 50 pips, 5p stop loss. It's not every time that I'm using 10 pips stop loss. It is not every time that I'm using 20 pips stop loss. Depends on the setup, right? And you can see here now the scalping type of trade I'm talking about. Like the day I got into this trade, when I was doing this one, I got it from this 1 hour order block here for a fair value gap. You can see it right there already. You can see the fair value gap. You know what fair value gap is already. See this candle week. When I get to fair value gap, I will still talk deep. So I'm not talking about fair value gap right now. I just want to show you a scalping model. Now, this week, the day I was trading here, Godwin did his assignment that day. He was stopped out because he did not use 20 pips stop loss. And I was on this trade that very day when he did the assignment. So I was not stopped out. It's like I think I posted that trade on a group. Yeah, I think so. I was in the same trade, and the reason why I did not use anything less than 50 pips, 20 pips stop loss that day. This is the reason. You can see this week. You see, he traded all. He didn't waste time, then they drop. So I expect there are sometimes you trade in the market where you expect some move. Now, God really did not expect this retracement. So this retracement here took him out of that trade because he did not use the required stop loss. And you are just coming in. You are just a novice, and I'm telling you what to do. I know you are just trying to copy me, everything that I'm doing, but it's good. You are learning, and it's good. Your mistakes right now is permitted because you are trading now. That's why you're using that demo. So I love what all you are doing. But once I said don't do this, that's why I actually need to send screenshot of whatever you are doing so that I will correct you. There are some things you are doing wrongly. Some of you that have not sent any screenshot to me with all the things you have been doing. You have not sent anything to the group. You've not sent anything to me privately. Most of the people that have done well so far, we have been communicating on the group. If you have not sent something, anytime I'm telling you to say send it, let me see. If you don't send it, you will never, like, okay, take for instance, all of you Godwin Francis, when you were starting, you're making mistake. Are they doing you did not send those screenshots to me? That's how you be keeping doing those things, and you will think you were doing the right thing while you were doing wrong. So it is when you send it to me, I will oh, you're doing well. So anything that you're not doing right, I will correct you. Then you correct it yourself. Because when you be trading with live money, you don't need to be making all this mistake. Got in here. There are some things they did. I saw some beautiful things. They did some beautiful, nice things before I got into this trade here. And when I got in, look at the run here now. From this place down here, this is 20 pips. And what did I see? His cap is 15 pips and above is fucking good for his cap. And when I was in that trade that day, I took partial. I'm on 15 minutes now. Let's take it down to 15 minutes chart. You can see now here. This is the entry point here down to this place. I was actually targeting this low, but it didn't get to this low. And now when I'm trading, I told you that I trade with time. I trade with time, right? So when I got into this trade that day here, as I was running down, I've already taken partial profit here. That is how you make money. You don't go into price and price is running in your direction. You wait and be watching price to okay. Look at what happened now. Some people will be waiting for price to take this low, and now he rejected this low. He came back to your entry point, and now the moment this happened, this is when I will enter another one. This one that I took off here, I will enter it back here to make more money. That is what trade management teach you, right? Don't worry when we get there because we are still going into trade management. So this is what scalping is here. I hope you all understand now. You don't waste time. How long does it take? Okay, how long does it take from this trade to one, from here to this place to give you 50p? It is just this candle right here. It forms 12 o'clock p.m. New York time. Then this one forms 12:15. 1, 2, 3. Till this place now. Look at what happened. From 12 to 1:45, you've made money. From 12 to 1:15. Look at this count. Okay, from 12 to 1, just 1 hour. You're taking 15 pips. Okay, 15 pips on a mini lot size. You know what that is? That's $15. 15 pips on a standard lot size. You know what that is? That's $150. 15 pips on a micro lot size. That is $1.5. So whatever thing you're doing in the market, it is not about you need to know that anytime price run in that market, that is money. Some people are in that market with heavy lot size because they have large accounts. Any little move, they make money. That's why it is called smart money. Smart money, the in-depth understanding of what smart money means is this is one of the smartest ways to make money. Here on this chart, I've made money within 5 minutes on this chart several times. Within 5 minutes like this. There was a time I was trading in that when I started my journey back then. I left my first mentor to the real mentor who made me where I am right now. So then I came back to my first mentor where I was trading with my colleagues that were learning together at that time. So they were like, where this boy? Where did you go? You disappeared. Now everybody was surprised on the group anytime I send a trade, like eagle eye. So now those things that I was doing with them on the group back then, going back to trade with them like that, with because that time I have learned smart money concept, and this is the concept that I'm sharing with people. So when I went back that time to trade with them, the group was so lively that time because when I send a trade, sometimes I will post a trade on that group. People will try to get the entry, they will try to rush and follow me immediately, but before they get in that entry, the trade has run to my take profit. I'm out. Because there are some moves that I'm going to show you in the market whereby this scalping one, you will see within 5 minutes, you will see how it can will run. You're taking profit, you've made money, you're out. So you're going to see a lot of these things next year. I will be doing it. So I hope you understand what lot size no what's trading, the type of trading from position trading down to scalping. You understand what it means now on the chart. I know this is, even though you don't get it as we're going to be trading with them, you will understand them more, right? So let's go down to number 2 of our lecture, which is the trading session, right? The time theory. You know, under that types of trading, we have so many things there. Then the number 2 where we talk about time theory. Now, this time aspects, this is what I want you to be very, 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 very. Whatever thing you are doing on these charts, you don't play with time, right? We don't play with time. I talked about key zone. So now I'm going to mark out this chart for you people now to see what I mean by London, New York, and all of that. Because I gave you people different types of trading session. ASL session, London session, London launch, New York session, London close. I am going to show you this thing now on the chart so that next time when I'm trading and I see this is London session, you will understand what it is. So now, first of all, when you go to trading view, you can look at this place where you have time here. When you go to trading view, you click on that place where you see that time zone. You set your time to New York. You can see this UTC 5 here, this New York. That is where you set all these charts, DXY, EUG, all of them. The time must be on this New York always. You can see my own is there. So you put it there. So if you are the one now to convert that time to wherever you are right now listening to me, but your trading view time must be set to New York. The algorithm operates in New York time, right? So this is it. I'm going to, you see this my line, this vertical line, this is what I'm going to be using to demarcate every time. I said we have London, we have Asian, we have all of them, right? So I'm going to show you now all the time. I said from 8 p.m. to 12 a.m. New York time begins a session, right? So let's check it here now. This is 1 hour chart. So each candle you are seeing here is 1 hour. It takes 1 hour to make up one candle here. So let's say that from 8 p.m. Friday, we'll start this from. I want to use where we have traded already, so let me use from Thursday. So 8 p.m. So anything I draw, anything I put on the chart, this line like this, you will see the label of it. You see Thursday, 20 December 2024, 8 p.m. So that is the beginning of the session down to 12 a.m. And this is This is London. This is London. No, London start from 1 a.m. So this is London. As you can see, any day that I will be trading, you will see how I will do this thing in front of you too. This is what time is this? 5 a.m. London closed. Then New York open. New York. Let me put it like this. New York, NY. This one, that is London launch, right? From that 12, London launch. That is London launch. This 5, right? Yeah, from 5 begin the London launch. Then from 12, that one is just an open window there. That is the end of Asian. Then we have the London close, which is 10 to 12 p.m. New York time. Everything is always in New York, so wherever you are the one to take it to your own time. So now you can see what I have right here on this line. Let me take it to a 15 minutes chart so that you will see this line clearly, right? You can see right here now. All this line that I have right here, all these vertical lines, you can see this red right up here. Should I increase the fonts? Let me make it 14 so that you will see clearly. 14. Okay. So now you can see now from this 8 p.m. here down to this place. This is Asian session. This is Asian session right here. Then London open from 1 a.m. It trade all. You can see now till this place 5 a.m. That is London close for that morning session. In New York, it's going to be that midnight. But in our own time, Nigeria, it is morning. When you convert that time to our own time, you see. Then from this London close, that session, you see it down to New York open. This is New York open by 7 a.m. Now, from there, when you are reading the notebook, you see all this time. But I'm showing you now how, if you are trading, so that you know the time you're working with. I always mark up the line sometime like this. But right now, even though if I don't mark all these lines, I don't put them, I understand what I'm doing. I can trade on this chart right now without all these lines. But I want you to understand what I'm doing. So anytime I will be trading, I will be using all these tools and I will write what they mean so that you will see them and you understand them. So this is how you demarcate your key zone. And now you can see upon all this one that everything you see right here, we are only trading New York, which is this 7 a.m. New York time till 10. And from this London 1 a.m. till this 5 a.m. New York time. You are the one how to convert it to your own time in Nigeria or wherever you are listening to me. I know what time it is already in my own country with what I'm teaching here. So if I look at New York time, I know what that New York time is in my own time. So this element, this part here, this time theory, we don't play with it. Because I told you that smart money operate with time. There's a specific time they do something in the market. So it is that time you will see a good price leverage. You will understand even Some people might not see it, but you that can see what Mama is doing, they can read price action, that time window, this time window that I give you here, you will see what I'm going to be doing within this time window next year trading, right? So I hope this one is taken now. Let's go down to where we talk about market structure, which is number 3. We talk about market structure, we have consolidation, we have expansion, we have retracement, we have reversal. So let me delete this one right here now because I want to make the chart clear. Anything I'm done with, I will delete it so that I will talk about the next. So if you are with your notebook, we go to number 3 now, which is market structure. So we'll talk about consolidation, right? So what is consolidation now? I told you that consolidation is when market is not showing any willingness to go in one direction. You can see a clear example of what that is. Let me show you right here. This is a clear example of what that consolidation means. Let's get it from let's get it from here now. You see this range here. Let me do it like this range. Let me use this range. You can see now this yellow shaded area here from here to this part, markets were just consolidating. Just like what if you saw the picture of what I gave you under that lecture, that number 3, the theory part, you see that it is when market does not show willingness to go in one direction. With what market we're doing here, how do you decide that market? How do you know? Market was just going up and down, 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 right? That's what consolidation means. Then after consolidation, what do we talk about now? We talk about expansion. You can now see now what happened. This is expansion now. It led the consolidation now. It broke through upside. You can see it now. I hope you can see the chart, right? It led it. That is expansion that I explained to you, right? So now we'll talk about retracements after expansion. What retracement is, you say you move back into the expansion range, right? That is what we say. Now you can see now when after this up move, it retrace, from here. It retrace from here down. All this down candle right here, that is a retracement. That's what I told you, right? Then I told you after retracement, what next? It's supposed it either go back or it reverse. That is what I said, right? Now, see what happened here now. After the retracements, it went up, it retraced again, it went up, it retraced a bit again, expand. So now, what is reversal now? We talked after retracement. Now we talked about reversal. I hope people understand what I just showed you now. You see, the market was consolidating here. It came down, it went up, came down, went up, then it broke down. When it broke down, it retraced into it, it dropped down again. It displays again. That is another expansion. Then it returned here, like the, then it came back. This is the reversal now. Coming to take this high now is a reversal. Then up that reversal now, it got here. When it got here, it was consolidating. You see what market? If I take it down now to a lower time frame now, this is a 1 hour. If I take it to 15 minutes now, you see what this consolidation means there. You see, at this point, market traded down, traded up, traded down, traded up. Then it went up, drop it. When they were trading all this thing, I was seeing them. I went short from this one. That's why I draw something there. I was short that day from here. I sold it from here that day. So it was non-farm paid. All this up from here. I was just looking at them. Then I did my thing from here. I ride the market down from here. I got out. It was on Friday. So it was a TGIF setup. Thank God it's Friday setup. I told you in class that day and it's still on my trade there. Just my live trade. So you can see what reversal is now, right? There are two reversal right here. After taking this high, that is, it came back again to take this low. You can see now, up run, it retraced, it ran up, then it could not take this high again. It dropped to this low. That is another reversal down to where it is right now. So I hope you understand what that reversal is on the chart. Now, when I'm talking about reversal, what market structure break is. Let me quickly explain that right now. You can see a market structure break here already, right? This play right here, this is a break of structure that I showed you people, right? POS. That's let me give it 20. You can see now, this is a break of structure to the upside. When the market was consolidating like this, it broke the market structure upside like this, right? That is what I told you people, right? On the market structure break. Then it retrace. You can see a fair value gap there. Those of you that are you want to, yeah, your eye, I'm training your eye now to become an eagle eye so that you see like eagle, right? So as I'm doing this now, some of you, anytime I'm watching my mentor back there, like whenever I'm watching him, like ICT, when he's trading live, I'm watching him. I look at everything he put on his charts. Before he says something, I've already seen it. So like this fair value gap now, you can see how what he did with it. When I'm going to talk about fair value gap, these are meant already. So this is a market structure break to the upside. It retraced back to that level, then it went up again. Right? That is another market structure break here. The second one here. Right? So you can see what I showed you people on that lecture when I was teaching the market structure break. I see what it is now. So you know it on the chart now. That is the one to the downside. So you can look for the ones for the that is the one for the upside. You can look for the one for the downside. One beauty of what I've done with you is now you have access to trading view. Anything that I'm doing, if you don't get it correctly, you can come to the chart and play and do this thing over and over and over again. Check the chart, study the chart on your own again. That is why from the beginning, after that first video live after school, I gave you people the charts. I gave you people the app. People install the app. Then you set up your trading view. You know all these things now, right? So let's see now. We talked about price delivery, right? That market move from consolidation to expansion to retracement to reversal. That is how the market revolve. And you can see what it is here too. What it is here. How market move. Market was consolidating here, consolidate. It drop up, then displaced. This is a displacement, breaking the market structure. It retrace, then it expand again, which is the market level. If you are still on that number 3, you see what I mapped out on that market, that price level, where after a market structure break, it retrace, it expand again. From expansion, I told you that from expansion, market can move to reversal. It can move to retracements. And look at what happened here now. After the second expansion now, what happened? The market reversed to take this high. When it retraced now, it could not come down to take this low again for a second expansion on the downside. So it reversed. I told you that market can move from expansion to reversal. And it can move from expansion to retracement, from retracement to reversal. Then consolidation is when the move begin. when you if before smart money start a real move, they must accumulate orders. That I told you what consolidation is. That what they are doing anytime you see market is they hold the price in a small range. It's not willing to go in one direction. That very fucking moment, that is when I'm paying attention to the chart. I'm not going to trade insider consolidation. I'm not trading when they are accumulating those orders, when the market is moving like just like this now. Just like what we have here, when the market is moving like that, like this, like this. We don't do this way they are taking money from people. This is trap. Here people are buying, selling, buying, selling, buying, selling, buying, selling, buying, selling. And all of a sudden smart money, what we wait for is we wait for them to distribute what they accumulate here. Because we don't really need to know how many orders they accumulate here, but people were buying, selling inside this place. And we know where price is likely to go. Because when I get down to PDRA, you people will understand what I mean by that. When they are doing this, when they are accumulating orders actually, I know what they are trying to do at that point. Where they are doing this thing, I will tell you that okay, you look at what is happening, this is what you're gonna see next. And you will see it. That's why those my live trade. I was calling it, I said it before it happened. I always say it before it happened. So if you cannot see it before it happens, you cannot make money. You have to see it before it happens. That's how you plan it. If you know that price is going to come up here, or you know that okay now market structure has broken to the upside, and you know that when you retrace, you have a favor. You take this one is not even up to 1 to 2. 142 is not up to that. So the one I took, let me show you an example of the one I took last time. Here, this one. That day that I got into this trade here, let's say that because this Godwin, when Godwin was doing his assignment, this he shot from here, he sold it from here that day. I was on that trade, but he could not manage his trade where he didn't use a proper stop loss, so he lost it. Now let's say that this is my stop loss because this is where my stop loss was that day, this red line. So now this is the risks from here. This is the risks. Let me put it yellow now, or let me use it. This is the risks. So now what I put up here now, it is 20 pips. You are giving 20 pips to the market to take 20 pips, to take 40 pips, to take 60 pips. So the moment I do this thing like this, the moment this is it, 1, 2, 3. Let me give it a different color. 1, 4, you can see here now. What I just did here is this is 1 for 3 weeks reward. This one right here, it is the rigs. Let me change this one to this. Okay. So this is the rigs, this red one here. Then 1, 2. This is 1 for 2. You give 1, take 2. If you reach here, that is 3. So now let's say now from this entry here to this place is 20 pips. So 20 pips stop loss with a micro lot size, you know that is $2. 20 pips stop loss with a mini loss size, you know that is $20. 20 pips stop loss with a standard loss size, that is $200. Then when you use that to take 2, this is 40 pips, right? For the 2, 40 pips here for the 2. Now You give 20 pips to take 40 pips. Let's say that we're using a mini lot size. Then that 20 pips is $20. It runs 40 pips now, that is $40. Then once you leave it for 1 for 3, it's going to be 60 pips. So now you give 20 to take 60. That is 1 for 3. Then you look at how the trade still run more. How many risk reward? I told you that time is. I'm going to be doing more of this setup next year. When I told you that I see a setup of 1 for 10, 1 for 5, 1 for 6. Okay, let's see how many is this one. You can check this thing yourself when you are doing your study. You can look for this kind of setup, take them, they are there on the chart. You can back test. What I mean by back test is those places that have already traded, you see candlesticks there, so you check all those things. Now let's see how many is this one. Let's see. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. Okay. You can see that this is something that you give 1 to take 7. So let's see how many pips is that now from this entry point to this place. That is 146. Okay, let's say 1 for 7 now. You give 20 pips to take 140 pips. That means if you are trading with a mini lot size, that is going to be $20 to take $140. If it is a standard lot size, that is going to be a $200 to take $1,400. Then if it is a micro lot size, that is going to be $2 to take $14. So when you see this kind of setup, out of 10 trades from the calculation that we did, you see this kind of setup now. Out of 10 trades, you lose 6. You give 20, 20, you give 20, 20, 20 p 6 times, it goes, you lose them. Then you now win 4. When you do that risk reward ratio calculation that we did, you see what you have. And I do this thing more right that I am wrong. That calculation that I did for you, that risk reward ratio, if you are there now, on that number 4, when you go there now, that calculation that I did, that was just a rough calculation. I just do that calculation to encourage people that no matter how you are losing, if you use a proper risk management and this higher risk reward ratio, you will never have issue in the market. Losing trade will never hinder your profitability. It will never. This is the code. This is how you beat the market. There is nothing out. There is nothing outside that. You have to be flexible with that. That's how you beat the market. And you will see how we're going to be doing this thing next year. You see when we get into a trade with 1 for us, it's going to move. You will see several of these moves. So I hope you understand what risk reward mean now on this. What next? Let's go to number 5, where we talk about management. Now this is where this one already people have it already in your just my live execution when I talked about how I made your 30 days income part 1, part 2, smart money mindset you should have part 1, part 2. Those videos I trade management are there already. I have trade management there already. So let me show you what that means. When I was trading that day, this is my stop loss, right? I said I got in here and my stop loss here. As this trade started running down, this is another block. Immediately drop this other block with this displacement. I move my stop loss from here to this place. I talk about management. You know what I talk there? I talk about trade management, risk management, money management. So now under trade management, I move my stop loss here. Then immediately I saw this in New York. This you can look when you open now around 7 a.m. New York time. When they were starting this little one here, I now put my stop loss. I didn't even waste much time on that trade. I was not in to get all this long move. Dot this one. This is this black dot line right here. This is the midpoint from your entry. Let's say okay, this my entry was here. This place. So this is the midpoint. So what trade management is saying is, as your TP is here, this trade, once you run from your entry to the midpoint of that range, the total range is, okay, let's say the total range is 30 pips, right? Once you run 15 pips, this is 15 pips here, the midpoint of the range, you have to take profit with one position off. If that is the range you are trading, if this is your TP, then the second thing says always take profit as 20 pips. If you are in with more position from your entry here, you take something from the midpoint. If you still have another position, maybe you are in 3 position, you can take another one from 20 pips, right? Take another one from 20 pips. Then the last one says always adjust your stop loss to break even once you take profit, once you take partial profit. The moment you take something here, you move your stop loss now below your entry, so that even though if the market comes to stop you at that point, it stop you in profit. You are get stopped out in profit, not in loss. That is what I was doing. Those my life trade. You can go back and watch them now. You see how I was managing the trade, everything I was doing there. So that is what that means. Then we talk about risk management, where I said you begin before the point of entry, and you always respect the risk side of the trade. Just like what I was saying, that as you are risking your stop loss now, okay, let's say that where the stop loss was before this line, let me put it S. What is it? Okay, S. Now, what I say, respect the risk side under the trade, under the risk management is, you see, from here, when you are risking this 20 pips, let's say, okay, this 20 pips here, when you are risking this 20 pips, in your mind, don't ever forget that you are risking money, because you are hoping for a $60 or a $30 now. You forget that you hope you have $20 to give to the market. You forget. Your mind is on that one that you want to make. Then the moment the market comes to stop you now, you hurt yourself. You become hurt because you did not plan it. So you always respect the risk side of the trade. And when you are risking, don't take too much risk in anticipation of you to make a higher money. No, you have to take a risk that is permittable by your equity, right? Your equity, don't over leverage. I said that under risk management. Don't over leverage your equity. You, if you know that your account is not a large account, you know the loss side to use. I show the people, and what we're going to be doing next year, we're operating with $100 account, I was said. Now, I also say that when you have a losing trade, that you should reduce your loss size, reduce your risk to 50% of what you lose previously. Now, take for instance now this trade, if you get into this trade with 20 pip stop loss with a mini loss size, right? With 1 mini loss size, and that trade, the risk of that trade is $20, right? And you lost it. Once you lost that $20, the next trade you want to take, you don't risk $20 again, you risk $10. You reduce your loss size to 5 micro loss size. You're not going to use mini loss size again. So that is what risk management on this one is saying. Then the money management part, where I talk about you managing your money, keeping money, taking power. That one is where it's explained on that theory part already. So let's go to where the real sweet part of the lecture is going to where we talk about premium and discount, premium versus discount, premium versus discount. Let me take you to a daily chart where I'm going to talk about this premium versus discount for you people. This is you can see now, this is a daily chart, right? This is a daily chart. So let me delete this one on a block now. Okay, let me delete it. You can see this thing that I draw here. You don't know how I get them when I talk about premium versus discount. Now, on this monthly chart, this is a monthly chart now. This thing, this level, and I told you that if smart money want to sell, they always sell when it is high, than they buy when it is down, right? When it is low. You can see when price was trading up to this level, this is a premium level, this is a premium level. The price was high, then you see what smart money did, they sold it into this low here. Into this low, this is a discount level now. The price is low now, it's below this low now, it's low. So now smart money, you will see by the end of the lecture what I will talk about this discount. But in the market, when I'm talking about discount and premium, discount and premium, discount and premium, this is how market operate. This is how smart money did. I said that. And I said that you should take note that this premium versus discount, this is the logic smart money always use in the market, right? And I told you to take note of some certain things that price do not engage price when it is trading in between the two levels, right? So what am I trying to say? On this monthly chart now, if I want to trade on this monthly chart right now, I will not engage when price is trading in between this place on this monthly chart. If I'm looking to take a position trade, I will wait for price to come here before I sell, or I wait for price to trade here before I buy. That is what this one is saying. And I also said that only engage price when it is trading at either premium or discount here. That is what I just said. Then I said big up move begins from discount. Big down move begins from premium. You can see it. This down move here is started from premium. You can see for 3 months this market has been running down. And now we don't know what it's going to do from here. This is the discount now. So if we are to buy, this is where we look for that opportunity on this monthly chart. If I take it to a weekly chart now, you see the same thing that I'm talking about. Anything that I'm drawing on my chart, if you see anything reddish, yellow, those things stand for premium something. It stands for something that is used to sell. The anything that I'm drawing that you see this color that is green, anything that is not related to red, it means discount. It is for buy. So when I'm trading, even if I don't write anything on my charts, or if I don't all this line that I'm drawing, if I do not label them, anything I draw, I know the meaning of that thing that I draw, right? So this is what this one is saying. If you want to engage price, when you sell it from premium, you see how price will run for you. Then let me take it to a daily again. Let me even break this thing down for you on a daily chart. This is a daily chart now. This is a daily chart. You see this place right here, the premium that I showed you from monthly chart, from weekly, those fair value gaps. I'm going to go deep into them now. This is the premium on this daily. This is the discount. You see, if you have them on your chart already, they are on your chart right now. Now I told you that order block, bullish order block, or bearish order block. I'm going to show you this one. I'm showing you right here now. Is let me look for bullish order block, but that is a bearish one there. Okay, if I will see bullish one on Dixie. Let me use bearish one here. This one that is here. You can see that this is a up close candle that is found in a resistance level. That is what bearish order block says. This is a resistance level. Where the retailers call resistance. These are this level where this smart money reference point, the PDR is. You can see what I have here. Let me take you to a weekly chart so that you see what I'm talking about as resistance. I am on weekly chart now. This fair value gap right here. You see how beautiful it is. That is the other block right there. I will show you fair value gap when I'm talking about fair value gap on 15 minutes. But let me finish talking about the other block here. Then, what did I say that you should do when price how do you make use of the order block as an entry now? I said that when price run away from it, smart money will capitalize on it. When price return to it, we engage. You can see what happened here. I said that, okay, when you get in, where do you put your stop loss? The high, above the high. That's what I say, right? Then if your stop loss was to be here and you get it from here, you are still good. You're still good. Stop loss here. Stop loss here. Then here, it didn't come to this place. You see what happened. You saw what happened? I saw what happened that day and I followed them. All this wrong, all this down move, you can see it. So that is the power of order block right there. I'm going to be using a lot of them next year. I've used them in just my live trade already. So you can see what that means. That is order block right there on 1 hour. So all these PDRE, they have higher time frame PDREs, lower time frame. Now, when I finish this part, I will explain to you deeply of this PDRE, how you utilize them. But let me talk about fair value gap first. Then I will go into that. You can see now the fair value gap. You have been working with them already. You have been seeing me all this while with fair value gap, but the one of entry here now. I want to show you what I'm talking about here now. How I got my entry that day. That's why I still leave this thing open. That day was non-farm payroll. Then when it was running up, I was just looking at them. Immediately I saw this fair value gap. This is a fair value gap. You can see right there. Let me hide it. If you want to hide your chart, you can see that eye symbol right there. So you can see this candle wick and this one here. It is a fair value gap on 15 minutes. Then what did I say you should do? I say fair value gap, it is an inefficiency, right? Fair value gap is an inefficiency. When you trade, price, you leave it open, it means price is not efficiently delivered and it will come back there for efficient price delivery. So the moment the price returned there, what did I do? I went in with smart money. Francis was with me that day. He came. I got him from here down to this point. I didn't even get up to 40 people. It was like 30 people. Because it was on Friday. So I left the trade. So this is the fair value gap. And as I'm going to be trading with this thing next year, you will see how, because these are the things I use. I told you that this tool, only order block is enough for you to make any amount of money you want to make in Forex. Only fair value gap is enough for you to make any amount of money you want to make in Forex if you know how to use it properly. And you will see how next year you see I'm going to be using the two of them. And you too will be using, because after this lecture, I'm going to go into a top-down analysis, and that top-down analysis, all of you will do it. You have the same thing on your chart. So next year when I'm working, nothing will be strange in your face again. Everything I'm talking about, you already have it on your chart. That is the level I'm bringing all of you to. I am bringing this live to you just like I said. Right? So you can know, you can see what fair value gap is right here now. On the higher time frame, I'm done with this PDRE of a thing here. I just want to, because I've given you a deep lecture on it already on the theory part. I just want to show you what they are on the chart. So when I'm saying of when I say higher time frame PDRE, you know what higher time frame is already. When I say higher time frame, then you know what PDRE is already. So when you are doing your analysis, anything you are doing, your work starts from this higher time frame, right? So anything you see this place here. This is a monthly fair value gap. You see this candle wick and this level here, it is a fair value gap. That's why I'm marking. And you see when price traded there on a lower time frame PDRE, it's going to react. Look at the day price traded into this place. All these places that I mark. That day, it did not waste time. There, it ran up quickly, immediately to this point, to the premium level. This is a discount, this is a premium. It ran to that level, then it dropped back into discount. It is in a discount now. You see now, it's outside it. And I told you people that January wants to come up. I will take some rest after this lecture because I've been working all these days, coupling this lecture, preparing this lecture. So once I start this lecture to people, as people are studying, digesting it, I will take some rest. Then once I come up, we are going to be doing a lot of things, right? So you can see now all these higher time frame PDRA. When you mark them, when you drop it to a lower time frame, you will see lower time frame PDRA inside a higher time frame PDRA. Then use it. What am I saying? Which ground am I saying now? When I will go into top-down analysis, you will get this part properly. Then I talked about liquidity concept, where I said smart money, liquidity. All they are after is liquidity. Everything. Now let me show you what they did here about this liquidity concept that I told you people on that theory part. I told you that I got into a trade here, right, that day. The reason why I got into that trade, this is the reason I want to explain to you. It is because of what smart money did. Their liquidity graph, they engage liquidity. You see this thing that I put up here, this yellow shaded area here. Let me take you to a daily chart. Let me show you what it is. It is a higher time frame PDRA. Anything daily, weekly, monthly is higher time frame that I say, right? You can see that day that I was trading. Just my trade that I recorded. You saw that I took a trade from this level, right? That day. Now, when I took that trade, price later came back after I left the trade into this level and it dropped. So this level, I still use it a lot. This level here. Don't worry, later on in the mentorship, you know how I use it, but I want to show you what it did around that level on a lower time frame on 1 hour. I'm on 1 hour chart now. I hope I'm not too fast. But if I'm too fast, you can slow it for yourself. Those setup when you're watching on the phone, you can slow it ahead. So you can see what it did here. You look at this relative equal high. All this relative equal high here. This was smart money did. They swept them. I told you that liquidity is a situation where an asset can be bought or sold without affecting its current price. That's what I said, right? So you can see what it did here. This is one of it. This is when I got into this trade that day. When they took out this high, people, a lot of neophyte traders, a lot of retail traders, they will see this as a market structure break to the upside, thinking that when price retreats, they will buy it more. No, smart money don't do that. So in London, when I woke up, I saw this run after they took out all this high with this fair value. I was okay, wow, you have done beautiful things. What did I say? If you look at the picture what I give you on that other block and fair value gap, you will see that when it run, this is the highest up close candle right here that is found in a resistance. This is the higher time frame period and you take liquidity. It didn't really get into that play, but it swept all this high and I saw these things it did here. Price does not need to come back to take this high because they have already swept all this high. People that were short, people that bought that sold the market, they have taken them out, taking their money, swept them out. That's what I talk about smart money. That you look at smart money, see liquidity. Liquidity is one of the sole aim why smart money engage price. And so when they get into price, how do you know that smart money are in place? How do you know where liquidities are? I asked people in the lecture under the theory, how do you know? When you come, anyway, you see all these relative equal highs or equal lows, you know that people stop loss are there, there is money there. Any high and low you see in the market, there is money there. So when I'm going to trade, anytime I want to trade, I always wait for smart money to take money first from people. Because when they take money from people, they are going to send price in opposite direction. So when price goes in that opposite direction, there are some other things they will do. I'm the one seeing their footprint. So many other people cannot see it except you understand what they are doing. And just like these things that I'm sharing with you now, the things that I'm sharing with you right now, by the time you start doing this thing next year, you will be surprised when you will doing this thing in front of other people, and they will say like when you are talking, they will, when I started trading that day in front of people were like I was speaking in tongues. But right now I am so happy that so many of you are getting me right now. Everything is becoming interesting now. And after this lecture, you will see how you and I will conversate next year. Like our conversation is going to be very, 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 very frequent in trading. When you call me or when I talk to you on phone, at this point I can make a good call with you and I say this is what we're looking on the chart. We can be talking right now. And after this lecture, you're going to be better. Like you're going to be better if you do exactly what you did to those previous 9 videos. Everything you did in those 9 videos, some of you that are doing well right now with those videos, if you apply the same thing to this one, you will see your own result in your own journey. So this part, always notice that this is what liquidity means. You can see what I did here too. The day when I told you, you see all this high when I was trading here too. That day that I took this trade, before I engage, I told you that on that 15 minutes chart, this is how they always do it. This thing happen, they repeat over and over and over again. And the only way you can spot them out easily, it is when you are familiar with them. Look at what he did. Look at all this relative equal high here. Look at what he did. All this high. Let me draw something for you people to see here. Let me take a pencil. I want to draw something for people to see. You see this one? All this high. These are money. All this high you can see here. These are money. These are money. These are people's stop loss. I'm drawing a dollar sign, right? So let me delete them. Now, when you take out money from people like this, some people already, when this market started running down here like this, some people were short. Some people already sold it. Then smart money, because of time element. That time, when market was trading here, I know I was just looking at them because it is not the time need when smart money engage. Those time that I give you, those trading session, that's when you see these men moving. That's when they are moving large funds. It is when they are moving large funds that will go in with them to take that advantage of the move. It is not every movement in the market that we are engaging, no. So now look at what they did. They take all these liquidities here. I was watching them. Now these people that bought this market from here now, they put their stop loss above this high. Smart money keep stop them out. Then some people will take this one as the market structure break to the upside. Then they bought it. That when it retrace, they still they still bought it again. So this up run, if you were in price that day, you engage, you move with them, you will try to buy because you see market running up, so you will buy. We don't do that. I don't do that. I was watching them that day. I did not engage. Then I waited for them for my thing to take place. If you watch my live trade, you will hear me saying that I am waiting for specific things to happen before I engage. So when I come up and say I want to make my entry here, don't think that I just come up to the chat and say I'm making my entry here. I've been planning it, I've been watching it, I've been monitoring it like a sniper. I told you that as a trader, you're like a warrior, you're like a sniper when you lie down with your gun. You are watching, you are waiting patiently for that animal to settle down before you shoot. Because when they are running, blah 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 blah, if you shoot at that point, you will not kill, you will miss. When that breeze is blowing, you wait. You wait when the market settle. Hey, this is when the real boys get in, the real men. That time too, we get in with them. That's what I told you in the lecture, that when this happen and smart money will do this, and when smart money does that, we follow them. The things I'm saying here now, by the time people will be doing this thing next year with me, you will see the power of these things. And the moment you can do this thing, when you put them into work, you will feel just like that, just the way I'm feeling anytime I'm trading. So I hope you all understand what liquidity means now, liquidity concept. Anytime, always, we don't work without that. They must engage liquidities. You can see what they did here too. The same thing. I myself, sometimes when you are not patient, smart money will take money from you if you're not patient. Right? And now look at what happened here. When I told you that sometimes when I get into a trade, if you stop me, I'm still going to get in again. Look at what happened. Look, this is another block. This is the fair value gap here. I lost this trade though. This was I took a trade from there too. I lost this one. I got in here. This was right from here. That did this is another block too. So now look at what they did. That's why sometimes when you are not patient, I told you that any mistake you make right now, that mistake can be corrected without your demo account. But when you are trading with live money, if you make mistake, you lose money. Like what I did here, I didn't worry about it because what all the things I've been doing, the trade, I still got some more interest. So what happened here that day was when it was on Monday, and there's a reason why I have this. The day that very soon when we are talking about making our ends meet, I have it right there what I said on trade on Monday. So I want to share this little one with you so that when I'm talking, when I say don't do this, because I don't want so many of you to make this mistake, cause damages to yourself before you learn it, before you take the right thing. I'm showing you this trap. As I am teaching you, I am telling you that okay, look at this one is not good. This is a trap. This is a trap. I'm telling you how to defend yourself. I am not just training you. I am training you to become an independent trader. Independent. Right? I got in quick on money, then it came to stop me out into this place, taking this high, taking these liquidities now. Because my money is part of the liquidity. When you are wrong, you are liquidity. The moment you get it wrong, you now become the liquidity. That's how it works. If you get it wrong, if you are in front of smart money, when smart money are not ready to move in, if you get in front of them, that time I was in front of them, smart money was still moving up. They were not moving down yet. Then I went in, put my stop loss in front of them. I get crushed. Then when they start running down, you now go behind them. It is when you are behind them that you are safe, but when you are in front of them, you are not safe. When you are in front of them, you are liquidity. When you are behind them, when you are behind them, what are you? You are smart money. But when you are in front of them, you are liquidity. So that is what liquidity is. Yeah, I hope you all understand that now. And I just shared this one with you right now. And as we're going to be trading next year, I'm going to document all my trade on this channel. I'll be doing it. All my losing trade, all my winning trade, you will be seeing it. So I hope you all get that part now. Let's go down to where number 8, where we'll talk about making our ends meet. On that number 8, we'll talk about making our ends meet. There, I'm not really going to talk about too much things on that on the chart right here now because those things there, they are not things I'm going to share you on the chart. I cannot show you food here. I cannot show you rent here. I cannot show you clothing. those things that are our monthly budget on number 8, making your end meet. Then the other things I want to show you there on that number 8 is how we're going to be trading. I said that we will be looking to take a trade only when smart money engage liquidities into a higher time frame PDRA. So what does that mean? Look at what happened here now. That is what smart money just did here. All this weekly fair value gap right here. Let me show you people. Anywhere I shade like this, it is a higher time frame PDRA. Either it is a fair value gap from weekly, from monthly, from daily. Right? So this one right here, when I say that we will only engage by when smart money engage liquidities into higher time frame PDRA. So this is what I mean. This is a higher time frame PDRA. They take all this high into it, then it drop. Then number 2, making your ends meet. I said that we will be looking to take a trade only in London and New York session, which I already told you people that that is the session I trade. So London and New York, that is where we'll be trading. Then I said that number 3, we will only trade with 2 positions with 2 micro lot size. So when we get into a trade, as we're going to be making our ends meet next year, when we get into a trade, we're going to use 2 mini lot size, 2 micro lot size. 2 micro lot size, and we will use 2 positions. Then number 4 says we will only use stop loss of 10 to 20 pips. So any trade that we get in, we are looking for a setup that will give us like 20 pips, like 10 to 20 pips stop loss, whereby we can use that to get like 40 pips, 30 pips, 50 pips and above. That's what we'll be working on. Then number 5, I said that we will always take profit at 20 pips. That is TP1. I've already discussed that. Then we will always collapse the entire trade. All this one on hand. The last one, which says we will only be looking for 1 setup per week. Harvest that and stop trading for the rest of the week. So that is what we're going to be doing next year. Once we have one winning trade, just like this type of trade now, take for instance, look at what happened here too. This one, after the take out this side, what I showed you that time, into the drop. This is the fair value gap. You return to it. I missed this entry. So wisdom, you can see now. You said your last trade you posted on the group that day. You said you missed the entry. Yes, I miss it. Even ICT himself, who authored this thing, he missed so many entry too, because you are not going to be in the market always. This very moment when this market was trading here, I wanted to take this trade. I have done the analysis. Oh, okay. Then in the morning, I missed the entry because I was in a private conversation, a very important conversation in the morning with somebody. So that conversation too, it prevented me from making money that day. So I missed this entry, right? So there are, in your own life too, there are some things you'll be doing. So if you are not a slave to the chart, so if you have some other things that are more important, like it's not every time I come to trade. There are some other things in my family. Sometimes my study prevents me from trading. If I'm having an exam or test and I don't have time to be watching that chart or to frame it, it's set up, I stay away, right? Somebody was saying that when you are trading, that trading takes all your time, you won't have time for your family. No, you people will see that now. Those of you, because I have a student that told me that, Godwin, and he's here now. Godwin, you will witness that. You will see how we're going to be doing this. We're going to be trading once in a week. Once in a week, once we get a setup, we'll hit our TP, we'll take that. The rest of the things you do in the market for the week, maybe you want to study the price action, you want to see what price is doing, but we are not trading again. To make our ends meet. And you will see how we're going to make that money with just what I just told you. You don't have to trade more than once in a week, and you are going to make that fucking money. So that is what that one is there. Then I have rules. I told you the rules. The rules already. Let me just quickly recite them again here, because there are some things I want to explain to you on the chart about the rules. Number one rule says we do not trade every first month of the year. Let me tell you for now. Let me take you to a daily chart. Like now, January coming up, I told you that we're not going to trade. We use that first month of the year to study price action to see what you can see right now. Market is consolidating here now, it's not really moving properly. So January, we will leave that. We'll be watching what they are doing. We don't engage, we don't trade, we only watch and see what they are doing. Then we'll use that to study price towards February. Right? Then number two rules say we do not trade every first week of the week, every first day of the week, Monday. You can see that already clear. Now, that losing trade that I showed people around here, where is it again? Here. Where is it? I told you that I had one losing trade here that day. Here. If this thing was to be after this thing happened here, before they drop it. Now, on Monday, just the way we leave that first month of the year to study price, that is how you that Monday when they open, you don't really know what smart money is going to do yet. You allow them to trade so that you see their footprint. You see enough of their footprint before you get into price action. You read enough price. When I'm reading the tape, I read it. When it makes sense, when I understand what smart monies are doing now, I know, okay, this is what they are doing now. This one is as usual. This is what they always do, and I've seen it. I get in. So that is why I do it. Then this Monday, you leave it. It doesn't mean that does not mean that you cannot trade. That is discipline, and that is you seeing your debt in the market. It is not weakness. That is power. The power in trading is when you know when you are likely to lose money. Like you know that this period something is likely to fail, and you avoid it. Let me tell you something. When I came up, they didn't give me all these rules. They didn't show me all this trap in the market that don't do this, don't. I learned to a point where I myself get to understand some certain things, and these rules, ICT gave us so many rules. It's not this rule I gave you now is not even these are the ones I just gave you with what we're going to be doing next year. If you can focus on this, don't blame the rules. When you see your trap, I'm telling you that dead, no one can see dead. If anyone can see dead, it means we're not going to die, because when you see dead, you dodge it. But in the market right here, I'm showing you you're dead, then you dodge it. So, like I told you from the beginning, the reason why I give you this rule is because I don't want to give you something and you don't know how to manage them, you don't know when not to do it. This January, you will see how price will deliver. Other trader gamblers will be making money, but that is not money. Can you repeat that thing you are doing over and over and over again? Can you do it again? If I know that these things are not settings, I cannot repeat them, I will not waste my time trading. Right? So the rule, that is it. Monday we don't trade. Then third one say do not trade ahead of the following new releases: non-farm payroll, rate announcement, consumer price index, that is CPI, and Federal Open Market Committee (FMC). These news events, I will show you what I'm talking about when I want to do the top-down analysis, because on the top-down analysis, that is where I take you to everywhere I make my research before I come here to trade. I do my analysis, make it neat, I prepare it down before I come up on board to trade. So you will see what I do. Those of you now that are very smart in copying me, now get ready to copy me again. Then you get the same result that I get. Just like those of you that have been copying me, you can see your result now. Now, one sweet part of this is from that demo, you are seeing your own result there. And right now, those things you have been doing, all this while you have been doing it blindly. Now you are going to do the real thing. You know what you are doing now. You are not acting blindly again. So this new release that I'm talking about, there are news events where, let me show you something. This long candle you see here, this long down candle here, this candle, they don't just form in price. Something result to this candle. Anytime you see serious run like this, smart money are heavily in price, running for liquidities. And there are some specific news event they use to deliver this price. Anytime you see that, just like where you're listening to news on radio or any media platform, before they come to announce those news, there's a calendar where you will see those news. It's just like you already know when it's Christmas. You know the date of Christmas. It is on your calendar already. So in trading, we have economic calendar where we see all the news that are going to be announcing about this currency, about different countries, this region that you trade. So whenever they are announcing things about this currency, smart money use that information to do something in the forex charts. That's why I took you people to the investing.com app. The only thing I use that app to do it is just for me to see my economic calendar, to see what smart money have to do with those news. That is the only thing I use that thing for. And those of you that cannot install the app that day on your phone, I'm going to show you how you can access that through your Chrome. I will do that when I'm doing my top-down analysis. So this candle here, this news event that I'm talking about under this rule number 3, they are the one that result to this kind of this long candle, this CPI, non-farm payroll, FOMC. And even will be seeing them next year when it is time for them to release this news. Immediately that news hits the market, you will see what will happen. So that is just that. And this information I just gave you now, somebody that has been training when I came into the industry newly, somebody that I was relying on. I could not trade without that person at that point. Anytime I used to trade, I would wait for him. He would send signal to me. He was trading blindly. He did not know these things that I just told you now. Then when I left them, I went to study smart money. Coming back, that same person now is under my mentorship right now. I gave him guidelines, I gave him link on how to study this thing, and he didn't even know anything about this economic calendar that I'm talking about. Somebody that I met in trading, he has been trading before me. And this information are the one I'm giving you right now at the beginning of the journey. As I just come in, just like I told you that I don't want to waste your time with me. So at the end of this lecture, there are some certain things that I'm going to tell you to do. Then you will see how you can put this thing into work for yourself and start making this shit done for yourself. Everybody will be surprised when you will start doing this thing. Within this period of time that I'm giving this thing to you, you will surprise. So that is what this new release is all about. Then number 4 said, do not trade outside our trading sessions to key zones. Yeah, I already told you. London or New York, that is where we're going to be trading. Everything that I'm teaching you right now, the moment you are very, very, very familiar with this session, you don't need to stress yourself with any other thing. Right? We do not trade banks holidays and public holidays. Yeah, I told you that already. On this bank holiday and public holiday, you see that the charts. Smart money will not trade. Banks doesn't trade on holidays. Banks don't trade on banks. So from that, how do you know these bank holidays? How do you know this public holiday in the market? The public holiday I'm talking about, I'm not talking about Nigeria's public holiday. That's not what I'm talking about. I don't trade Nigerian currency. I trade Euro, USD, GBP, USD. So I am the news that I'm looking to see. It is that country that I am. Anything that I'm doing, all my analysis, I'm focusing on those zones, those countries, US and Europe. That's why I'm doing my analysis. So it is what the news If there is public holiday, it is from that economic calendar, that investing.com, that app, that is where you see all the economic calendar, all the news events, the public holiday. If banks are on holiday, you will see there, they will write it. Bank of England, Europe, you see them the holidays. So when it is on that holiday, we don't trade because smart money, they don't, banks don't trade during that point. And it is when banks are trading, you already know what smart money means when I say smart money. So they won't trade. What I mean by they will not trade is not by the chart will not move. People will still make money that day, other people will still trade, but we the real smart money, we engage when we know that smart money are the one operating. We don't, if you make money from this chart blindly, you don't know what result of that money, you just make it. If I ask you now, why did you get into that price? What do you think is going to happen? Can you repeat that thing next time? If you cannot repeat it, that is not power. If it is something that you don't, right now, every of my setup, I know what give birth to every of my setup. Any money I make in the forex, I know what give birth to me. I know how I make it. And I can still do the same thing again, over and over and over again. So that is the power. So the moment you know that you are operating with smart money, you know their footprint. So these days they will not trade for you to see their clear footprint. So you leave. You are still going to see some things. The fair value gap, the other block they used to deliver price and all of them on these days. But when you are trading, when these people are not trading, when you set the chart, and you will be seeing all these things when you are trading, you will express all of them. What I'm saying, right? Then number 6 says we do not trade the last trading day that is heading into a long holiday, like when you are, take for instance, let's say okay, this Friday is going into a long holiday, you will see a lot of manipulation in the market. Market will not go in one direction, they will just take it up, take it down, whipsaw, they will just be running up and down, it will not run in one direction because that is the end. It is just like the end game into a holiday. So they will try to take money from people, like, so all of this we stay on the sideline. That's why I'm giving you this part. When you know that this period, these things are likely not to hold, then you rest, cross your legs, sit on the sideline, then you leave the neophyte traders, you leave them, let them be playing in the market. That's why you see all of them are losing money, a little bit up and down. Right? No trader that does not lose money, but the point is maintain those losses. I told you that I do this thing more right than I'm wrong. So it is because of the discipline and how I engage the chart. If I decide to trade every day, decide to trade anyhow, I'm going to lose more than I win. So I select my trade, I filter my trade. It is business. It is money that I'm making. I'm compounding it. So I'm not rushing. I'm not, no. I know what I'm doing. So that is what that is there. Then the last one, we say we accept to miss so many entries. So that is the last one. All the entries, you see, like I said already, you're going to be missing them. It's fine. You are not the owner of the chart. You are not even entitled to anything in the first place at all. I am just showing you, sharing with you. So the moment you get anything from the chart, be okay with that, and don't open yourself to get every price movement in the market. You're going to be missing so many entry. So you accept to that very, very, like, accept it full. If you don't accept that, you cannot trade. You cannot be profitable. If you want to make every move, if you want to get into every entry, no. So I hope that is taken now. The things that I'm sharing with you people here are the things I'm giving you people. I'm giving this to you people with the spirit of me giving something to my generation, because it is not only you people that will listen to these things that I'm saying right now. As I put it up on YouTube, even my generation will grow up to see this. Any of them that need it, because I know as people are growing up, they will get to know more about all of this, and this will be helpful to them in future. Even you, your own children, they might grow up to see all of this as well. So the information that I put up here, the things that I share with you here, they are so solid. and well loaded. Like me passing something, just like a father passing something to his son or daughter, or a brother passing something to his fellow brother, or a friend passing something to his best friend. That is the thing. I very soon now I want to see most of my students with me in school when I'm. Don't worry, there's something I'm planning. The moment we're able to trade together, we're going to be. It's going to be a very good cycle. It's going to be a very good cycle where we have a lot of funds. You see how making money together, how sweet it is when you're making money in group. So that's what I'm planning. I want to get all of you on deck, get you prepared so that when I'll be trading, that group right now is good. You people will see how that group will be lively next year. That group will no longer be. Some of you are even making the group. Even if I don't message on that group again, I have people right there already that can take that group on. They are doing some things now to trade and some of you that are trading right now, you people can be trading with each other there on the group. Keep it on. And I wisdom all of you are doing that already, and I'm happy. It means that with the 10 videos, you will be able to learn something and you are doing something in respect to those videos right now. You have gained something from them. So if you put in the same word, that's what you're going to get from this one. So in the next slide, I'm going to take you down to the top-down analysis. What I mean by top-down analysis, this is when I say that a very smart person, somebody like Wisdom and all of them that are copying my job, I mean, I'll call of you. Somebody like them. If these people go to central bank and see that they are printing money there, and they see the machine they are using to print the money and the paper and everything, they cite those things and they come house. They go and look for those materials by themselves, get them in their house and print the money. That is what I'm going to show you in that top-down analysis. It means that the things that I use to make money, I've shared so many of them with you. I've taught you. But how do you do the analysis now? If you want to make money, okay, money. You say that we are going to make $30 a month, right, for our food for a start. That is for a start. Okay. Then how do I start? How do I do my analysis? I've learned all these things you said from the number one video down to this 10th one, everything now. Where are we now? So if I want to trade now, how do I start? How if I want to trade now, how do I start? So that I can see price action just the way you're seeing is hey, how do I start my analysis? That is the top down that we're going into now. So let's go there. Okay, so now the part I'm going to take you to now, that is the top down analysis. Now, before I trade, anytime when I come on board, trade, all these things I've been doing in front of the people, before I come up to call that chart, before I come up to do anything, when I say this is my stop loss, this is what I'm looking to see, this is my take profit, I have a whole lot of things in place before I start doing all these things. So this is your step now, your analysis. Every single trading day when you want to trade, anytime you want to trade, you must always do this. This is the analysis you do. Any day I want to trade, that is the same thing I do. Before I trade, I have to do my analysis prior to that day. If I want to make money, if I know that okay, before I make money, I've already seen that money coming. I know that I'm going to make money so day. I'm going to make money tomorrow because I've seen the setup forming. I've I've done the analysis and I say, okay, when you get to this level, I'm going to do something. So the analysis, everything that I do, this is it right now. And all of you right now watching this, be a novice or you that has been trading and you're not profitable and you're learning things. This is my analysis where I say, okay, when you see central bank printing money in the bank and you know all the things you used to print that money, then you go home and you look for those things. Then you print the money by yourself. That is the same thing I'm going to do now. The things I used to make money are the things I want to expose to you now. I've taught you, I've given you everything right from the beginning of the video what this Mandela effect stands for. It stands for freedom. That's why I'm doing this for free. Like I said, I mean it. What I put up here, they are not free content. I decided to give it out for free, and I'm going to do it to the end. So this is the end of it. Now that I want to expose all my ingredients, everything that I used to cook my soup, they are the one I want to pass on to you now. I'm giving them to you right now. So what is the first thing I do if I want to trade? First of all, I need to know the economic calendar for that day. Like what the economic calendar is saying. The news that we have on that calendar, I need to know first. So how do I know that? That is when I visit my investing.com app. And that app, it is not on the phone, it is not on the system. So I am going to, I use Chrome to access all of them too. The investing. If you don't have it, the software on your phone, you can go to Chrome. So this is what we'll do. Let's go to Chrome now. Okay, this is my Chrome, my WhatsApp. Okay. So now we do investing.com, right? So you type investing.com, you see it there. Before I've been using it on my system, so you just see there as I type in investing.com economic calendar, you just come up, then you enter it, it's loading. So you see economic calendar here. You go under the economic calendar. It's loading. Once it comes up, you will see all the list of the names. Today is 12th December. Today is 30th December 2024. Time right now is 2:48 a.m. Nigerian time. You can see the time right here. So we are observing Monday already. So my internet is coming. The thing I want to show you here has not come up. I don't want network to take too much of this particular part. Okay, now you can see now there are some things here. You can see the today. You can see all of them here. This is your. You can set them here. Yesterday, today, tomorrow, this week. So I want to know what is going to happen this week. I want to study. I want to see the economic calendar, all the news they have this week. So I want to go to this week. And now on this place here, I've told you one. I've shown you how to set up this one already. So many things here I'm not interested in, so I want to filter it. You see the filter here, all these ones that I don't need, I have to take them out. I don't trade all these ones, so they are distraction to me. I don't want to see them on the calendar, so it's only one that I'm trading that I want to see. I don't want France, Eurozone, Germany, India. I don't want it. All this one, I don't do anything there. So this is not the news. This is not the regular news you hear. No, I'm looking for specific things. The currency that I'm trading, they are the one I'm paying attention to. So United States, United Kingdom, yeah, I want to get news from there. So Germany, Eurozone, I want to get news from there. So you see this thing here, this star that you can see, the importance of this news. I told you when I was setting up, we have that we have medium, low, and high. That is why high impact news event, medium impact news event, and low. What that means is when anybody see this 3 star, don't worry. I want to see now. I only need these two. This 3 star here. on when you're using the app, it will show like bull or something. Then that one, anyone you see three of them marked, it means that news it has a very high impact. It's going to show a high impact in price action when you go to the forex chart. Then this one has two, that is medium impact. Then this one here, it is just one, it is just a low impact. So I don't work with the low impact news like that. So I only work with this medium and high, which is this one. So I've filtered out. So let's go back now to, I'm done with that. So we can now go to the economic calendar. Now you can see the one they will show me. Let's go to this week. Now, the whole of this week, you can see Monday, December 30th, 2024, what we have. We have Chicago PMI, USD. You can see the impact is 3. You can see this one now, this star is not ticked, but this one here, the 3 of them are ticked. This one is only the 2 that are ticked. So this one, GBP here, is 2 star that is ticked. That is medium impact news event. So now, all I need to see here, I don't really waste too much time here. All I need to see is, I know the time. I already check the time of the news. The time of the news, 9:45, 10, all this news. The time I'm seeing here, you can, whatever time you set your own to, the time of this news event here, if you set that time to New York time or Nigerian time, it doesn't really matter, but that trading view time must be on New York. So the moment you know that New York time on trading view, then anytime you're seeing here, it is equal to your time in wherever you are right now, then you compare that time to what is going to happen on that chart at that time. So when I come here, the first step of my analysis, I will come and see the time for the week. I see all these news events, all of them. You can see the holiday that I'm talking about now. Tuesday, which is tomorrow, 31st December, you can see now. Holiday, Germany, New Year's Day. Holiday, United Kingdom. So you can see all of them here now. So these days we don't trade. All these holidays now, we can see most of these days. You can see the day Wednesday, January 1st, New Year, United States. We are not going to trade. So from this place, this is where you see the calendar of all the things that is going to happen to the currency you are trading. So everything I focus on when I come to this place, I see the news, I see the impact, I see the time. There are some news you don't trade. Now, you are going to see like you're going to see those news events that I listed under the rules not to trade. Any day you see them here, don't trade that day. Don't even trade ahead of them. Like CPI, non-farm payroll, they are not here on this calendar for the week. For this week, none of them are here, and non-farm payroll is not here. FMC is not here. CPI is not here. Rate announcement is not here. But the day when these news are available in this economic calendar, you will see them there to be released them. So you will know that social time is this one. So that is what it. So now I come here, I check that okay, so day you have this economic calendar. So I now decide for the week. I have seen all of them, right? Then the next step, once I finish this part, I see the economic calendar. If I know I'm going to trade tomorrow, I know that tomorrow, like today now is Monday. If I know that I'm going to trade today, I know that 9:45, 10 o'clock, there is something that is going to happen in the market. As I'm going to be trading, I already know that by that time something will happen in the market. So I don't really know. I don't want to know what they use. Like I don't want to know what this news event is all about. It is not my business to know what pending home sales is. I don't want to know what they. I don't know, and I don't want to know. The only thing I am concerned is smart money will use this information to do something on that chart. So it is what they will do with this news event that I am paying attention to. So what they will do with the news event, once they do that thing, I will see their footprint, I will see what they are doing, then I will go in them if it is okay by me. So that is what I use this music for. So this is the first step of the analysis. Then the second step, I go to the trading view. Once you come to trading view, The first place you start your analysis from is DXY, which is a dollar index right here. That's where you start your analysis from. So let's take it to monthly charts. You have to start your analysis from monthly. Now, I have so many beautiful things on my chart here, and I want to delete all of them now, so that I will start the analysis from scratch, so that you will see everything that I'm doing. Because this analysis, this particular analysis I'm doing now, you need to have it on your charts. You need to do everything that I'm doing here. You need to put it on your chart, because these are the things we'll be using next year. We'll be using this thing next year. All this line that I'm drawing, you can see this line now. I've had this thing on this chart for over how many months, and price is still respecting it. Anytime price changes, they still respecting it. So let me delete everything now. I want to do this analysis on monthly now. This is DXY. So anything you're doing on DXY here, first of all, I told you that if DXY is going up, this EU and GU must be going down. So I'm on a monthly chart now on DXY. So let's go to monthly chart on EU2. So if you want to do analysis, this is exactly the same thing you do. And everything that I'm going to draw here on this chart today, you will draw the same thing on your chart. So, and this analysis, you will be familiar with this top-down analysis, because next year, I'll be doing this kind of analysis every week. Before I trade, I will post it for you people to see. Then before you come to watch that analysis, you do your own first with what I've taught you already. So if you get the same thing like me, you're good. But if you don't have the same thing, there's no problem with that. You make your correction. You know that, oh, it's fine. Oh, I need this. Okay. That is how I learned my own back then. Before I go to what ICT, I will do my analysis with what I've learned from him already. Then when I do my analysis or and I go to watch him, if I see that, oh, we have the same thing, I'm done on ICT. I don't have anything to do with you again. I'm done. Thank you. So that is the same thing I'm doing for you. Once you get it, you start doing your shit too. The moment you know that you are getting the same thing with me, getting the same thing, getting the same thing, then put it into work, start your journey. So now, this is the EU now, monthly charts. Then let's go to GU now, GBP the monthly chart too. So let's go to monthly chart there. I'm going to delete everything now. That is, I want people to see how I'm doing this analysis right from scratch. There are some lines that I'm putting up here that you would already, I've not talked about those, the line. It's not everything I put up here that I've discussed. And now with the analysis that I'm going to do now, you will understand everything that I'm doing. So any day you're trading, anything you're doing, you will always do this analysis like this. So I'm deleting it. For the sake of what I'm going to do here, I will only do EU and DXY. I will do DXY and EU. I'm not even supposed to delete my chart on GBP because I will not do this one. I want to make this lecture coming to the end of it. I will use DXY and EU to do the analysis for you to see. Then you can do the same thing. You can take the same thing to GU. Use GU to do your own too, just the way I'm going to do EU and DXY. Because if I want to do three of them, it will take a very long time, right? So now this is DXY. When I come to monthly chart as a smart money trader, what do you think? First, you look for your PDRAs. As you come to this higher time frame PDRA, higher time frame when you're working, you look for your PDRA on this monthly chart. You have to find a PDRA on this monthly chart first. Then when you find a PDRA on this monthly chart, you mark all the PDRA you have on this monthly. So what have I seen in recent time here on the monthly chart? What can you see right now? I see a fair value gap. Where is the fair value gap? You can see right here. This is a fair value gap. So this is a fair value gap, monthly fair value gap. put M, so fair value gap on this monthly. It is a discount fair value gap because it is down. It is something that is used to send price up, so it's discount and it is a bullish one. This is a monthly fair value gap right here. So now you see this candle right here. All these three down candle right here, they are order block on the monthly level. So we are going to have it monthly order block, monthly OB, we'll have it there. So when we have that, this is what you can see right now on this monthly time frame. You can see now this is a fair value gap. This week and this week right here, it is a fair value gap. But this month, the candle is still forming. So when the candle is still forming, you don't try to call it, you don't try to assume that this is what it's going to be. No, you wait for this candle to finish forming before you finalize it. Though I was calling it like that day that this candle is going to form, it is because I've been trading with experience. So when fair value gap is forming and order block is forming, I can see it before it finish forming. But you have to wait for it because you are just coming. You don't know it. You have to wait, let it finish forming. But for the sake of this analysis, this is a fair value gap, and I want to mark it right now. So this is a fair value gap on a monthly fair value gap. So if you are doing analysis, when you come to this higher time frame period, you start it from higher time frame, which is monthly. Start it from here. Then what test you have? We have liquidities, which is this high. What can you see on this higher time frame right now? On this monthly, you have this high right here. This high is liquidity there. But this is not what we're looking for right now. We are not calling this high right now that price will go there. No, that is not what we're looking for yet. We want to know when we will get into the price. Next year when we start trading, or you are doing analysis now, so that anytime price get into something or price do something, you know what to do. So you can see this my favorite logo that I mark here from this monthly. You see this one that I mark here, see this other block. This is what I see now on this monthly chart. Right? Then look at this week and this one right here. It is a fair value gap. You can, if I want to take this out now, I don't want to draw too much in on this chart right now to make it too busy. I don't want to make the chart too busy, so I'm not going to draw this one here. The only thing I will do is this is a high of the fair value gap, the monthly. It is a monthly fair value gap, it is a high of the fair value gap. If I draw this fair value gap right now, like this, on this monthly level, this is the high of the fair value gap and this is the low. So now the only thing I'm going to mark right now, I will only mark the three area of the fair value gap, the midpoints of the fair value gap, which is the consequent encroachment of the gap, and the up of it. These are the things I will put up here. So I'm going to delete this one to make the chart neat. So this is the monthly. This one now is a bearish fair value gap. That is the premium fair value gap that send price lower. So it's going to be like this. Then this one now is going to be monthly fair value gap, consequence encroachment. So this CE now is consequence encroachment. Each consequence encroachment of something is a midpoint. So when I say consequence encroachment, it is the midpoint of the gap or the week or anything. So this is what this one is here. Let me change this one to the dots. Change this one to a different color. Should I give it a red color too? Yeah, let me be like that. So you can see it here now. This is what I have right here. So all these things that I'm doing here, I will lock them because I don't want them to be shifty. This analysis, once I finish this analysis, I'm going to leave it up till next year. Then when I come, I will see what price. Throughout the month of January, we are not going to be trading. We will look at what price we do in respect to this thing that I'm marking. So put attention, have the same thing on your chart, just the way I'm marking it. So now, how many PDRA do you have here on this monthly? 1, 2, 3, 4, 5. These are the 5 things that I mark out here. And you will see the power of this thing when I drop it to a lower time frame. A lower time frame is a one that is lower than monthly, which is weekly. So when I drop it to weekly, you see I'm going to refine them. So this is how you do analysis too. I have marked out the important things that would trade with the fair value gap and the order block. The 2 PDRA that I share with you people, which I told you that these are the things I myself use in my trading. These are the things I am doing. And you will see the power of this thing now. I have started the analysis. You can see it here on a monthly level now. So if I am to get into this trade to do anything according to what I have right here now, on this monthly chart, if I am waiting for it on this monthly chart, it will not come back there immediately for me to get in. So you will drop, you cannot wait for a whole month for you to trade. So you drop the weekly. Now you can see now, this is the weekly chart. Right? This is the weekly chart. So what can you see now on this weekly level? What can you see? I have seen something. What can you see? Now you're on weekly. You're on weekly. Now, this monthly fair value gap, it has another fair value gap on the monthly inside it. Can you see it? If you have seen it, very good. You have a smart eye, but if you have not seen it, this is it. You can see it now. Let's see right here. Let me give it a white color. Okay. So this is, I am doing my analysis right now in front of you. Hey, what I'm doing with you now is very, very, very expensive. For somebody to come up and show me his analysis like this. Even my first mentor did not do this for me. Right? But somebody who made me where I am right now did all this with me. That's why I'm doing this with you, so that you too can do it. That's how I was able to do it. So right now, you can see it now. So what else can we see on this weekly? We have a fair value gap, and we have a weekly order block. I told you what order block is. It is found in a discount level. A bullish fair value gap is found in the support. This is a support level. Anywhere, this thing that I'm marking here, this fair value gap and order block, these are the real support and resistance level. Anytime price get there, you see what happen. So what am I looking to see right here now? I have another PDRA here now weekly, which is the weekly order block. This one now, it is not a monthly order block, it is a weekly order block. Weekly order block, OB, weekly OB. Right? So this is it. Then what else can you see? What else can you see apart from this order block right here? If you have seen it, I've seen it fair value gap. If you have seen it, you have a smart eye, but you have not seen it. This is it. I hope you can see the fair value gap I'm talking about. See it here. You see this candle week and this week. Is that not a fair value gap? You put it up. You have two things right there. Weekly fair value gap and weekly order block at the same point. This level that I'm marking now, I'm not going to be trading with them right now, but you people can pay attention to them. You see what price will do when price get there. Only just watch how price react when it get there, because right now I'm not going to be trading with you people for the month of January. Once I take my rest after this lecture, I will rest. Then I will come up to read price action with you people when I take some rest for some days, right? Okay, so let me use should I use black? Okay, this one is fine. So I'm going to do it like this: weekly order blocks through fair value gap. These are two things right there. We call this one unicorn when you have two PDRAs at the same level. So when price get to this level, note how it reacts. You see what happen when price take to this level. You see what happen. So you have that. This is what we have from weekly chart right now. So our analysis now from weekly is saying that from monthly is saying that price need to come to this level on a monthly level. This is a fair value gap left by smart money, and you know what I talk about smart fair value gap. So price will come back to this level. We don't really know when it's going to come there. We don't know, and we don't need to know. Only what we know is when price is closing, is trading around it. When it's closed there, that's now we'll get approach. We'll approach the chart, just like this one now. This one, when price get here, you have to be close to the chart to see what price is going to do there. There are some things price will do there that I will trade, but I'm not going to trade because of the rule, right? So when if price trade to this point, there are some point where it will violate this other block, but before that, this other block will react first because this is a monthly PDRE and it's very very powerful. Price will definitely come here. Price will definitely come here, but we don't know when it will happen, and you don't even need to know. All you need to know is when it's trading around there, you have to be active. So you can see now this is the analysis from weekly chart on DXY. That is what I do. Then we take it to a daily chart. Now, what can you see on a daily? Which PDRA can you see? What PDRA? Because you have to mark all your PDRAs from every time frame, from monthly down to 5 minutes chart where I make my execution. That you were seeing that day now. This is how I started it. I have to do it from monthly down. So now, what can you see right now? Have you seen any PDRA on a daily level? Yes, I've seen something. If you have not seen, that is why I said I am the eagle eye, the demo master. You will see what we're going to do on that demo next year. This is the order block on a daily order block. So all these things I told you that every time frame has PDRA, right? So you can see now this is a daily OB. Then what else can you see? You have a smart eye. I see another fair value gap on a daily. You will see every time fair value gap, order block, you see their power next year. And now you can start right now as I'm doing all these things. As I'm doing all these things right now, you already once you have this thing on your chart, when price trade there, you will see what happen. You see what happen. Okay. So daily fair value gap. You know when I put plus, that is a bullish one. So what is the chart telling you right now? What is the chart telling you? From monthly is bullish, weekly is bullish, daily is still bullish because all the PDRA that we are seeing right now, they are bullish PDRA. They are PDRAs, they are discount PDRA that send price up. These are the things we are seeing right now. So if price return to any PDRA that send price up, it means that PDRA need to send price up again. And once you get there, I will show you how I'm going to take this down to 15 to 5 minutes chart, how I make my entry, because I'm taking this down to my entry point. Now, I've seen other block on a daily, I've seen, and now look at one sweet part. This other block, on a daily. Now it is found inside a monthly order block. You know the order block will mark on monthly. Look at it here. This order block here on monthly. All these three dark consecutive candles, they are order block on a monthly level, and you can see now another block is found there on a daily. And I said order block, a bullish order block, it is a down close candle that is found in a support level. This is a support. This is a support. Anything PDRA you see on the monthly level, weekly, daily, they are support. Then the one you see on the up, they are resistance, which is premium. Then this one is discount. So now this is a daily chart. I've seen my PDRA here. What next do I wait for? So on this daily chart now, the only thing I'm waiting for with the level of my analysis that I just did, as I'm doing it now, it looks very simple to you, right? And some of you that have not been following up, it's going to be very difficult to you. What I just did. Then you just have to revolve on them. So the only thing I'm waiting for right now is I will take it to, on this daily, I will not trade here. I will not engage. I won't do anything when price is trading here until when it come into this place. When it come into this place, that is when I will now look to see what smart money will do from there. So I will now take it down to a lower time frame, which is 4 hours chart, for me to trade now. Right now, if you want to be a position trader, at the end of the day, once I finish this analysis, I will tell you what you do, what type of trading you want to do. At the end of this top-down analysis, I will let you know. So now, with what I'm doing here now, I will go to a 4 hours chart, drop it down to a 4 hours chart to here, because I've marked out my PDRA on each time frame. You need to see a PDRA there, and not every level. It's not every level. Now, as I mark all these things now, the only way I'm going to engage price, it is when price trade to where I mark. If it's trading any other place that I not mark from a higher time frame, I'm not going to engage. You can see all this level when it's trade. If it comes here, all these places, I will not do anything until it comes here, or here, or here. All these places, these are the places I will engage. These are my key zones. This is where I shoot. So now on 4 hour, I've not seen anything here for me to engage. I'm not going to use any 4 hour order block or fair value gap to get entry or to do anything here. I wait for mine. It is when it gets to a high time frame PDRA. Look at when I say making your end meet. What did I say? I said we are only going to engage price when it trades to a high time frame PDRA. So where are the high time frame PDRA now that I say? Monthly, weekly, daily. And I've marked out them for you. I've marked out from monthly, from weekly, and from daily. So let's take it down to 1 hour now. If I'm going to see anything, no, I'm still not going to do anything on this 1 hour. The only thing I can see on 1 hour right now is their liquidities. So you have to note those liquidities. You see this equal relative equal high right here. Because this liquidity, when you see all these PDI that I'm marking now, you need to mark out liquidity. Like for monthly now, I wanted to mark out that high on a monthly level, but we are not working with that high yet. We are not, market has not traded close to that high yet, so we are not doing anything there yet. Let's do the recent things that are here. This is a previous week. What I say previous week high buy side liquidity. This thing I put up here, this is a full meaning. Let me write it. This P stand for previous, this Y stand for week, this H stand for high, this B stand for buy, this S stand for side, then this L stand for liquidity. So I say previous week high buy side liquidity. So that is what that means there. Because of time, we don't, most of the thing we do it in abbreviation. So that is the same thing right there. So you see this level. So what I am going to do, what I'm looking to see here now, this is a 1 hour chart. So if I am to trade with all the things I've marked out for my weekly, monthly, daily, everything I've seen, if I am to trade here right now, this is what I'm going to do. These charts here, I am going to do it like this. If I am to trade right here now, I'm going to trade right here now. When you trade into here, this is what I'm going to do. Then this is what I'm going to do. Right? If I am here on this chart, this is what I'm looking to see. But what did I say? We are not trading right now because I'm just doing this analysis down for you people. So what I have here, either when it trade any of these two high, that is what I'm targeting. If you trade here, I'll take profit. If you trade here, I'll take profit. It must not get there before I take profit, just like everything that I've taught you people earlier. So this is what I'm looking to see. Then what do you do when price get here? Do you just, because you just trade here now, you don't buy it? No, you wait for confirmation, and that is what I'm going to drop it down for a lower time frame for you to see. So these things now I can still log them so that they will not move. Let me change the colors. Change color to do like this. Change color to this one. So let me log them, because this analysis I'm doing now till next year. So now, because I said when he get here I will trade, does it mean that once he enter there I will get him? No. Let's take it to 15 minutes charts. He can lose this level and come here, but when he get here, if they want to buy from there, because it is their period, this is their footprint. There's a weekly order block there, there's a weekly fair value gap that they left, and when they get there, I will see what they are going to do with it. So when price trade there, let's go down to 5 minutes chart now, where we are here for this our analysis. When price trades there, what I'm looking to see is once they give me that thing, I will get it, which is what I said. Time. What time? If you trade to this point right now, what time? You have to know the time. Is it in your trading session? If it is not trading in your trading session, you have no business to do there. You leave it. When it is that your trading session, you will see what will happen. If you are gambling when it is not time, you see what smart money will use it to do. They will use it as liquidities when it is not time. So you have to wait for the time. So at that time, when you wait for the time, then what is happening at that time? Is price showing willingness to go up, or is not respecting this thing? It's going down. If it is going down, leave it. You have to wait for price to show willingness to go up. How do you wait for that? Now this is what you wait to see. This is what you wait to see. Now this level, if I am to trade here now, when price trade here, if smart money gets here and I see something like this, I'm going to remove this now and change it to a normal line. Let it be a normal line now, because I want to tell you people on this 5 minutes chart now, because I said how I get it down to my execution, which is my entry point. If price trade here now, this is what I'm looking to see. Maybe there will be down candle. No, let me draw it out like this for you people. Let me use this. maybe when price trade here down should be black, right? Let's use black. Why is this giving me? So let's say that this is down candle, trade like this, trade like this, into it like this. Then I have another up candle here. And change the color to this. Once I have this like this, then it drop another one here. So then and now started running up. That is the willingness for price now to go up like this. Another candle, another one. So when he's doing this here now, if you get here, this is what you need to wait for this. It must not deliver to you exactly like this. But when I'm reading price action, when these things are forming, I will see how they are forming. I will see what they are doing. So let's say that maybe there is a week here that will create a fair value gap. They might not give you a fair value gap. They might not. They will only use. They might use only order block, right? They might not give you a fair value gap. Sometimes it will deliver with only order block. Sometimes they will come together with order block with fair value gap. I hope people see what I'm doing here. I'm trying to get the week. I'm mapping out, I'm drawing out some things right now for people to see. Like when it trade day, what I will do. Because I am not going to be here live to trade with you people when you get there because it's going to fall inside our months we use for intel collection, where we use to get information, which is January, where we don't trade. So let's say that now this one now we're going to be an order block here. A 5 minutes order block. This 5 minutes. That is what I was trading that day when I say 5 minutes. So I have to get it down to this point before I get in. If you want just my live trade, you will see that I have those things on 5 minutes like this before I trade. Then you're going to have a fair value gap here like this. So that fair value gap is going to be like this. I'm just giving you an illustration now. If I am to trade here with the model that I've showed you people, all the things I've shared with you. So let me use it to I hope this one is okay. Yeah. So now let's say that this is this consequence encroachment of that week from weekly now. I will delete it. I will delete it because price has traded there several times and it's sometimes when I'm trading I don't like to put too many things that would distract me, and you people right now will not really, I don't want people to be distracted with so many things on the chart. So let me delete this one. So this one now will be a 5 minutes fair value gap for me. This one will be a 5 minutes fair value gap for me. This is power I'm showing you, this very part. Then once you now trade back, once you trade back into this level, it can reach the other block. It must not reach it, but where we are focusing is once you get into that fair value gap, we will get in, right? So let's say that this is going to be like this, right? So it's going to be like this. So now we can say that this is our entry, right? Then our stop loss is going to be here. This one right here is going to be our SL. This is DXY. We don't trade DXY. We only use it for confirmation. We use it for, this is what you do, and you must find out that DXY must go up first before you go to EU to see EU will go down. Then when I'm going to do my analysis on EU, you see what I will do there too. So it's going to be like this now. The stop loss will be below this other block right here, like this. Then the first take profit will be here. That is what I showed you in that lecture, right? That is TP1. You must do this. Then I told you that initially that this is where I'm going to be. If I see a trader, I will take it from here, right? I will take profit here, take profit here. And I told you people that you must not get there before you start taking money. As you are working, start paying yourself um, banking money into your account. It is that one that get into your account that is your own, right? So you can see now, this is a 5 minute chart. This thing I just shared here. Already you have seen so many of them in just my live trade. And you see them over and over and over again next year. So if I am to trade now, with the analysis I just did from monthly down here, is what I will do, right? So let's go to EU now to do the same analysis. So we are going to do opposite direction on the analysis right now. This one will do it upside. So I'm going to do downside now, which is EU, because we say that anything you see on DXY here, we will see opposite of it on EU and GU. All other foreign currencies, and we must start our analysis from DXY. So let's go to EU now to do our analysis on the monthly chart. Okay, this is EU now on monthly, just like we did DXY. And anything you see on DXY, you will see the opposite side of it on this foreign currency. That's what you should be seeing every time. Look at this up, this three up consecutive candle right here on monthly. There is a fair value gap right there on monthly. This is it. Look at it here. But they have been trading there for several times. So I'm not marking it right now. When I get to weekly, there's something I'm going to mark there on weekly. So now the opposite side. Now let me go back to DXY, to the monthly chart. You can see this down consecutive candle right here, which is the other block. You can see them here. See the EU now is up, which is the other block. So now we're going to mark this one. Now this one is bearish other block. Now it's not bullish. It's the DXY that has bullish one. What's wrong with my network? Let me refresh this chart. Let me reload it. We're getting down to the end of our lecture. Wow, it's been a great journey. So this is a bearish other block now on this side. From monthly level, this is EU. So let me give it this red color. Monthly OB. Unlock it. There you can see the same fair value gap that we have on DXY. DXY fair value gap was bullish one, so this one is bearish one, like I said. So let me give it color. monthly fair value gap. So you can see all these things I have here now. As I'm doing the analysis, when you watch me all like this, then you come back to the video and do your own like that. Have it. So that when I'm talking next thing, when I'm training with this thing I'm putting here right now, I'm not going to delete them. These are the things I will use to trade next day. Because I will next day you will see what price will do when you trade to this level next day. So I've seen something here now. This is the premium discount now, right? A premium PRA, I mean. Then look at Dixie now. See the fair value gap on Dixie. See this one, other block, its own. See this one has its own to send price down. So what else can I see on this monthly chart as I'm doing my analysis now as a smart one when I'm looking at price? What else can I see on the downside? I've seen something on the upside. Then what can I see on the downside? Because I have some things on the upside here on Dixie, right here, right? Then this one now, I have a bullish fair value gap, which is a discount. I hope people can see it. Look at it here, this week, this candle week, and this one right here. I deleted it before because I want to put it back. I want you to see how I'm doing the analysis from the beginning. That's why I deleted it and it's back now. So this one we are going to use it like this. So it's going to be monthly fair value gap. You know this one I put plus. It's not minus again because it's bullish one. It's something that will send price up. So now on this monthly chart, what am I expecting to see? I'm expecting price. Now, this is a discount. What smartphone, what do they do when it is doing a discount? They come here, they take to premium and drop. Then Dixie too. That run that Dixie will take up, one will drop this one to a lower time frame, we'll see what is going to happen here. So now, this is what we have seen from monthly. We have a fair value gap, we have other block. This is a discount fair value gap, which is a bullish one. Then this is a premium fair value gap, which is a bearish one, the one that sent price down. You go back to the other block and fair value gap lecture, you see what I discussed there. So you can see the analysis. This is how I do it. Then I will drop it to the weekly chart. Once I have all these things like this now. Then once I go to the weekly chart, I will look at what can I see on weekly. You have to look at it too. Okay, where are my weekly PDRAs? I found my monthly PDRAs now. So where are my weekly? Now, what can you see right now on weekly? All these places. This is an order block on a weekly level, but this monthly fair value gap is still covered by it. It will take a price. We are not working here yet. This is where we're working. So let's come here. You can see what else can you see here? I've seen two things, two different things right there. I don't know if your eyes is smart enough to see that. The eagle eye has seen something. What can you see? I've seen two fair value gap on a weekly level. Look at it right here. See this week, this candle week here. And see this candle week, and this one is a fair value gap. Look at it here. This candle week, and this one is another fair value gap on a weekly level. So now, what do I do now? I don't want to make this chart too dirty, right? So what I do is when I see a fair value gap that join together like this in a level like this is a monthly fair value gap. Then the weekly fair value gap is found inside it, just like when we found it on Dixie. Because when we were doing Dixie 2, we discovered that we had another fair value gap here inside the monthly one. So look at this one too. The zone is here. See, look at the zone. I'll give it red color. Give it red color. Not that more. Okay, yeah. So this one now, let me take out this. So I don't really, I can still write next the weekly level graph. And put it white color. Then this one here and this one. I don't want to mark this one again to make the chart too dirty, but I know what is there already. I can see it because this monthly one has covered it. So if I drop it down to a lower time frame, maybe like daily, I will now see the other period that I have on daily. So now what do I do next? I drop it to a daily chart. Now this is the daily chart. The daily chart. So this daily chart now, we are going to do this. You can see now what can you see on the daily level again? I've seen something. Eagle eye has seen something. What else can you see? I've seen something. What else can you see? Look at it right here. This is the daily fair value graph. Now inside this monthly fair value graph. So I'm going to put this one white. That is the reason why you see so many things on my chart when I'm trading. People don't understand the meaning. Now you know. Now you know. When you see some things on my chart, you will not be asking you. They will not be strange to you again. You will have these things on your chart right now. As I'm drawing them, you have all these things on your chart. Put them. So these are the things we'll be trading with. These are the tools. It is just like me now giving you a gun as a soldier, and you don't know how to shoot the gun. And I'm showing you this is how you shoot it, this is how you do it, this is how you cock the gun, this is how you put everything. So these are the things I'm showing you right now. So this is the daily one here. Let me I can name it daily. So let me put this one black. I see the name is going to reflect here. So inside the monthly one, I have a weekly, I have a daily one. So now this one is like this, and leave it like this. So what next? You can see there's I've seen something else. What else can any of you see in this on this chart? Now look at this is other block. You know, on Dixie, we had other block on a daily, right? Anything you see on Dixie, if you don't see it on EU or on those foreign currencies, then you have to see it. You have to see it. If I'm seeing something here on this side and I'm not seeing it on Dixie, I will not trust it. It must come from Dixie first. It is Dixie that gives birth to all of them. It originates from Dixie. DXY, everything originates. So look at the other block here. So this one now, this is the up close candle. That's Spanish resistance. That is a bearish other block. Now all these up close, these three up consecutive close candle, they are other block. So now I'm putting it here. Let me name it daily order block. Daily order block. So this is I'm going to lock it. All this my other line I will lock them so that when I'm working they will not be shifting because this level they are very 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 sensitive. They're very very vital. So I don't want anything to shift. I don't want anything to move. So I always lock them. Now we have this. There are some other things I'm looking at this chart right now. The ones I want you to see, the one I want to work with, they are the ones we are doing. It's not everything that you see in price action that you are paying attention to. The ones that we know that these are the ones who can monetize, these are the ones that give us what we're looking for, that is the one we do. So you can see that this is the daily order block right here. So when price trade there, we don't just get in, we need to see what smart money will do at that level first. So what do you do next? You drop it to 4 hour star, which is the lower time frame, the one that is next to daily that we use here. So Now on file, what do you have? You don't really have anything right here to, apart from this other block here. Our attention here is when price get here. We need to see what they will do there. We're not going to be trading. I'm not going to be on the chart. I'm just doing the analysis. When I come back, if price respects it, I'm going to see it. If price does not respect it, I will see it. Right? So take it down to 1 hour. See it? So what are we looking at? What are we looking at? Now stay right here. Then this 1 hour now, we have seen liquidities above and below the current price. This is the current price right now. This is liquidities. This is liquidity. There are some people stop loss here because when this market, anywhere market is going, people are following it. People are buying. People are anywhere market is going, people are following it. So this run down, people are in stop loss here. This run up, people are in stop loss here. They don't know when market. They don't. So many people don't know when market runs to a specific level, and they don't know when the market will leave that place. They don't know how long the market will go. Some people are just trading blindly, thinking that price will keep running in that direction. No. So what we note here now, we note our liquidities here. We always note these liquidities in price because these are the things we are trading. These are the things we are looking for. These are the money we are looking for. Smart money is looking for this money. Aggregate is seeking for these liquidities. We too are seeking for them. So what do we have? Here now is going to be previous low, previous week low, sell side liquidity. You know, on Dixie side, it is buy side liquidity. This one is sell side liquidity. So CP previous week low, L stand for low, then SS means sell side, L means liquidity. So that is it there. I have that. Then you can see it is equal low. They are previous week. So I want to log this one too. Then look at the buy side on this side now. This one now is buy side now. It is still a previous week high, buy side liquidity. Change color. So now, what do we do? What I'm showing you here, you see Dixie. Let's take Dixie to 1 hour chart and see the same thing. You can see the reason why I did not mark the set side on Dixie here. The reason why I did not mark the set side on Dixie, it is because I don't want too much things to show here, like too much of drawing and line. No. If not, this is the set side on Dixie, like I have the both side here, buy side and sell side. They need to engage one side of this liquidity first. Just like I told people, when smart money take one side of it, then we wait for them to run the other side. So now, this one too. Maybe let me just put this one on Dixie. I hope you know that the chart is not too bad. Okay. Yeah, let me just put it there. Previous week low, sell side liquidity on Dixie. So I will lock it. All these things that I put up here. Now I log this. Let me log this because I don't want any of them to come back to see this chart next year. So now, what do we do here now on this 1 hour chart? We wait for smart money to do any of these two things. Now, if smart money come in price right now, they come into price action and they want to trade. The first thing they look at is where are the liquidities right now. People follow this run down, and when this market retreats, they were short, thinking that the market will keep going down. Then the market came back. Some people stop loss were here, they take them out. Then this one here too now, market retrace down, it's going up. It has formed equal low, right? Equal high right here. These are relative equal high. This is equal low. These two things right here, they are liquidities in the market. So smart money need to engage one of them. So once they engage one of it, we will now engage them. So let's take it to lower time frame PDRA to see what they're going to do. Lower time frame PDRA, which is 15 minutes now, if we're going to see any PDRA to work with. Now you can see this equal high that I'm talking about here. These are the equal high. See them, it's relative high now. There are money there. So this one too here. This is the relative equal load. There are money there. Now what we're going to do is, you see, like what I explained to you people on Dixie, that when Dixie trade into this place, these are the things I'm looking to see for me to engage on the upside, right? Now let me take this thing to the other side. I want to copy them now to, because I want to show you the opposite side of it on EU. This thing, I want to take all of them out. Okay, let me just get a new one here. What I'm trying to say here is this 15 minutes chart, right? So our focus, this is other block. This is a daily order block. Sometime as it is here now, let's check a 1 hour something here. This is going to be a 1 hour order block. This kind of right here. But I'm not going to work with it. I'm not going to work with it, right? I'll wait to see when Dixie is trading inside this place. My focus is when Dixie get to this level. At that point, I will ask myself, okay, where is EU trading? The other pair that I want to trade now, where is it trading? Is it trading at this resistance? If Dixie is trading as support, I want to see EU trading at resistance. That is, if Dixie is trading at discount, I want to see EU trading as premium. So that I will sell, then buy Dixie. We don't trade Dixie, but smart money, that is what everything. Dixie is the one that is moving all of them, right? The dollar index. So now what I'm looking to see here is just like the same thing I marked out here. It can come like this. So if they, now what I have here, once they take one side of it, we'll go for another one. Okay. Now, this is what we're looking to see right here. This is what we're looking to see. If they take this high, I say that we will only engage when they engage liquidities into a higher time frame PDRA. A higher time frame PDRA is order block. Okay. So when they take this high now into it, did we just buy it or did we just sell it? No. You have to wait for something. You have to wait for confirmation. So when you get there, what am I looking to see? Like what I put up there before. It's gonna be like this one already. The up candle. Let's say that okay. Let's say that okay. We trade from where it is right now. This is the current price. Let's say that we trade from there. Trade from there to this point. Now, this is not what I'm doing. I change the pair now. EUR, USD. It's been a long lecture. Like I say, this thing I've been on me. We're getting to the end of it today. So now, here now, then we'll have this as a background. Like this. So let me drop this like this. The next will be like this. Like here now, then another one will now be an up candle into the one now. It must not really deliver like this, but when price is delivering, if I'm in price that time, I'll the way I'm drawing out for you people now, this is how it's going to be if they want to give you the setup. Because they might not deliver with other blocks, they might not deliver with the favor, they can deliver with one of them. So now, when you have this now, then this one become it becomes that move like this. Let me change the color to black. So it's gonna be like this. It's gonna be like this. So it's gonna be like this. Now the wick, if it's gonna give us a fair value gap, it's gonna be like this. It's gonna be like this. It's gonna be like this. You know how it's gonna be ready, just like the way I showed you on Dixie. So let's say that this is gonna be a fair value gap now. Let me take a bit. The drawing is not really proper there, but I'm just showing you. I've already given you a clear picture of fair value gap and another block already in the lecture. And this one I'm doing right here now, it is just show you what, because I said I'm bringing this down to the entry for you people. So now we are going to be about 5 minutes fair value gap, 5 minutes gap plus other block, because there's another block there. So it's a 5 minutes other block there, 5 minutes other block right there. You can see that five 5 minutes 5 minutes will be stroke fair value gap. And use, yeah, then I'll delete this one inside. Let me take this one out. So I know that I have a fair value gap with other block right there. So what do you do when price now, uh I don't like this thing that is not showing well. I want it to look nice. So I can see, I hope people can see it. Let me just be like that. Yeah, it's better like this. So once price now, so let's say entry, nice entry. Let me use white color. So it's going to be like this, where, so once you get in there, what do we do? We now take it to run it down to this place. This is our TP1. I'll say that we always take TP from this first leg, no matter how many pins it is, no matter how little it is, take it there, TP1, take it there. Once you run down to this leg, from there, we're going to do this. So you can see what I have here now. If market trade to this point, now we say we're going to take this low, right? We'll attack this low if they do this thing. Now, we must not wait for it till you get it before we take profit. That's why you take one here. When you get here, you can take another one. Right? So you can see it there. That's what it is right there. So as I put up here, the price might not really deliver exactly like this. It can come and take this one first before it come up. But if I am here to trade, this is how I'm going to wait patiently to wait for price to see what they will do there before I get in. So I hope you all understand this. So yeah, the journey, what I told you that I'm bringing for you people, what I put up here for you people today, the end of this lecture now, from the beginning of the video and everything that was done, I told you that I'm bringing the power to you people, and what I put up here already, I've done them. You can find them when you use my live education, and we're going to do more of this thing next year. Then my advice to all of you right now, I wish you a prosperous new year, and this year 2025, mark it for yourself. Whoever that is listening to this, you're following me, being you my student right here in school, or you're watching this outside the school, these things I put up here that like I said from the beginning, that there are things that you have never heard, there are things you've never seen. And if you have been trading for long and you are not profitable and you're here listening today, like I said from the beginning, you have to purge everything you have been doing before and use this concept for a period of time and see how profitable you are using just what I put up here in these 10 videos. You are going to get the same mindset. Don't forget anything I discussed in that first video, life after school. I said I'm afraid we'll talk about so many things there. So whatever you are acting in this industry, always remember what we discussed in that first video. Remember it. Because that is the power you are coming to get. And when you get the power, remember why you get it. And that is the reason why I decided to share this with you people for free. Because I want to bring that freedom to all of you. This is my offer. Right? Some of you don't really know me very well like that in school, but some of you that knows me, I'm a unionist. I'm somebody who love to unite with students. I love I don't joke with my social life. I make friends, and when I came to the school, I started union from 100 level and relating with my fellow student. I see that the union is not interesting. Like, what are we doing? I ask myself, like, what are we doing? How can we make this better for ourselves? We are students. Our parents send us to school, and when we come to school, they expect you to come up with something tangible. It is not just the certificate. You come to the school, you build relationship with people, you make friends, good friends that will influence you positively. So that when you pass off of the school, these are the people you do business with. So this cycle that I start with you here, what I started with you here, this is a long-term journey with you people. We're still going to be doing a lot of shit when we pass out from this school. And this is how we started. This is what it calls student union. It is because they don't make us to understand it, so the union is not interesting for anybody to participate. And I want to make it interesting. This is how I started my own. That's what's okay. What can I offer to my fellow students? I'm running a union and we are doing that. Okay, what is the union? It is not about running up and down chasing politicians. No. What are you doing in the school? How are you uniting together in the school? How are you people helping yourself? Just the way we organize tutorial to teach ourselves in school. That is why it's okay. One day, what can you offer to your people? It's okay. I have this. Right now, all of you that are listening to this, my friends that are very close to me, they know that I need this fucking money. To charge you people to pay me for this, I need the money. They know. All my friends, my close relatives, they know that I'm fucking in need of this money. If I ask you people to pay me right now, I'm in need of this. But that is not what I'm here for. Already I can make my feeding, I can do everything I want to do for myself right now with this chat. So I want to share that power with people. That's why I came up with this. And when I started my journey back then, I said to myself, like I said to people, I told you that I've been given admission before. I was given admission, and I said to myself that I knew what my mom passed through to sponsor me through secondary school, and I said I don't want to put her through that stress again. I want to do everything by myself. So I said before I go to university, I must have the capacity to run everything by myself, my bills, my school fees, my rent, my feeding and everything. If I don't have the capacity to run it, then I will not come. That's why I declined the admission that was given to me back then, 2018. Then my cousin that will finish secondary school together, he got admission into BSU and he's now a graduate. But guess what? He's here right now learning this shit, bro. So I said that to myself and I did it. So what am I going to tell you here? What do I want to tell people? You cast forth a vision, pursue the goal and overtake it. Whatever you want to do in your life, put it into work. There is nothing you want to do right now that you don't have. You have the capacity. God has given you the capacity to do everything you need. So I hope you all enjoy the lecture. This is what I've been working through all this while to make sure I put this up for you people so that next year I'll start working with my people. I'm not going to be trading alone. So I'm making money. I want to see my cycle making money too. So that's why I said, okay, I come up with this to share with you people. Some of you that have been following this from the beginning and you your phones are having issues. That's why I put this up on YouTube. Whenever your device are okay, you can come up and start your journey and do whatever you want to do. Then those of you that are listening to this and you are not on my free mentorship group and you may want to ask me questions, you want to say anything. I told you that I'm going to drop my number at the end of the video, right? So at the end of the lecture. Yeah. So some of you, I realize that it's not only my students that are watching this, as some people are watching. So the email, the Mandela FX at gmail.com, I pay attention to it very well. Any email that goes in there, I will attend to it. So anything you want to verify, if you're having issue with any of this and you want to talk to me, those of you that my students, some of them don't really like to interact with the group because I don't know, but we are all like that anyway. So those of you like that you have not sent anything, no problem. When I started, I said I want to be attending to all of you in group so that whatever Mr. E is passing through, once I treat it, Mr. B will learn from that as well. That is why I said I don't want to be attending to people on DM one after the other. Right? But those of you that want that private attention, you take the number. Those of you that like that private attention, you want me to talk to you privately, you want to talk to me privately when you're having issue on the chat or whatever you want to confirm, you want that private attention, so that's the number. And please let it be a WhatsApp call and WhatsApp message only. Thank you, and I wish you people a prosperous new year. And next year you will see what we're gonna do. I hope to see all of you next year while we do this shit on the chat together. So I wish you people a preferred music. It is my pleasure to come to the end of this lecture today. Just like I said, that I'm not going to do anything more than 10 videos for lecture on this YouTube channel. So this is the Bible. This lecture, it is the trading Bible, and the 9 videos that are on the channel already give birth to this one. So the power that I say, the freedom, what Mandela FX stand for, this is it. So you put into work and see what you do for yourself with it. Okay, then before we go, like I told people that I'm going to be doing these things that I give you people, I'm not just passing them to you for you people to go and struggle with them. These are the things that I'm going to be on this chart next year. I'm working on that to go live. Those my live execution that I did. I recorded them when I was trading and I posted it for people to see. Next year is not going to be like that. I will, once I come on chat to trade, I will go live. Then you're notified by YouTube. So if you're so much interested in this and you want to follow us everything that we'll be doing next year, then you subscribe to the channel as usual. You click on the bell notification icon so that whenever I drop something, you'll be notified. Even though if I don't post the link on the group, and those of you that are watching that are not on the group yet, you once I come online, these things I'm going to use them over and over and over and over and over again. So you'll be notified as usual for us to um, play the game in the field. Like I've showed to you people. So that is it. Those of you that are doing already with the 9 videos, the things that I've taught you people there is marvelous. Like that's amazing. I'm happy to see all of you right now that are trading on the group. I'm so happy. And you people should keep it up. The things I put up here, if you add it to it up, you see what you get next year. So I'll see you all next year as we're going to be trading. It's going to be live here on YouTube. Majority of the things we'll be doing may not be on that group, but we'll be trading live so that everybody will be seeing what I'm doing from the chart. It is not like I give you something and I'm using another thing. No, exactly what I use, it is what I share with you here. So you're going to be seeing it when I'm going to be making money with them next year with all of everything, right? So stay safe and enjoy your Christmas. You have done Christmas already. I didn't celebrate it. I was working, and New Year I hope to celebrate that with you people, and I hope to see you all of you all next year when we resume back to school and we'll start our real shit. So stay safe and I wish you good study till I see you next year. Stay safe.